up with this idea, and maybe you could also tell a little bit about the company itself for those who maybe haven't heard about it.
So very quickly, Printful is a print-on-demand dropshipping service. We print T-shirts and other print products for online stores, customers all over the world, and customers who don't want to buy their own printers and T-shirts, they outsource all that to Printful, and will fulfill those products in their name, and have been doing that for 10 years. So the company started, 10 years ago, but actually the journey starts even before then. Like from an early age, I was interested in technology, and when I was 18, I joined what I believed was the most exciting companies in Latvia, so startups. So I started working in startups at 18 at Drauginger, which is still a parent company of Printful. And we actually iterated and tried many startup ideas before arriving at Printful. Over the course of 19 years, we have launched 100 business ideas. About 10 of them actually still remain as businesses, and only one became a unicorn. So that's statistics. And so if you really want to make it big, you have to try a lot of times and fail a lot of times. Out of the 6 businesses that I started working within a group, 2 of them only remain. So 3. Printful at this time and Starter Vitamins. And what led us to the Printful was our own online e-commerce store, Starter Vitamins, where we printed our in-house, our own stuff, and we felt that if we have this need for a good print-on-demand printer ourselves as an online store, Starter Vitamins, where we sold posters, there should be 100,000 or more out there, stores like us. So actually, a lot of the best ideas in the group came of understanding the problem and fixing our own needs. So we created the Printful so other people can create stores like Starter Vitamins. And that inspired us to launch it in 2013. And when we launched it, we sent an email to the customers of Starter Vitamins. And the kind of rest is history. We saw an immediate product market fit. And the first month's revenue was $800 and $1,600 in the next month. And I guess that's another lesson. Like, if you start a company, figure out like what's going to be the business model, how you're going to charge your customers, and ideally you charge your customers from day one, and you start have revenue coming in very early on.
Great, thank you. And it's not the first time that we hear that not the first idea is usually successful. Like Testanet founders counted more than 30 ideas before the NordVPN, and I know that TransferGo also started in 2013, and I've never heard your story. Was it the first idea?
Well, first of all, it's great to be back, and it's incredible to see queues outside of this building. I remember when we started 2012, there was a small group of enthusiasts. Many of them I still actually see here today, so this event is very special, and it's great to be here. Our story started in September 18th, 4 a.m. 2012. This is where we launched our product. We raised 50K from Practica Capital, who I think is also here. And yeah, that was a different time and different world, and time flies. And now, like this month, we're celebrating our 11th birthday.
Congrats on that.
So yeah, and I can see, thank you. So, and like, I remember when we were doing our initial business plans, and this is what my co-founder said, which I think is quite true. We always overestimate what we can do in the short term. So we're always behind the short-term plan, but we had no idea what we can do in the long term. And I would say the first 3 years was a grind, undercapitalized, competing against guys that have 10 times more money, and we needed capital because we didn't get money up front. Unlike many other bigger companies in Lithuania, they get a subscription, they get money up front, and then they serve the customer. We always have to pay in advance for every single customer, and competing in probably one of the most competitive markets in Europe, which was cross-border payments, remittances. You know many of our competitors probably as well as us. So, but we survived the first 3 years, and then after 2016, the story really took off, and between then and now, we probably grew 20 times. So years, they maybe speak about quite a long, decades, a long time, but none of that is linear. So like the last 3 years were multiple times more growth, more progress than the previous 3. So this is how we look at it. It's all about figuring out how to capture that momentum and use the most of it. And that's next years for us, because the company has never been stronger, and we're not yet a unicorn. I think becoming a unicorn in a post-correction world will be a true testament of great companies, because unicorns before 2021 and unicorns after, I think, will be very different, because the market has changed profoundly, but I think we can talk about that.
Okay, Vytautas, it didn't took you so long to become a unicorn, or what's the story behind? When did you start the Surfshark, and how the idea came up?
So throughout my life, I was always somehow involved in security. Like when I was 16, I was already one of the differences from when I talk to other people. They go to universities and whatnot, and my story of life was I never actually stepped my foot in the university, which I don't advise. I think I missed on a lot of good fun. But in those early days, I was kind of like creating small startups in local cities here, mostly internet provider, but also on the part-time I was kind of like considered myself as a hacker in a sense when it was still cool. Now it's kind of like it has this criminal background, and then it was a very different environment. So privacy and security was always my passion, and then there was 10 years of just traveling abroad and working with and creating some other businesses which were not necessarily related to cybersecurity. And in 2017, I came back to Lithuania, and I saw the growth, especially also in the VPN segment. But one thing I realized was that a lot of those products were still very, I would say, techy in a sense that the language they used was targeting mostly like very advanced users, military-grade encryption, the protocols and whatnot. And for me, the Apple was always an inspiration of how you can create products which are very attractive, marketable to regular person, but behind the scenes you still have a very strong technology like Unix, etc. So this is where I saw opportunity, and that's how Surfshark came to be. It intentionally never had any complicated language. I didn't name it Surfshark VPN or anything. It was for the regular folk on the street. And the first 3 years, I would think that with all of us here would share that they're the most difficult ones. You are basically you're working 12, 14 hours and just trying to survive. And I think in my story, I think the success of Surfshark is majority of it was I managed to attract a great team. And what I realized through those 4 or 5 years, if you get a good team behind, then your job is basically not to interfere as much as possible, because as a founder, you're so willing to kind of like go there and steer your own ideas, which are not necessarily the best ones. And that team actually helped, grow Surfshark to the size where we became one of the leaders in the VPN industry. And then a year ago, Tom, who is the founder of Nord Security, I know him from the childhood. We grew up on IRC chats. And then we decided that actually having 2 players in the market and just doing all kinds of marketing strategies together would actually be very strong synergies. And that's how we decided to merge and then raise the first round and becoming 2 of those companies, Nord Security and Surfshark, the second unicorn in Lithuania. But other than for the learnings, I think one of the differences in our story is that we're very frugal in a sense that we raised our first round very, very late. We never raised any capital initially. And I think if I would be looking into startups who are kind of like have potential to succeed, I would always look into founders who have this mentality rather than focusing on fundraising from the basically very, very early days where they still haven't got a single sale. So having this grind and frugality is, for me, I think it's very important if you want to kind of like succeed in the long term.
So that's one of the strengths of our ecosystem, that we kind of have a lot startups that are bootstrapping, especially top 20 startups. And even, especially now when the fundraising is becoming a bit more, difficult, it's really important. And as Domantas mentioned, this growing a startup isn't like straight line. I believe that there were a lot of ups and downs and a lot of challenges along the road. Could you maybe share your experience? What were the biggest challenges, the biggest lessons that you would maybe also give some advices from that, what you experienced, Davis.
Yeah, I want to reiterate on the point of being scrappy a little bit as well. We also raised really late. We only raised money when COVID hit and really needed a lot of extra capital, open new fulfillment centers and buy printers. But before that, the first few years, I had to go to Los Angeles a lot because we started in Los Angeles and that was our first fulfillment center. And I was just trying to find the cheapest way possible to stay. And I stayed at this American Latvian grandmother's house just to save money. And sometimes some actors from Latvia came in, some other startup folks, and we could chat about business. But I mean, only after we did like 10 million dollars in revenue, we started having a proper Airbnb. Otherwise, we were really scrappy trying to save money everywhere we can. On the topic of lessons, I think a lot of us, the challenge for us was that we always had employees in the US. Still to this day, there's 1,000 employees for Printful that work in the United States and America, and a lot of things was cultural education, like how you can bridge the Latvian and American cultures. And what helped us also is hiring a lot of American, Canadian, and Australian Latvians who, for some reason went there after the war, but really wanted to reconnect back with their roots in Latvia. So they helped to bridge that culture gap. Also, our independent board director is American Latvian, and he also helps to bridge the American and Latvian culture in there. And also what helped us in initial days, that a lot of people from, I think, also Lithuania are too humble. They build a great product and expect that it's going to sell itself. But when we brought in as a first marketing hires for our team, they were Canadian and Australian Latvians. So they were native speakers. Our language was really great on our website. I asked an Australian Latvian to speak with an American accent because that was our target market. Also just established our marketing on a really high level basis, because sometimes you go on to, let's say, a Latvian or on a Baltic website, it's Langlish, it's broken English. So I was really focused on marketing from an early days, because I'm a firm believer that a great product is not going to sell itself. You need to invest in sales and marketing, and that's often that we lack in companies here. And if you can't find people like that, and if you're not a marketing guy, hire somebody from outside. That's my recommendation.
Great, thank you. Daumantas, we've talked a little bit backstage, and since like 4 years ago, since we talked on this stage, you've mentioned that TransferGo became a profitable company, which is also a thing to congratulate. And maybe you could share some, the biggest challenges, toughest moments until achieving this.
Plenty. Like when you are dependent on other people's views, that's never a good position to be in. And as I said, for our business model, it's difficult to scale it without external capital, just because of how economics work. So even though we were bootstrapped, I think the moment we raised now probably close to 100, which is not a lot. Others have raised more, but the real satisfaction for me came in when we actually became independent of other people's perspective and became profitable and largely in control. And I think that is what I would like to say, and my tip to early stage companies as well, is that we tend to be very centric around the company itself, because we think that as long as we build a great business, we will raise money. This is the biggest lie in the world, that you will build a great business and you will raise money if you need the money, of course. You have to also spend a lot of time understanding the market, the capital markets itself, how they are progressing and where they're going. Because what it takes to raise money in 2021 versus now is completely different, right? The companies were overvalued, now they're undervalued, and if you don't get that dynamic, you will focus and you won't see the full picture. And my recommendation is for any CEO is to spend enough time in the market, have your trusted financial banker advisors, they can navigate you, have these phone chats, have these conversations to understand where the market is going, because you may be just looking at the past or not preparing for the future when it comes to what actually takes for you to raise money. And if you are fortunate enough and you don't have to raise money, that's a different story. But what I see is that the majority of the companies still need external capital from early days. It doesn't matter how frugal they are. So I think spend the time understanding the market. That is super important, because if you're playing against the market, if you're optimizing growth when everyone is looking at profit, and vice versa. If you are, you're not playing that game, you will struggle and you will never know what hit you. So that's our learning, and the moment when we started playing the market better, then the results were a bit different.
Vytautas, what were your biggest lessons learned?
I think for us, one of the bigger challenges in the early days was actually when you're a new player in the market, and where the market is already saturated. So when Surfshark came to life, there were already at least 10, 12 players, and the hardest in our vertical, there's a substantial amount of basically growth comes from partners, being like all kinds of affiliates, top websites, etc. And one thing I realized actually initially, it was that all of those players tried to get to those top publishers like CNET, TechRadars and whatnot by using the standard kind of approaches. You email them and they just ignore you, and then you call them and they say, yeah, we had 10 brands like yours already, and why would we want to work with you, etc. So, but the thing what worked for us was actually kind of almost like fake it till you make it, in a sense, that we would do very unconventional strategies how we would get onto those publishers. And the Israelis in Tel Aviv have a saying that if the door is locked for you, then you climb through the window. And that's how we kind of approached it. So, for example, one of the stories we had, we wanted to get onto the CNET. CNET is a very big publisher in the US. And so how we met, of course, they were ignoring us because we were just nobody and they were too big. So we found out where the CNET, which conferences they were attending, and we found out that the CNET publishers were actually going to one particular event, which was some kind of like a payment company pitch. So we went in there into that event and just accidentally bumped into them accidentally, and then said, oh, how are you? Who are you? And they said, oh, we are from CNET. We said, oh, we are from Surfshark, whatever. What are you doing here? Like pretending we don't know them, whatever. And so slowly kind of get conversation going. And but actually to believe that you're gonna make this work, you fly to US, you actually basically follow them in real time where they're going. That's actually stalking them in a sense, and at the end of the day, pretending that you don't know them, and then convincing them to have a breakfast with you, and after then kind of like getting into this personal relationship and finally convincing them to put us on the list is I think a very fundamental skill you need to develop as a founder, or because you need to somehow get the edge ahead of all the other players, and just doing the same thing everyone is doing will not suffice. So for me, that was kind of like the biggest learning, that there's always a way. There's I often see that sometimes when we grew now, there's a bigger teams, and sometimes some team says, oh, we didn't do that because, yeah, we emailed and they didn't respond. And like, what, like, is it actually, that's it? Like, you gave up? Have you tried, I don't know, stalking them, through LinkedIn, calling them, pretending to be a girl, whatever, just all kinds of stuff. And after that, you still will get them, So just be persistent, and maybe to oppose the previous view, I think if the founders will put so much effort into chasing, actually both in product and marketing, and success-wise, rather than maybe thinking that much about fundraising, etc., that will get you ahead, because the money you will raise, it will disappear like that. And I think if you don't do the previous work, that money is really not that important. So I always advise the people around me, just as David said, marketing is super important, no matter how much product guy you are. Because I myself always was a product guy, and I started Surfshark. I was like, I have no idea about marketing. I need to learn it, because I realized that if I'm not gonna crack it, then it's not gonna work. So. Yeah, marketing definitely is something you have to do hard, and yeah.
And it all sounds really difficult and complicated, with a lot of challenges, difficult early years, a lot of work, bumps along the road. Maybe, so what's driving you? Maybe you could share some inspiration. Why are you doing this, and what drives you, Daumantas?
Well, it's the best job in the world, frankly speaking, because all the years that you put in, the company actually gives you back multiple times more. In terms of the people that you meet, in terms of experiences you have, in terms of exposure, I mean, it's worthwhile, but you really have to love it, and it's not for everyone, because you have that ability to build a thick skin very fast. Otherwise, being lonely at the top thing gets very lonely at lonely times, and if you are especially leader, it's ultimately go down to what you will do the next day. Will you wake up and you go and do things, or you feel sorry for yourself and the rest of the company and not go anywhere? So be ready for that, but if you love it, time will fly, and it's worthwhile, because now where we are, we have close to 400 people in the company, we have 20 nationalities. It has become an organism, it has become a child that's 11 years old, and it's working on its own. Like, it's magical to see, like, you're probably not in most meetings, definitely not in most meetings, not in most action happening, and the culture that you're able to build, you can see them delivering. That's a very magical, actually, perspective, and it's rare. You have to be a founder or CEO to see that. So I think it's really worthwhile the effort, please.
Is it not scary to grow, from small team up to like 400,000 employees?
It is. The scary bit is not that. The scary bit is realizing that at some point you realize that it's no longer a joke, meaning that it's a lot of people that depend on your decisions, and you have to step up, and you have to really, you have a lot of young guys that start, a lot of hungry guys, a lot of hustlers, and you grow, and you have to, your personal learning curve as a CEO needs to be ahead of them, because they ultimately rely on you when things get tough, and things always get tough. So that responsibility, there's quite a bit of burden. But I wouldn't call it scary, you just need to embrace it.
I would add that one of the best things in being a founder and CEO sometimes is that the people around you, right? In the 10 years, I hired people who were entry level, started in roles like customer service, and really then progressed and became executive management positions, C-level positions. Of course, we mixed those outside as well, but gave me the most motivation, and how I felt in the company was just seeing those people grow, just all these awesome people that are ready to make something special happen. As well as being from a smaller country like Latvia, we could be the first in many things, right? When we, for instance, open up our Mexico facility, we can say we're the biggest Latvian company in Mexico, and we're the biggest Latvian company in US by employee count and stuff like that. So that was also something that felt special, and a lot of people who came to Printful, at least in Latvia, they were inspired by that. They really saw us as this Latvian founded company to make really a mark in our industry in the world, and that's another really, really fun thing to do. And in early days, I could, bring the team, and we would, go to the United States and work in our fulfillment centers directly where our employees worked with printers and etc. And we would stay for like 2 weeks in an Airbnb, and we would travel around the US, and that was all fun. So we worked hard, but we also remembered to have fun, which we kept as a value at Printful to this day.
So there is this culture, work hard, party harder in a startups world?
Never.
No?
I have no idea what you're talking about.
I've been to Kilohealth office, so it seems, pretty amazing. Vytautas?
Yeah, for me, I think the best parts is, the guys already touched on a few, and I definitely agree on those. I think one is obviously, for me, it's why not. I think the key question is why not, because for me personally, maybe for you guys it's different, but for me personally, it's actually about, I recently realized that the meaning of life for me is actually growing. If I stop, it's like I get into depression quickly. So the fastest way to actually grow is to surround people around you who are actually better than you, and that's how it happens when you hire people. You want them to do things you don't understand, and this is the best, from the personal point of view, the best way to grow. And the second thing is also to what Davis was saying as well. there's a sense of proudness in a sense when you can present Lithuania on the global arena. And actually, I remember 10 years ago, or okay, 6 years ago, when we started Surfshark, we actually initially intentionally kind of like even tried to hide the fact that we're from Lithuania, because we were worried that it would kind of, especially in US, it would be perceived as a not necessarily kind of like, I don't know, East European, whatever business then. And those fears were unfounded. But then we wanted kind of to stack every single odds again for us, so we didn't want to risk. But now, when you're able to talk everywhere about us being from Lithuania, and Lithuania being the hub of it, of all the great startups, etc., and seeing all those people you before kind of like looked, they seemed so serious and important people, and them now coming here to Lithuania and praising us is the best feeling in the world for me.
And Davis, now you've actively investing into other startups, and I think you see a lot of them, and you see the things from different angle, different perspective. Maybe you have also some tips for the startups that are attending the event, how to approach investors or what to look at their presentations and pitches.
At Dragon Group, we're also now starting to invest in post-revenue companies, so I'm seeing some of them. I think one of the challenges, I think both in Latvia and Lithuania, we're a bit behind in sort of our development in Estonia, so there hasn't been a lot of exits. So there's, I think, in a sense, when you're looking forward over the next 10 years, Latvia and Lithuania should be the places where there are going to be maybe even better returns than Estonia, because Estonia is ahead and it's even already more competitive. But once some of these really larger companies like Nord Security, Surfshark, and now Tesonet, and etc., some of people graduate from those companies and they've seen how they scaled, and they, I think, has a potential to be a good founders in some of these other companies. But I think even if you have maybe not the greatest presentation, nothing beats good traction, right? So if you have really customers that love you, and there's your numbers really go up to the right, you will be able to attract investment. But don't over-focus on, again, investment, because I'm very glad that we focused on trying to be break-even or profitable from an early on, that allow us to make extremely fast decisions. And I didn't have to spend like a half of a year fundraising. I met some of the other founders in Latvia, they spend like half of or more of the time fundraising. It really distracts the time from that what you need to put in a business as well. But generally, traction, nothing is going to be great traction. And my pet peeve is marketing and good English and stuff like that. So make sure at least run a spell check on your presentation, or have somebody who's an American English expert take a look at your presentation before you send it off.
Great, thanks. And we still have a few minutes to summarize, 5 minutes. The last words, what you would like to say, for those who have an idea and want to start building a startup, for those who are already along the road and maybe, not feeling so good at the moment and thinking where to turn right now. So each of you, could you share some?
Well, at least what we see in the market right now, there is a correction happening, and correction will take time. So my advice is be patient. Reality is that if you need to raise money, of course, most VCs are on holiday right now. They are not telling you this, but many of them are, especially mid to late stage. So, what you need to understand and really wait for the market to correct itself, and because there was so much capital put in, bad companies are not dying fast enough, so the entire food chain is stuck. It's difficult for investors later stage to raise money. It's difficult for later stage startups to raise money. I'm talking about not seed or earlier, but a bit later. So be patient and use this time to build a great business, because there's a lot of M&A opportunities that haven't existed before because of this crunch, and play the game smartly, be patient. Because as long as you are in control and you have a good business, this is going to be an opportunity for you, this market. But the world of 2021 is over, and it's not coming back, I think, in the next 3 to 4 years.
Think of other reasons why you want to start a company just to make money. You will very likely need to do for like what we have done almost 10 years, right? You 11, 10, and then you as well. And so you will need to hold that motivation for the long term. It needs to be more than making money and things like that. Otherwise, I think it's also okay to spend a bit of years working for a technology company that you like. And that's how I did it. Like I joined the company first before became founding these ideas. So I think that's a good path as well to take to gain an experience before jumping straight into your entrepreneurship journey.
Yeah. I think from my point of view, we have this thing with one of the kind of values, although we hate this word and at Surfshark, but it's we say that humbleness does great things, as in the sense that if you go in humble starting your company and actually not chase money, etc., but just be persistent and actually not idolize maybe the founders such as us and just think that everything can be learned. Nothing is actually complicated throughout my last 6 years. I was numerous times in the positions where I said, wow, this is I don't know, whether it's marketing topic or a finance topic, which I don't understand, and but there's nothing that complicated which cannot be learned by persistence and humbleness. So I think that's my, I think advice is just be stubborn and but also humble. Don't come in thinking that you can kind of win the world easily. It's gonna be difficult, and when you have your expectations lower, it's the fall is maybe not that painful.
Okay, thanks a lot. So to wrap it up, if you have an idea and want to build a company, successful company or a unicorn, it will be difficult, especially in the beginning. But it's really interesting and becoming more and more interesting and is driving these guys. And what you didn't mention, and I would like to say that there is also a lot of governmental support for startups and a lot of governmental money. So you should also look for that. And that's why Startup Lithuania and Innovation Agency is here for you. Thank you.
Thank you.
Davis, Domantas, Vytautas, Roberta, a big thank you goes to you guys. So let's continue our journey, and this is the time for first keynote speech. There are a lot of questions like these. Are these good times or bad for Silicon Valley and the tech industry? Is it a good time to be a startup? What about venture capital and funding? Lifelong Silicon Valley resident Rick Rasmussen explores the nature of tech cycles and what affects companies in Europe. So please welcome.
Thank you. Good morning. My first time in Lithuania. I've been here now for 36 hours total. It's a beautiful country. I've had the chance to walk. It's gorgeous. It's so walkable. I've had the chance to walk the streets. The people are great. I love it here. So thank you very much to everybody that's invited me and hosted me here. It's been awesome. What I want to do is talk about my hometown. So Silicon Valley. I was born and raised in Silicon Valley. I had the fortune to be able to do that. And it's unusual because nobody's from Silicon Valley. Nobody's from there. Somewhere between 70 and 80% of all the CEOs of all the tech companies are foreign born. So it's not only the fact that they're not American or from California, but they come from all over the world. These are the misfits that can't necessarily start what it is they're trying to do or realize their vision in their home countries. So Silicon Valley's been a target and a magnet for people and talent all over the world. That's why we need to keep our borders open as well. And so let me tell you a few stories about what's going on within Silicon Valley. Because if you listen to the news and sort of check out what's going on, everybody says, oh my God, Silicon Valley is no longer the place it used to be. It's collapsed, collapsing and collapsed. You know, there's so many things that are going on. Specifically, over the last, say, 36 months or so, there's been massive layoffs. All the tech companies have shedded thousands of employees. And if you take a look at the numbers, it looks like this. So 93,000 employees. Can you imagine in 2022? And you top that up with over 200,000. So over 300,000 people have lost their jobs in the tech industry. What do they do? Where do they go? What's happening? It's really scary. So, I mean, Amazon alone lost 30,000. Meta lost 20,000. Google around 15,000 people. So these are it's a stadium worth, or several stadiums worth of people that are now no longer working there. There's this whole talk about San Francisco going through a doom loop. Doom loop is now a thing. It is where some bad news starts and it's not corrected, and the bad news generates worse news, which generates worse news, and everything's on a downward spiral, the doom loop. And so it's somewhat true. And if you take a look, this is City Hall, and City Hall is now a giant homeless encampment. There's a lot of crime, there's a lot of drugs. If you drive your car there, my window's been broken into at least twice already. There's just homeless on the streets. This is the BART station. You can't get into local transit anymore. This is the building where I work and teach. And so I took this picture right outside. Shopping, so no longer are people really welcome there. This is right just near between the financial district and Soma, which is the south of Market District, which is all tech is. So that diagonal lines Market Street, north of that is FIDI, and south is Soma. And you can sort of see that all retail has more or less disappeared out of that central core. So it's no longer the shopping mecca that it once was. Part of it is just Amazon Go. I love Amazon Go. That's the place where you tag in, you walk in the store, you take anything you want on the shelves. It's like legal shoplifting. And you grab that and you just simply walk out. And then Amazon tags you later with a little bit of a receipt, and off you go. This is when the last Amazon Go in San Francisco closed. Aww. So artists have sort of taken this the next step. And it doesn't really look like this, but this is somebody's imagination about what's happening. Because, you know, it's a little sad and a little bleak. And cable cars have now ivy growing through them and so on. So that's our doom loop that's happening. Is it possible to get out of that? Meanwhile, there's all these other places that want to be the next Silicon Valley and are striving hard to do so. I mean, New York is certainly rising. Beijing, of course, the pressure from China, always there. London, the European hub. Tel Aviv has always been there as an entrepreneurial hub, startup nation. And then you get, within the United States, Texas, which is always talking about, you know, we've landed this company. We've now got HP. We've now got Tesla. Florida's trying to do the same. So, oh my God, this is my hometown. It's not looking all that good. So there's studies about this. I'm going to start with economists, because I was an economy minor. And these are, you may recognize Adam Smith, talking about Wealth of Nations, and Karl Marx, of course, Communist Manifesto, and John Maynard Keynes over on the side talking about the Federalist societies and so on. But the one guy that most people don't recognize is here. Who's he? Well, he's sort of the steward of what's going on in Silicon Valley. His name's Joseph Schumpeter, and he talks about these economic cycles, and that's sort of the theme of this talk. And the keyword phrase is gales, winds, massive winds of creative destruction. And so his theory goes that old inefficient companies must go out of business. Layoffs must happen. The kings must be thrown off the mountain through gales of creative destruction to release capital and workers so that you can go ahead and do more innovation. And so that's sort of the theme of this talk here. Just for fun, I took AI. You guys all know ChatGPT. There's a cousin called DALL-E. Play around with it. It allows you to generate art through phrases. So I typed in gales of creative destruction. And this is what DALL-E came up with. I kind of like this. I was thinking about making this the title of the talk, but there you go. How does this work? First off, this is Silicon Valley. If you haven't been to California, you're not familiar with it, that's San Francisco up at the top. And then it's about 75 kilometers from top to bottom. And down there, that place that says semiconductors, that's Silicon Valley proper. That's where I live. That's where Apple Computer is, the first thing that I showed right at the beginning. And so it started really in the 60s and 70s early on as the home of the semiconductor industry. And that's where I grew up. I built 3 companies from scratch, taking each one with a team of people from initial products through growth, through an IPO, to be able to build a Fortune 500 company. And so my first company was LSI Logic and started just a little bit after this time. But semiconductor and defense industry, a little boring, but that's the whole core, and it's not in San Francisco, it's in this area in the South Bay, about 75 kilometers south. So, but the magic doesn't last forever. There's a trigger event that happens. And in the early 1980s, for those of you just reliving history, there was super high inflation at the end of the 70s and 80s. It hit 20% at one point in the United States, which is huge. And the fiscal policy shut that down, really shut down a lot of the economy. So the industries there, which was old school mainframe computers and the defense industry, ended up really shutting down overall. And this is the cycle that happens. We get something that's generating income, generating jobs. It doesn't do well. People get laid off. Those people get laid off, and what do? You can either move out, which is what a lot of people end up doing, and that's what you hear about Texas and Florida and all that, or you do a brand new startup. And so our startups at that point in time was the PC industry. So if you remember back in the day, we had the start of a whole brand new set of industries, which were a transition in the semiconductor industry. We invented disk drives, we invented Ethernet, we invented graphics cards, and generated the PC industry, and this is the time, the glory days of Apple back in the day. So now, all of a sudden, this semiconductor cluster starts to grow. We get other industries that are evolving, and they were right next door. So that gap overall, that big circle there, is about 20 minutes to drive from one side to the other. It's not that big. Also, at this point in time, venture capital started. I mean, it was in existence beforehand, but venture capital exists because banks won't lend you money as a startup. You're there with an idea. If you go to a bank trying to get a car, if you don't pay your loan, your car gets repossessed. They have an asset. Same with a house. You have a mortgage, they can repossess your house. If you have an idea, they can't repossess that. So venture capital is risk capital. It's the thing that's there to allow us, all of us, to go ahead and generate startups from scratch. And that's at a place called Sand Hill Road. I advise you visit that. It's super boring, but you'll see billions of dollars being transacted there on a regular basis. So that was growth. So the growth cycle looks like this. We start off with, I call it irrational exuberance, which is a catchphrase. Things are going really well. All of a sudden, there's some sort of an external trigger event. And that's not anything that we necessarily have control over. It may happen elsewhere, like defense spending. Then there's a crisis. There's layoffs. There's a rationalization of those layoffs, and those people that are still there, that haven't moved out, are doing the next generation of startups. The startups start to grow, and we're creating new industries, and it starts anew. So let me run you through a couple of those cycles just to give you the example. Almost a decade later, in the early 1990s, we had massive defense cuts. This was the point in time which the wall collapsed. This is the point in time with Lithuania went independent. Yay! First country to do so. And at this point in time, too, we were under huge threat from the Japanese. The Japanese were building a massive manufacturing economy. They were taking over the automotive industry. They were taking over the semiconductor industry. It really affected us. So semiconductors, which were the king of the mountain, basically started to move out of the region. But we have a new industry coming, and that's the internet. So internet was basically invented in the 80s and started to come of age just after that in the early 90s. So we have brand new industries, networking, communication, internet service providers. We have digital video and digital audio. This is what I participated in. So the company that I helped run, I was VP of marketing, invented JPEG and MPEG algorithms. So we were the first one to put those into chips. So again, a company that went public. So from that now, we start to get new industries. So we start to get data communications, large databases. Oracle's the most famous. Software as a service is a brand new industry, and so on. And so now people are starting to grow outside of Silicon Valley proper and just up the peninsula towards San Francisco. Cool, everything's going well. Internet, let's go. Well, we were so excited about the internet that we got a little carried away. There was a point in time called the dot-com boom. Boom, super exciting. So a little bit of rose-colored glasses. We're changing the world. It's all coming from us. We're going to be great. And I think we got a little carried away. There's a lack of common sense, but there were some good things that came out of it. To give you a sense for the development, take a look here. This is venture capital investment historically. Running along. Boom! Historical heights. We've never been as insane as we were during that short period of time. Calm back down. I'll talk about that in a second. And slowly growing. We still haven't reached those days. Here we are 2 decades later. So this dot-com boom did create some new businesses. It's basically the creation on internet. How do you make money as an internet company if you don't sell equipment? So Google, as a search engine, figured out the ad model, and that changed everything. And so now there was these new business models and new, really super huge companies starting to evolve. But as you saw, there was a dot-com boom, and on the tail end of that, dot-com bust. And I paint this out because it was like a nuclear winter. Everything was dead. This is real Silicon Valley death. Nothing was happening at all. Nobody was touching the place. Everybody assumed that the tech boom had just gone. We had lost so much money for so many investors. Nuclear winter. I went unemployed for 4 years. Some of it was deliberate. It was kind of fun, but for the most part, there was no real job security, and people were leaving. But from the ashes rise new businesses. And so in the dot-com bust, what did we see? Now we're taking what was the vestiges of the internet and actually creating real business models. So this is when social media was born, out of those ashes. And nuclear winter. So before, startups were all done it's the myth, it's really true, all done in garages and coffee shops. So what we're doing is changing that around and creating social media and entrepreneurship overall. So we had dot-com boom and bust, created ad-driven business models and brand new businesses. So overall, in order to get things going, we set up incubators and accelerators. Y Combinator was invented. Plug and Play, by the way, which is coming here to Lithuania, congratulations, was invented, and so on. So we're doing pretty well. Financial crisis happened after that. And so you can imagine same sort of trigger, and after that came the shared economy. So overall, what's going on is we have a series of tech whiplashes, and that's the theme of this talk. The top line is the population of Silicon Valley, rising and falling with each individual wave. But after each wave, we build new things. And so we have a diversified technology economy now, which includes clean tech, life sciences, enterprise software, a shared economy, and AI as it's now coming. Everything goes through these hype cycles. There's an innovation trigger where we build new technologies. There's a peak of inflated expectations where things go crazy. There's this big trough of disillusionment that we run through, and eventually these things become real. You can trace this for almost any technology. This is 2016, and you had blockchain and self-driving cars at the top. So now we are, fast forward to today, what's going on? Well, we've just been through COVID. We're going through globalization where Silicon Valley is no longer the center. We have all these other places. We have this VC crisis, which I'll talk about in a second. And in LA, which affects us dramatically because we're now in entertainment capital as well, this whole writer's strike. So people are basically continuing to move out. There's been a downturn, and we're no longer generating any unicorns, or very few. There's this discussion about the globe being off. There's this whole idea about Los Angeles. This is from The Economist. Los Angeles and California leaving, so the writer's strike is happening, and so the shine is no longer on that one as well. So this whole idea of doom loop, is it real? Is it true? Are we going to be able to survive out of it? Well, my thesis is that chaos creates opportunity. That there's so many things going on that watch what's happening as we dig our way out of this cycle. There's some evidence, though. I think the last panelist just talked about the fact that there are very few follow-on finances, that the VCs have basically shut down into a shell and are no longer generating things. So this is right out of PitchBook, new statistics. But if you take venture capital and parse it out, that's true. All the stuff below the line in the sort of pinkish orange there is follow-on financing. These are companies that are no longer being financed, and so we are seeing a death of a lot of startups, 2021, that shouldn't necessarily have been financed, or were financed at a very high level. But the top one is the good news, and that's pre-seed financing. So we are seeing, and this is smart, venture capitalists and investors in general going after and nailing the early stage startups that are starting to emerge. So it's not all is doom. There's a global ranking of startups, and if you take that, we're still at the top. That's San Francisco, that's Silicon Valley in general, and I don't know if you can read it, but the scores of this ranking service say that we're better than twice as strong as the next series of overall entrepreneurial ecosystems. I looked up Europe too when I was doing this. Check it out. Lithuania is right there. So congratulations. You're there. Yeah, and take a look at that grouping. You guys are almost top 10 and getting closer. And I think by this time next year, you'll be somewhere a lot higher than that. So what does this mean? It means, that's what I wanted to show. That's what I wanted to show. All right. So what does this mean? There's all kinds of stuff going on. There's all opportunities. There's this idea of physical, cyber world, with digital, physical, and biological. Things are merging. This is super exciting. The whole idea of technology and entertainment, it's already started. We'll just see even more of that as Apple and others get even more involved. This is great. There's this whole idea of biotech and all the individual things. COVID vaccines were one of the pieces of evidence where that vaccine was developed in record time, artificially developed, parsed out and developed mechanically on computers, and it's changed the world. Climate tech, of course. We live that every day. There's so many opportunities there for real businesses. It's not happening yet. Some of the energy companies are trying to capitalize. Startups need to get into this game. And there's this whole idea of sustainable entrepreneurship as well. So I know it's very strong as a theme here in Lithuania. So if you take a look at today's hype cycle, it's all about AI and all the various generations of that, but it's more than that. It's richer than that. So my message to the world is basically Silicon Valley's still in business. There's all kinds of global resources that are available there. It's huge still for anybody with a great idea, great business opportunities, potentially brand new industries. We're looking for those, and there are resources there. Those were the people that were laid off are building the brand new startups. There's exciting new frontiers, and so let's go off and build this next thing together. So yeah, there's this discussion and theme about how Silicon Valley has collapsed, but we're looking to rise again, and I invite you, each and every one of you, to join us there when you have the opportunity to come on out, because we're going to build great startups together. So thank you.
A warm thank you goes to Ulrich. Thank you. It was a pleasure to have you here. So our next discussion is about navigating through economic downturns. The crisis will come and go, as history has shown, and we can only influence how we react to it. It's time to learn about market adaptation and effective risk management strategies that enabled these companies to thrive, even during uncertain times. Unlock the gateway to success. So please welcome Pijus Makarevičius, CEO and founder at Furniture One. Justas Malinauskas, CEO and co-founder at Watergraph. Darius Žakaitis, founder and CEO at Techicity. Moderator Inga Langaitė, CEO of the Unicorns Lithuania.
Hello everyone in the audience. Hello guys. So let's start. Me, myself, I am Inga Langaitė, Unicorns Lithuania, Association of Lithuanian Startups, currently joining 108 startups from Lithuania. And please, some short introduction from you.
Hi everyone, I'm Pijus and I'm a founder of Furniture One, and we are a multi-brand online retailer working in several European countries.
Hi everyone, Justas Malinauskas, co-founder and CEO at Watergraph, marketing, reporting platform turning into data analytics platform currently, and yeah, happy to see you.
Hi everyone, I'm Darius Žakaitis, founder of Techicity. Yeah, we're on a mission to build the biggest tech hub in Europe, in Vilnius.
Super. So let's talk about challenges. So you as a startup founders, you should love challenges, right? By nature. But it seems that nowadays might be too many of them, like financial crisis, war in Ukraine, cost of the money, etc., etc. How do you see it? How is it in Lithuania?
Yeah, I guess in our case, we're also like affected of many different factors that you mentioned. But what we also feel is also a lot of opportunities are arising. So not sure what about, let's say, when it comes to you guys.
I think in our case, we also feel a lot of, I think not the problems affected, but it's more about uncertainties in the markets. And people feel uncertain, and then the decision making is getting longer. People are making more sure that they're buying the right product, in our case. But also we are trying to use also that as an opportunity, and we have larger competitors who are selling more expensive, and we're entering the market in data analytics space. So for us, it's still a good entry point. And I think using that uncertainty times is very good to question if it's the right provider or not, which they currently have, and I think we can come with a better stack. But of course, we're trying to prepare for that and use it as an opportunity rather than waiting for better times.
Darius.
Yeah, we were hit most, and all the problem what you and difficulties what you mentioned, we get all of them. But what you can do, yeah, it is life, and you still need to work on your mission and on your goals. And I don't know, we and our team, yeah, we think what, yeah, it's bad times or good times, yeah, they're changing, and yeah, I hope we will survive and go through working hard.
But I guess this is not the first crisis for you. I mean,
yeah, during my career it is not first time crisis, yeah, and I always was telling, yeah, crisis is like 2008, Lemon, and before .com, 2000, I remember perfectly, and I was, yeah, very, very confident that, yeah, we will survive. But this time, it's a really complex issue with when it starts from the COVID and now continuing with this inflation and prices of resources and things like that, and war in Ukraine. So yeah, so I changed my mind. Yeah, it's a new experience for me to be in such difficult circumstances for almost 4 years. But you see, I'm still alive, happy. Did a gym this morning, and yeah, let's move forward. Yeah, what we can do. Yeah, it's only one way. Yeah, get up early in the morning, do exercises, and move forward. And that's all. This
That's
is
the
simple,
spirit.
simple advice.
I think that's Lithuanian spirit, actually.
Yeah,
So
yeah.
we're
Be in good
always
shape. Yeah,
yeah.
be in good shape, and you will survive somehow. Yeah. Of course, mission and a purpose is also very important, because when you have your dream and you know where you're going and what it's helps you. Yeah, but that's all.
But talking about Lithuanian spirit, we see a lot of layoffs somewhere else in Silicon Valley, in UK, and etc. We see that some even unicorns bankrupt, right? But we haven't seen that in Lithuania that much. Did you lay off? Did you say goodbye to your employees, to some of your employees?
Yeah, so in our case, we had some optimizations within the teams. So you can call it also, so we called it also as a layoff a bit, but they were not that much related to that. It's more about still understanding how to run a business in a dynamic, basically, environment. And I think it's better to prepare a bit in advance rather than prepare when you are not prepared. And I think, as you said about training, I think it's also very much important. You always prepare for the marathon, some days in advance. So I think in our case, it was more understanding how the business is working and which parts are, have potential to grow and which are, let's say, in the past. So in our case, we were transitioning more into, as a business, also maturing and also transitioning into bigger opportunities. And I think in our case, as we're still a small company, I think it's a very good time to really, tighten up and proceed into other markets when big companies in that markets are actually thinking what they need to do, and they need to think about huge layoffs maybe. And I think that's a very good opportunity. So always you need to be, cautious about yourself. And I think what we see in the other countries, I think they haven't thought a bit in advance, and they were hit with the wall, I think, which we all felt, as you said, like, wars keep on going. Summer came, first summer, proper summer after the COVID, I think, and people want to relax. They don't want to buy new software or something. So money's getting more expensive. So you hit that wall at the same day, and everyone got that hit. And it's very much important, like how you were prepared before that. And I think it's also, I think everything is related. So it depends if you're optimizing or if you're laying off because to survive. So I think in our case it was a bit different, but yeah, I think in the other countries we see a lot of survival layoffs. So I think that's the biggest problem.
So why was it?
Yeah, I think in our case it was also the same, because yeah, we have downscaled in several verticals in the businesses, but it was not that really connected with, let's say, all the macroeconomic environment, but more like as a business decision. And I think you had a really good point about the marathon. So I think for us it's like important to understand that we're not running sprints, and let's say for us it's not that important. And we understand that all the background is not perfect, and let's say this year might be not the greatest one, or we might not see the growth which we used to see for the last several years. But I think we're running marathon, and we know that there will going to be like uphill and downhill and so on. But our goal is to not to have a great 2023. Our goal is to be in a game in 10 years.
Yeah.
So I think with this approach, you take very different decisions.
And I got very good advice quite recently. So when you can't forecast that much, because now it's very hard to forecast still. We don't know what's going to happen. And when you can't set like really strong goals, build systems. So when you build the systems, they enable you to achieve the goals eventually, and be really adjusted to the situation. So I think that's very much important. What we are trying to follow within our company, like build really working systems when you know what's going to happen in every situation.
So Justas, you already mentioned that planning somehow changed, right? Because you plan for shorter time ahead, right?
I think you do both, short
both?
and long time.
Okay.
And then you have So the planning is not like one line which you do, I think, but it's more about you have a kind of a, like, I don't know, like a tree map or something, when you just go one line and then it's, goes into different directions, and then you know which direction will go, you have more plans in place.
So did you do that before this crisis, or
So again,
is it like you think?
So we try to build systems, again, like what I've said, I think, and when you know what's going to happen, if this works that way, then you go, you scale more the team. So for now, like, we are again scaling up the teams, and we're scaling up the sales, but one more enterprise level, rather than smaller companies. So in our case, enterprise are still going very good, and small companies are like more fragile. So we just quickly jumped into another segment which we were operating, and now we added full focus there. And actually, apparently, it shows up. It's better rather than what we used to do. So sometimes those challenges encourages you unintentionally switch to a better position.
Okay.
So I think, in my opinion, I've been in all the, like you've been in all the world crisis. I think we've done every very important decisions within the company in every situation, like COVID. We are fundraising for Series A in COVID. So basically, we started that before the COVID, like 2 weeks in advance, and it was very tough discussions, actually, but yeah, you adjust during those times. So I think accepting those times is way better than ignoring them, and then you can plan and work through them. And I think the best plan is you have in mind is you need to be successful in what you're doing.
Darius, what changed in your planning or operation?
Every day, new changes, and we need to adapt every day. And in terms of the people, we hire more people to help us to overcome these challenges. So this is definitely, our team is the most important asset of our company. And but referring to what in other countries, it's a big layoffs, and so I think this shows how is strong and how is mature already Lithuanian ecosystem. Our startups was not spoiled by investors, and I think all of us saw the movie We Crash.
Yeah.
So it's a good example how investors can spoil your company, and we are in very realistic situation for last, I think, 10 years. It was hard to get financing. A lot of bootstrapped startups
and
in
even
our country,
unicorns.
and even unicorns. And this is a strength of our ecosystem. So why is yesterday so many investors into investor camp came from abroad to see, because finally people start to understand that we are unique ecosystem, really bootstrapped a lot, very strong, serious companies, no unrealistic bullshit, about, I don't know, future profits and future, I don't know, something, or guys doing real job every day. And when you are realistic, so this is your power,
Okay. Let's go to another topic. So how relationship or power game between employer and employee have changed? Can you elaborate, maybe, Pius?
I guess now it's easier to attract talent for most of the companies. And I would say, like, as many of the things, they're becoming like more normalized. So I think it's a healthy ratio now that we're having. Of course, there is a big need for talents to attract to Lithuanian companies and for startups here. But I think it's really getting healthier. And I guess, again, coming back to advantage of our country, that we're like really a lot of startups are bootstrapped. So I think it's really getting easier for us to gather teams and to grow. I think you see also it quite well.
Yeah, so in our case, I think we became way closer all together, like the company and people. and we're becoming a real team with like full transparency. Like, you know, guys, we're going against a big segment, and we need to, you know, get there. And I think that makes people excited. And I think actually people, despite that, you know, at first it looks like very challenging and what's going to happen, but I think that also creates very good energy within people that they really want to go through it, and actually it gets a better output. And I think we all within the company are very much tied together, transparent with each other, like where we go, what we want to do, how we are going, what's the results, and etc. And I think that's very good spirit within the company to have, and then we really feel that, you know, we can go together, and we invested a lot of energy to build that, you know, synergy between the company and the people, and people are actually going after the vision, and we're explaining why we're going there, what's the benefit of that, and everyone knows why we're going into bigger market, and why we're going after that vision, you know. So I think that's very much important to invest in current days into the spirit of the company and ecosystem itself.
As you already mentioned, all of you, that Lithuanian ecosystem is still growing. It's showing some really nice numbers. It's more resilient, and of course, percentage of GDP created by startups is growing every year. But what do you think? How startups themselves or ecosystem as a whole can contribute to Lithuanian economy? Any thoughts?
I think that this generation of startups, I guess what was been happening, you know, for the last years, I think it sets like a really good new standard for whole economy, the standard of transparency. If we compare the businesses and the startups that you guys are doing or participating, and you compare to the businesses which been here, you know, 10 or 20 years ago, I think we really have much higher standards. We really share much more between each other. We do not compete between each other because, like, we're a really small market, and our advantage is that, you know, we need to go global. So we don't have competitors here. We only have, you know, partners or friends or colleagues with whom we can share the knowledge and together fight for, you know, for the place in the world. So I guess it also works as an advantage for us. And by setting these standards, transparency standards, I think it really helps all the Lithuanian economy as a good example to follow. And I think a lot of companies are really inspired by the unicorns and other cases which we have in Lithuania.
And I think that's what you mentioned. I completely agree. I think it's very good that every even employee within the company, they know that we're friends with other companies, you know. So we're not going against each other and sharing the knowledge. I usually encourage our, you know, team members also to go, like, hey guys, go to, like, you know, North Security, go to, you know, other company, just share the knowledge, you know, get from them, you know, they did it better, and maybe they can advise, you know, what to do, and they do, you know. So it's very, very nice. I think I even don't need to do intros, you know, like with the people. It's just connect together, and because they know that they need to share the information. And I think that's the beauty of it. And I think that's how we're going to succeed. And I love the quote of, I think it was used in Batman or something. I think everyone saw it. But when some people get, you know, somehow accept the darkness, but as they said, like, you know, we were born in it, and I think Lithuania was always in that darkness, and I think we can kind of feel it, and we're feeling okay with these turbulent times, and because they were more before, and there's going to be more in the future. So I think we get together and then we solve it together. So that's how we contribute to the country, and we share a lot, like through educational programs, which we encourage as a Unicorns organization, and we really help everyone who wants to get the help.
I think this startup movement, what is really a movement last 10 years, is the best what can happen, could happen in Lithuania. I think it's the best of the best because new companies, new unicorns, people get decent salaries, yeah, options. It will be more and more millionaires, I think, every year because of secondaries, investment rounds, and etc. So it's the best what can happen. Yeah, we work on innovation. Yeah, what I like very much also transparency. Yeah, it's a new standard because compared to all the economy companies, it's a next level of transparency. Yeah, because of the funds, rounds, investors. Yeah, so they asking a lot of these transparent things. So governance. Yeah. Innovation, openness, collaboration. So I don't know. I do not see any bad things in this. I think it's the best what can happen. And yeah, I think but you can imagine what it will be in next 10 years.
But I think
then all of you will do a new companies, raise new rounds, yeah, make a new success story. So can you imagine what happened? Because I saw what was 10 years ago. Yeah, it was like 200 people in a room. This was ecosystem. Now we're talking about 18,000 people in unicorns web. Yeah, so you can imagine what it will be in 10 years. I hope. Yeah, we will be 35 or 40,000, and yeah, it's 10 unicorns, and everybody will be.
And I think also the thing which we forget, I think, to say, like, I think that creates a bit different thing. So I remember going to the first conferences abroad, and for example, you go to US and you just go there and you go, oh, I'm from Lithuania, and they're like, oh, Lithuania, what's that? You know, so maybe if San Francisco say like, oh, Marčiulionis, because they used to play there, and oh yeah, I know Lithuania. Now you go there, you say, okay, do you know like Vinted, or do you know like NordVPN? Oh yeah, that's nice. So they're built in Lithuania, so that creates another energy, and then we now see people from US, other Western countries, flying into this event, and not only investors but also startups, and we are being recognized. So I think that's the beauty of it, and I can't imagine what's gonna happen in 10 years.
No, really. We're building a brand of our country. I think startups helps to build a brand of a country. So because you all probably know, Korea is built now on K-pop, Japan, all young generation know because of anime, so I hope Lithuania will be known by startups. You need to, in a marketing it's very, very simple. You need to have something, exceptional in order to build your brand, so why not is a startup?
Yeah, and some technological change, steam machines were built in London and United Kingdom, and I think technological change can happen actually from here, and we can be recognized in the books in 100 years that that we were some kind of also involved in that change.
Okay, so we dreamed a bit about the future, and for the last question, I want you all ask what you would advise to yourself if you could come back, like maybe 1.5 years back in time.
Can we say about stock investments?
No, maybe let's focus about your business.
Yeah, I think make that decision, I don't know what kind of a decision I was making at that time. I just, don't be afraid to make that decision, because I think everything turns out into good way eventually. And I don't remember what tough decisions it was. I think there was plenty of decisions, and the hard ones and easy ones. I think just make that decision and just do it as you feel it.
I think we work very hard, all of us. Probably also the Exit team worked very hard, and what I feel, what during this, what hurts me most, team is really exhausted because you need to overcome all these challenges. So, and as a kind of a sportsman, I can say recovery is very important. So I would love to learn how to recover better and how to help my team to recover better, because in that time what really hurt us, not of this crisis, yeah, but we are really feeling tired, and some people, yeah, got sick and got flu and things like that, which is yeah upsetting me a lot, and so yeah, so recovery probably now is my number one challenge as a founder, as a human being. So do not forget to think about recovery. Yeah.
Okay.
And I guess in our case, I wouldn't advise myself 1.5 years ago anything different that I would advise like now to myself. But I guess not to forget that we're running a marathon, not a sprint. So it doesn't really matter if we have ups and downs within 1 or 2 years. And then I think it's important to remember that we don't need to outsmart the inflation or some global economy challenges and so on. We just need to constantly be better, improve, outsmart other players in the market, like really become better. And it really doesn't matter if it's like economic situation is great or terrible. It doesn't matter. In the long term, it won't matter what happened within a half year. I think it really depends on what value are you creating now.
So to summarize, don't forget to improve yourself constantly. Make that decision, and after that, recover.
Yeah, recovery.
Okay, thank you very much.
Thank you,
and
Rajat.
see you in next panel.
Thank you.
Pijus, Justas, Darius, Ringa, a big thank you goes to you for this discussion, and let's continue. I invite you to join us for an insightful exploration of the dynamic venture capital landscape and the thriving deep tech startup sector within the Baltic countries. And please welcome Sandra Goldbreich, General Partner at Baltic Sandbox Venture, Alex Hamilton, Ecosystem Innovation Analyst at Dealroom.co, Žygimantas Susnys, Managing Partner at Iron Wolf Capital, Vytenis Buza, CEO and co-founder at Kongsberg Nano Avionics, moderator Dominikas Milašius, Venture Partner at Baltic Sandbox Ventures, co-founder at Delta Biosciences.
Hi guys. How is everyone doing? I hope the room is full of nerds because we're about to get technical. In any case, can you see my slides? They're up somewhere? Yes, awesome. So the plan of the attack for today is I will show you a couple of aspirational slides. Žygimantas will show you a couple of data full slides, and then we'll discuss the data in the slides. And basically what we're trying to do is to talk to you about what deep tech is, what it means for the Baltics, and where it could go. So first, let me tell you a couple of words about Baltic Sandbox Ventures, because last time this year, or last year this time at Startup Fair, Baltic Sandbox Ventures was not a thing. So we're a new fund, and funny story, I actually had a conversation with Sandra a year ago on the stairs of Kablis, and that's how I became a venture partner at the fund. So for all the hustlers out there who are trying to make this conference matter, you go, everything is possible. So one question we get a lot is, how deep is your tech? What is deep tech and what do you do with it? So our definition is, it's a science and engineering-led products with an IP edge, intellectual property. So you have to have some sort of edge in terms of a technological moat that you can protect or hide from other competitors. And this is closely connected to emerging and disruptive tech, EDT, that NATO speaks about, high-tech, advanced tech that other investors use, and sometimes even dual-use, dual-purpose technologies. The way to explain it to your grandmother is by drawing on a napkin a matrix and putting good, bad, easy, hard, and tell your grandma to imagine she's playing a game. So if you're playing a good and easy game, your grandma will probably want to design a software for one of her friends to take her cart out or get her shopping done on a Sunday. That's a good and an easy quest. If she decides to create another last mile delivery app, it's an easy quest, but probably a bad one because we have a couple of those. They're working okay. And if your grandma decides to invade her neighbor, like some of the geopolitical actors in the region, that's a complex quest, but a bad quest. And so the people here on this panel are focusing on this area right here, and I put a nice shiny star in it. We're focusing on deep tech, life sciences, dual use, space tech, complex AI, anything you want to put in it. And so as Baltic Sandbox Ventures, we help founders go on good but hard, complicated quests. And over the past half a year, we've incubated 52 teams. We've made 11 investments, and we've committed close to 1 million in investments and grants, 965K in pre-seed investments, and slightly close to 100K in grants. And so because I have the stage and I have to annoy you, I'd like to shout out Vitas from vSky, who a night ago received signatures from Co-Invest Capital, Baltic Sandbox Ventures, and a bunch of angels, and we closed for our fund one of the bigger, and for Co-Invest one of the first under the new leadership, Victoria Trimble, round 1.1 million for aviation software and hardware. So I'm just using the case of vSky to highlight that deep tech's hot. Dual use, a particular area within deep tech, had zero funding at the beginning of 21 when some geopolitical events happened in the neighborhood. Today we have 55 million from Baltic Sandbox Ventures, Co-Invest Capital, Scale Wolf. Our colleagues at Iron Wolf Capital are raising a new 70 million fund and deployed very successfully the first fund. Colleagues from Open Circle, Practica, Contrarian Ventures all have deep techy sort of edges. If we do back of the napkin math, if we add all those funds up, right, which will probably never happen because most of this capital is going away and stuff, but if we add it all up, we get up to 325 million of extra financing for deep tech in the region. And so what I want to have a debate about today is what can we do to achieve the impossible and unlock a 400 million opportunity for the deep tech in the Baltics over the next 10 years. With this, I hand over to a more data-driven approach by Žygimantas, and a couple of intro words, and then we'll switch to the panel.
Okay, hello everyone. My name is Žygimantas Susnys. I am a partner at Iron Wolf, VC fund that is focusing on AI and deep tech. And before we would start the discussion, I would like, to use a couple of statistical charts, right, that have been taken from Deal Room report. And by the way, for those who don't know, together with Deal Room, we have launched the survey, the report of the Baltic deep tech and AI market. And this report will be going to be renewed on an annual basis. And you could find this report and download it on dealroom.co website.
On the Deal Room platform, which is free and available for users to use.
All right, so a couple of charts where, first of all, Europe stands in the world in deep tech. So in the recent years, deep tech has emerged as one of the most important investment themes in Europe. In 2022, it reached total funding in deep tech reached 22 billion. That accounted for one-fifth of the total VC investments in Europe. So that's big achievement. But still, Europe significantly still lags behind the US. In a period from 2020 to 2022, VC investments in the US in deep tech were almost 170 billion. In Europe, only 50 billion, which is 3 times less. So Europe still has, to go a long way to catch up with America. And I think positive side that Deal Room together with Atomico, they made a survey of what are the most favorable themes for investment for European LPs. And what's interesting that deep tech emerged as the second most interesting theme, behind only Planet Positive. So, okay, so now let's come back to the Baltics.
Would you like me to take this slide?
Yeah, please.
Sure. So on the slide behind us, we have the combined enterprise value of the Baltics ecosystem split into 3 different categories. In the dark blue, we have the deep tech startups within the Baltics, and the lighter blue represents AI-enabled or AI-powered Baltic startups. And basically, the trend we're showing is between 2018 and modern day, we're seeing like a rapid growth in the amount of the valuation of all of the startups in deep tech. Is taking up a larger percentage of that within the Baltics. So yeah, that's the main finding from this slide here. Again? Sure. In this slide here, we have the amount of VC investment that's going into those 3 categories. Again, deep tech startups are in either headquarters in the Baltics or have been founded in the Baltics and have since moved on to other countries. So again, a similar trend as we saw in the previous slide in terms of over the last few years, there has been an increase in the proportion of investment going into deep tech startups, into AI-enabled startups due to their popularity. The Baltics as a region being very favorable and attractive place for investors to invest into these technologies and startups. And this is the key takeaway for this slide here. For this slide here, we wanted to showcase a few of the largest rounds and selected rounds across a few different categories. Working left to right, we have the selected top rounds in the last couple of years within the Baltics with familiar names such as Nord Security, Verif, Bolt, etc. We have selected deep tech rounds in the center, as well as AI-enabled and AI-powered startups in the middle. So what we're able to sort of showcase is a couple of examples for each of those categories of what we mean by deep tech and what we mean by AI-enabled. Just as a startup will use AI technologies or is AI-enabled doesn't necessarily make it a deep tech company or a cutting edge in what it's aiming to do. So yeah, this is the proportions there that we're able to showcase, as well as always ever present and popular impact and climate tech funding rounds. All of these funding rounds are available on the Dealworm platform. And here we just want to sort of showcase.
Okay, so this is just a couple of words about Ivan Wolf. So we are a VC fund dedicated to deep tech and AI startup founders in the Baltics. So we are the first fund in the Baltics that have built truly pan-Baltic portfolio. So, you know, large part of our investments are in Estonia, Latvia, not only Lithuania. And in this, our first fund, you know, AI and deep tech had, you know, very, very big focus. So in this area, we have made 12 investments out of 22. And what's also very positive that, you know, large part of those deep tech and AI investments, they have reached Series A. So they are really showing good performance. And we're raising the fund of 70 million that will be launched next year. So we'll be happy, you know, to invest in promising investments starting from next year.
Awesome. So thank you, Žygimantas and Alex, for bringing up the Dealworm report. We've been waiting for something like this in our ecosystem for a while, so it's awesome that you've hit this milestone and delivered it to all of us. And the reason we wanted to show you these numbers and speculate with these numbers is because, as you have guessed, we are selling deep tech to you as an important asset subclass that we think has a lot of potential for the region. And that's why we have 2 other people here on the panel with me. And to just lead into that conversation, one number that really stood out from the report that you guys prepared to me is that the Baltics demonstrated a 4.2x growth in deep tech over the past 5 years. In comparison, the European average is 3.6 and the US average is 4x. So we're actually performing better in terms of the growth of the deep tech ecosystem than some of our most important and strong frenemies, if I can say. And Sandra, 2 years ago, you started thinking about launching a deep tech fund. You've sensed this potential of deep tech in the air. What are the origins of the Baltic Sandbox Ventures and how did it all come together?
Yeah, because everything else would have been too easy, right? You need to go to do the hard way.
One of the hard quests.
Yeah. Well, actually, if you take the helicopter view at our ecosystem, and not just like startup ecosystem, if you take the helicopter view on the country level, deep tech is not just startups. Deep tech is not about putting screens on databases and trying to pretend that you're saving the world and saving lives and so on. Deep tech is a huge part of the economy, first of all, because we are talking money, we're talking new technologies, where the patents and the origin of the technology stays in the country. When we are talking about deep tech, we are talking about the defensibility of our country. And with the war at our border, we pretty much understood, I think, like 2 years ago, that we weren't ready. No one actually expected this, right? And if we're dependent on the technologies that are sold to us by other countries, where is our independence in the political sense, and where is what happens if we have a war here? How can we defend ourselves? So, and deep tech is actually much more. Deep tech is about healthcare. Deep tech is about education. So it's not just money, it's not just defense, it's transforming the whole country, it's transforming the economics, and at the end of the day, it's transforming society. But early stage, right, you have to start somewhere. I was looking at the ecosystem, and if we want other funds, to unlock the deep tech potential and their later stage funds, we need to build the grassroots. And no one wants to do this. I mean, it's not that we decided to be heroes and volunteered, but really, like very early stage deep tech startups. When I talk to other investors, my friends from US and Israel, they said like, what? No, don't go there. Otherwise you won't have, your life anymore and nothing else. So yeah, so this is how it started, because easy is too easy.
Easy is too easy. So what I like about Sandra's point is that if you look at the history of Silicon Valley, and how Stanford graduates came back to their dean to thank the dean for bringing Hewlett and Packard together, and they donated a bunch of money to Stanford to mentor other young electricians, how Fairchild Semiconductors moved east to west, and how NASA started buying some of the first contracts for semiconductors, which really gave the boost to the ecosystem there. And venture capital followed to support those young engineers. It's very deep techy. And in one way, you could argue that the growth of Silicon Valley was incentivized by Soviets launching Sputnik into space. And the US going on this massive innovation shift to try to catch up and put the man on the moon first. And the reason I'm highlighting space is obviously because I want to talk to Vytenis, who to this day is one of the few founders in Lithuania who actually managed to deliver us a deep tech exit. So Vytenis, how did the miracle happen?
Look, it's a very long story. Maybe you have other questions.
Yes. What should others follow and do to follow your example?
In fact, it's a very long story. So once I get a bit, too much in details, please stop me. In general, entire thing, nanoavionics, was totally passion-driven. I mean, we started the business just because we didn't know how hard it will be. I mean, if I knew by then, it's like around 2009, right? I would never go into this sector in Lithuania or elsewhere. We were students, we did some students-related CubeSat small satellite programs. We were behind the first Lithuanian CubeSat mission, which was called Lithuania Sat-1. And it was really intense period, like 3 years of intense work, no families, anything. And suddenly it's over. And what's next? We came in a very interesting situation where, I think all of you know that, let's say, emptiness, right? Once you finish something. So in 2014, Agency of Innovation, Science and Technology offered a grant to commercialize R&D. And that was, I would say, initial impulse. I mean, of course, the right staff, right, the right colleagues, we grasped this opportunity, and of course we applied. We got a tiny grant of 21,000 euros by then, but that gave us a huge precedent to push forward. So that's how it began in general.
And when venture capital come in, and how did guys like us help guys like you, if in any ways?
That was a very interesting story. In general, myself and my colleague Linas, who were two of 5 initial co-founders, we were a little bit, more business-driven. So Linas is a financial guy and business guy. I was something, in between, a manager with engineering background. So I could, let's say, integrate those two worlds, business and engineering, because they always compete, which is better, which is smarter. So I was in between. And Linas found an opportunity. By then, it was Practica Capital and Donatas in front of these guys, and Anatolius. In general, we proposed the idea that we're going to create multi-million business, space-related business in Lithuania. And in general, out of those, I don't know, tens or dozens of opportunities we had, they were not laughing of us. So, that was the beginning, and actually, thanks to them, they believed us, actually. So first investment came in early 2015. I think it's official. It was roughly, rather standard, 200K something of investment. By then, it was a huge money. We were very lean. We were very effective because we were passion-driven. We used that money only for really crucial things like, hardware, prototyping, etc. And yeah, that was the very, very beginning, the most important impulse in our life.
Awesome. So let's stop here a little bit with the nano story, and let me turn my attention to Alex. So Alex, you sit in Amsterdam, you work with Dealroom, you look at a lot of data happening in Europe, and all of a sudden you look at this weird country, Lithuania, with a space tech exit. We must seem crazy to you. But on a serious note, how does the world look at the Lithuanian and Baltic deep tech, and what do you guys think about us?
Yeah, that's a great question. At Dealroom, just to give a little bit of context, it's a data platform for startup information in terms of funding rounds, tracking startups. My role within Dealroom is looking at startup ecosystems, such as the Baltics, like we've done for this report, and deep tech, like we've done for this report, all across the continent, be it on a city, region, state, country, continent level. But whenever we're looking at the state of deep tech in the Baltics, it's not necessarily so much of a surprise that there are success stories, there is funding going into these startups, because, quite frankly, the governments and the infrastructure here is making it very easy to do so. There's a lot of accelerators, a lot of incubators, a lot of local investors are willing to invest and take chances on deep tech opportunities. Which is something that, in terms of how international investors and ourselves looking at these startup ecosystems look at the Baltics, they do perform very well, and they're very well known for success stories such as Bolt, such as Skype. So they're not an unknown player necessarily in the European startup ecosystem, and deep tech, as we showcased in the report, and as you mentioned in terms of the growth rate of deep tech in the last 5 years, the Baltics is outpacing the growth rates of other sort of larger European regions, which we see is, complements your question in terms of, is it a surprise that there are funding rounds going into deep tech? And frankly, that it's not, because the infrastructure and everything else is building for that to be the case.
Awesome. So I'd like to put another sort of like selling point to our audience in here, is that the world is recognizing the power of the Baltic deep tech, and we should continue pushing and pressing the pedal to the metal I think, in this asset subclass. And now let me turn my attention to Žygimanta. So Žygimanta, you've delivered Fund 1, awesome vintage. We've seen some real photonics companies, laser companies, robotics, AI. You understand deep tech. and now you're raising fund 2 on deep tech and AI.
Yes.
The Lithuanian idiom, lipti ant to paties grėblio. Why would you step on the same rake? Why would you do something that's so complex again? Where does the mission come from?
Yeah, I think, there are a couple of reasons. First of all, deep tech and successful deep tech, it relies on, cutting-edge technology as competitive advantage, right? And if you make a very good product, and of course, making this product takes much longer, compared to some SaaS company. It can take 3 years, even more than that, to go to industrial grade product. But once you do it, and most of the time, this product, it solves a really, really big problem for society. So it has huge value for society. And once you have this product, so, going to the market, it is much easier. And you do not have, to spend lots of money on marketing, right? That you would do in some other cases, right? Like marketplaces or some SaaS companies. I think this is one thing. Another thing that in our portfolio, we see that out of those 22 investments that we made, so deep tech and AI, but those startups that use AI as a core, right? They perform much better compared to the rest. So I think we already have a track record that it's not only interesting to invest into such startups, but they also are delivering results. And at the moment we have 3 startups that have completed Series A. And all of those are either deep tech or AI. And we'll see that another 3 to 5 companies would be completing, Series A in the coming 2 years. And most of them, again, would be deep tech and AI.
Awesome. So let me just reveal the sort of like the 5th screen and tell you about the conversation Žygis and I had backstage. And we're trying to count the deep tech exits in the Baltics. And we thought, okay, Fermentas, Thermo Fisher, okay, Milgram Robotics, obviously Nanoavionics, and we're like Skype. So I think that if you go back to Skype, Skype was deep tech, is deep tech, right? And it gave a massive boost to the Baltics. But we always have this challenge of when we as the early stage investors sort of like pick up a lot of work, punch above our weight, try to push our babies out into the world, we need foreign investors to pick it up. And so another backstage question I've asked Alex to prepare for is to talk to us a little bit about the division between the local, regional investors picking up the brunt of the weight versus international investors. What's the situation today? Who is building or financing deep tech in the Baltics?
Yeah, that's a great question. So looking specifically at deep tech, DRM tracks over the last decade, over 500 funding rounds have gone into deep tech startups in the Baltics, HQ'd, or have since founded in the Baltics and since moved on. And what we see is that in the early stages, it is true that 2/3 of these funding rounds of the 500 are coming from local, domestic, or European investors. And about a 1/3 proportion is coming from the likes of the US, Asia, and other parts of the world. This is a similar trend that we see in other sort of segments, other industries and verticals, not only in the Baltics, but also across European ecosystems. European ecosystems, especially when it gets to a larger stage or a later stage of funding, there is a requirement or there is more of a need for funding to come from external sources. So it's not necessarily just a deep tech issue in the Baltics. Though we do notice the difference between funding rounds going into Baltic startups and funding rounds going into deep tech Baltic startups, that there is more of a support from local and domestic sources. This can be due to the nature of deep tech, as you were mentioning, the fact that it's not necessarily just a SaaS model or something that's very easy for most investors to understand. There is an element of risk. There is an element of understanding the technologies or the concept of the startup, which is sometimes harder to grasp with different startups there. So that's what we would sort of attribute in terms of the reasoning for the differences. I wouldn't necessarily say it's a Baltics or a deep tech related issue. It's continent level wide. But I think the Baltics, from the startup founders creating innovative technologies and the governments putting the infrastructure for that to happen and seeing that growth rate, is showing that, I think in time, with a matter of patience and explaining these concepts, is that the later stage larger investors from foreign sources will eventually come into play.
But if you had to put a number on it, is it like 40-60, 50-50? How does the distribution?
Yeah, about two-thirds is
okay.
coming from domestic and sort of European local investors, and then the remaining third is coming from the US, Asia, China, and other sort of undisclosed sources.
Awesome, thank you.
I think, you need to distinguish between early stage and growth stage, because I think, composition would be totally different. Like an early stage would be like more local, growth European, and breakthrough would be European, and growth would also involve large US funds.
Of course, yes, and that is sort of the theme that's seen across all startups, and particularly in deep tech, that in most European startup ecosystems, it is the local and domestic and nearby investors who invest into different startups, and then once they've got enough recognition, enough funding, other sort of larger investors will come in to provide that sort of last step for success.
Sandra, you work a lot with international investors. Obviously, even at the acceleration incubation stage, you're already putting people in touch with people abroad. What do you think is the secret or the recipe for attracting more international investors to Lithuania to come in at earlier stages, or potentially at picking up where we start and then building it later? What's the recipe?
Well, first of all, it's the opportunity, right? Because we are building this before we actually started, growing this grassroots, very early stage startups and everything. All the investors I talked to, for example, from US, they were looking at Baltics. Yeah, you probably have some tech there, probably not, probably we are not interested, and so on and so forth. When I started speaking about like 60 early stage startups in Baltics, investors became really interested. They're like, oh, 60. So some of them will get some further rounds from the funds. It means that some of them are going to grow. It means there is an investment opportunity for us. Because those guys whose investment starts from 5 mil, it doesn't make sense for them to kind of come and look at the startup whose valuation is 3 mil or something like this. So yeah, so first of all, the growing size of the opportunity in terms of the headcounts, because those startups who are going to fail their product, and some startups are going to definitely be there, they're scientists. They probably won't stop. They'll join the team of other founders, they'll do something. So the more you invest in the grassroots, the better ecosystem you have at the end of the day. And additionally to this, it just needs time. Because now how the market looks like, if we're talking, for example, dual tech, I would ask you 5 years ago about dual tech, you would tell me what? That there are governmental agencies, big companies that are working with the government, and there is no place for a startup there for 2 reasons. No one would allow the startup to do such things, not to mention regulations and everything. And secondly, no one will invest. They won't get money. What are we looking at now? You saw the list of the dual tech startups that is impressing, and it's getting more and more impressive each day. And investors in Europe and US saw a huge opportunity and started kind of investing money in it. So time and size of opportunity.
So let's put the deadline. 5 years for another exit?
Probably,
right.
Very likely.
So we'll try to deliver it to you in 5 years' time. Vytenis, you've dealt with a lot of foreign investors. Can you tell us about your dealings with them, what attracted their interest in deep tech made by you in Lithuania, and how did the exit happen? And what are the lessons to learn for all of us from your exit?
So we had quite a few of the investments rounds. So starting with local, of course, early stage, and that investment was, of course, driven by maybe other factors why those investors decided to invest. I mean, practical capital. Of course, they should have seen a lot of risk in us, of course, but somehow, yeah, they granted the investment. Second round happened after 3-4 years into the business. We started to look for the exposure to US market. Doing a deep tech whether it's civil application or defense application or dual purpose, it's quite hard to enter the US market. And we started to look how we can do it. Because in general, in deep tech industry, half of the world is within United States. The rest is elsewhere. Middle East, maybe Africa, maybe South America, maybe Australia, a little bit, you know, in Europe. So we felt that it's crucial to enter that US market, and we started to look what we could do there. And we came up with a few contacts who in general needed, I mean, that investor, AST and Science, they needed to have a local capabilities of manufacturing hardware, firmware, and software. Since we were in the right stage, right, not too expensive, not too big, not too small, they decided to invest. And in general, of course, the requirement was quite tough. They wanted to have a control interest, but in general, all of the other benefits they could and they provided were really making building gain for the company. So that was a second round, right? The last round, which happened last year, we in general sold the control interest and quite a significant part of the smaller shareholders to a huge defense group, Kongsberg, which is in general a corporation, 10,000 people plus, you know, defense stuff, etc. Because we felt that it's time for some kind of consolidation of our business, and in general there is a trend in the space market in this period of time of the consolidation. So in general, the market is relatively young, and we can still see some things we've seen with an aviation industry, right, 100 years ago, where airliner manufacturer opened their own airlines, or vice versa. Airlines are building their own airliners. So we believe in that consolidation, and we felt that it's time to join the forces with the big brother. So we started to look for the big brother by the beginning of 2022, and actually the process was quite quick, and within a half a year we became a part of the huge corporation, which is in fact also supplying an air defense systems. For example, for Lithuania, the same air defense systems as shielding Washington DC. So in general, nice. Yeah, we joined the huge defense group, and in general, entire space business, because of Ukraine, is turning towards defense.
So a general warning to everybody in the hall: we're about 10 minutes away from your lunch, so give us 10 more minutes, but we will switch our focus into helping founders now. So let's dedicate this last part of the panel on tips and tricks for a few people in the audience who don't want to build a marketplace or a SaaS and want to go into a garage or into a lab and deliver, you know, deep tech. And one of the things that we touched upon today is that deep tech is different because it's mission driven, because it's geopolitical sometimes, and because it adds sort of like moats or even competitive advantage to nations. Right? And it's all startuppers, founders, engineers who are delivering it. So whoever wants to pick it up, tips and tricks for young engineers and young startuppers who want to build deep tech. How can they start? Where should they go? What questions do they need to ask? Any tips?
I think that, you know, the first advice would be, you know, that if they want to build, you know, true deep tech or, you know, AI company, they need to think big. They need to have global ambition. And, you know, once they develop, they also need to think that if they need some talent, they need to think about the global world and source it from anywhere in the world. Right, and if to talk about fundraising, I think at the beginning it would more depend on local capital, but even from the very beginning they need to think, you know, what they need to achieve in order to be interesting for large European or even US investors in 2 to 3 years' time. And to have very, very good plan for that.
So ambition and good fundraising early on. Sandra, what are your tips?
Well, you saw our pipeline, right? Like in each and every team, we have a scientist or someone who is like close to science or something. And in some teams, we don't have like even proper business people because scientists think, okay, so first we will develop the product, we'll do all the R&D, we'll do all the stuff, and we'll test it, and we'll say that it's going to work 100%. And after this, we'll hire some business developer, and probably this business developer is going to sell our product to someone. It doesn't work like this. So I'm not the type of fund that will tell you that you have to go and sell the half-baked products, you know, because that's the second part of the advice, basically, but we'll go there. But as a scientist, you have to think from the very, very beginning about the commercial application, about the cross-vertical, cross-dimensional commercial application, in how your product can kind of change the industry where you're building this technology or product or something. That's the first thing, because the more changes you can bring, the more other technologies are dependent on your technology, well, the more chances you are going to be a unicorn. And the second thing is find the right investor. I've seen several deep tech startups that were killed by the wrong funds, let's put it like this. Because deep tech startups need some period for R&D. Deep tech startups need some period for some sort of the protection, be it patents, trade secrets, something. At the end of the day, if the investor is a generalist, investors come into the deep tech startups, it says like, yeah, you're doing good technology, here is some money, go sell. And then the whole team of the startup is going on the journey to trying to sell this technology to someone on the market, and technology is not ready yet. At some point, they bring the LOIs to the investor, and investor is happy, like, oh, good guys, you kind of brought me some LOIs and so on. And then what happens? They run out of money. And they come back to investor and they say, like, look, we need kind of some money to invest in this technology, otherwise we don't have the product. And investors said, like, where did you spend the money? You don't need the money to you know, invest in technology. You need to go and sell. And then, yeah. And then the startup is dead, the investor is unhappy, so choose the right investor. If investor says, I'm going to invest money in you, but my money should go into sales or into marketing, not into R&D, just run.
Actually, maybe be able to build specifically on that last point. Just again, coming from Dealroom, the data provider for startups, funding rounds, we also have information on thousands of investors across the Baltics, Europe, the world, etc. And I think it's a very clear point that you're making, the fact that you know, it's core that you find someone who is alongside with your mission and understands what you're aiming to do. And on the platform, you're able to review and filter down by the location of the investor, of their experience, how much they invested to, the type of funding round or the size of the fund that they have. And with this, you should be able to get a little bit of a better understanding in terms of the profile and the information of the investors that you want to look into, and then see what would be the best match for what your mission is as a deep tech startup or as AI-related or enabled startup, and finding the best investor profile for yourself.
If you'll allow me a quick tip and trick from my end. So when these two people in the audience were building deep tech, right? When you go on Dealroom and find the investors you want to talk to, ask for a warm introduction. You have 5 beautiful people on stage who can help you with those introductions, but ask for the introduction when you're ready and when you know you can defend your thesis of deep tech. But we will help you, because the point of this panel is to actually show you that the ecosystem has reached a point where we're willing to throw a lot of resources and support to support young deep tech founders to build global businesses. And with this in mind, I like asking this question, so Lithuania, I'll ask you this question. Hypothetically, if you were to do it all again and to build a deep tech company with a successful exit 10 years ago, what would you tell yourself? What would you do differently? How would you start?
I would say I would tell to myself 3 things. First thing, don't do it.
I love it.
Don't go there. But if you are there already, there is no way back. I mean, full dedication, 100%, 100% requirements and expectations from your team members. If you see underperformance, act quick. get rid of them. I mean, you have to be polite, you have to be honest, but if someone is underperforming, say goodbye right away. Second thing, business focus. You don't do things, engineering, software, firmware, just because it's cool. If you want to do cool things, you go to the university, you do your PhD, whatever, you read the articles, I don't know, somewhere in the internet, right? But everything is business driven. You ask yourself what value you create, what the market need. You always ask this question. Third thing, you get things done, right?
It's done.
It. No matter what, you get things done. There is no excuses, there is no exception. Otherwise, the reality, the harsh reality of the world will blow you away. I mean, you are dead. That's it, 3 things.
Awesome, and I'm a part-time entrepreneur myself in addition to Baltic Sandbox. And one thing I tell other founders is also don't do a startup. It's a sexy asset class. A lot of people look at TV shows and think that it's awesome, but you don't understand that you tie a decade of your life to one thing that you always go to sleep with, and you can't get it out of your head, right? And no matter whether it's going well or bad, you have to be mentally ready for that decade and for a journey. So don't do it is a great advice, I think. You want to add to that?
Yeah, I'm always telling this to the founders. So as an investor, like, please don't do the startup. And also there is the success bias, you know, so you read all this like media and everything, and they write about the successful startups. And you start feeling that all those startups around you are successful. Just because no one knows about the startups that are dead, that is 99% of the startups probably. So yeah, so if you have an opportunity not to be a startup founder, don't be a startup founder. You will have a nice life.
But I always add the second part. So don't do a startup, and particularly don't do a deep tech startup unless you absolutely have to. And that's where the mission comes in, and that's what changes the game for a lot of deep tech entrepreneurs. And we're about to get kicked off stage by Startup Fair personnel who are screaming at the screen here with 27 seconds left. So I'll quickly sum up what happened here today. So Žygimantas and Alex showed us some really positive numbers about the strength and maturity of deep tech ecosystem in the Baltics. We're hoping to sell these numbers to more deep tech founders and to more international investors to come and co-invest with us. Vytenis told you about a perfect case of building and exiting a deep tech company in space in an ambitious domain. It's possible, it's been done. He's a role model. Ask for his guidance if you're a young founder. And Sandra has indicated all the possible benefits that the Baltic Sandbox Incubation Acceleration can offer for you at the very early stage. So, in conclusion, deep tech in the Baltics looks good. We're demonstrating leadership, and we can bring up an awesome power geopolitically and technologically if we all focus and come together as a deep tech ecosystem and unlock a 400 million opportunity over the next decade. Thank you all. You've been wonderful. Thank you for the panel.
Thank you.
Let's go grab some beers.
Sandra, Alex, Žygimantas, Vytenis, Dominykas, it was a pleasure to have you here today. So let's continue. Join us for a dynamic panel discussion on emerging technologies. Our experts will explore their global impact and Lithuania's role, discussing growth potential and challenges for local businesses and startups, both locally and internationally. So please welcome Justina Klyvienė, founder at Health Tech Accelerator. Martynas Kanzeras, founding and board member of the Lithuanian Business Angel Network. Laima Balčiūnė, CEO at Sunrise Tech Park. Moderator, Kamilė Mazrimė, Head of Partnership and Communication at Rocket. Enjoy.
So, hello everyone. Hello, great team. It's really a pleasure to meet you. We just had a great panel discussion about deep tech, so now we're going to talk about soft tech, a little bit softer than it was before. And I'm sure you believe that, you know, technologies like clean tech, head tech, and health tech are shaping our future. And there are a lot of techs now happening around, right? You name it, right? So I would like to ask you, so what's unique in each of the sector that you represent, from clean tech, health tech, and ed tech? Laima, let's start from you. So what's unique in the clean tech?
Well, it's very unique. Everything is unique about it, actually. And I would say most importantly is that we are experiencing very fast climate change. And every one of us, also industry, businesses, everything has to change. And this is a challenge that we have never experienced. And this is a project also by 2050 to reach the net zero. So this is very unique because it concerns every one of us, all businesses, all the planet. So.
What about health tech, Justana?
You know, it's a very difficult question. It seems so that it's easy to answer. But I think every one of us are related to health, and we really need to take care of it, and major changes happening within the industry. So I think it's a very good time to innovate it as well, and that's why it's unique, but at the same time super important. I will dive deep into the details later on, but actually the uniqueness is that people learn how to be a doctors and nurses, and now they need to learn how to be an innovators, and it's completely new topic and challenge for them.
Martinas, what about EdTech?
You know, when you say education, so something in people ticks, you know, they say, wow, education, it's like deeper purpose and etc. But if you look to EdTech, so it's the least digitalized sector in the world, so first of all, and there are a lot of emerging technologies in the sector, like ChatGPT, like AI, like virtual reality, augmented reality, and etc., which could be adapted in the sector. So there are huge potential in it. And the last thing, you know, the COVID changed a little bit. Now, of
Not
course,
a little bit, I guess. It
yeah,
changed quite a lot.
Bouncing back, but you know, this mindset, everybody was saying, you know, it's quite difficult to change the education sector. And now what we saw during the COVID, but it is possible. So, and I think it brings quite a huge potential in the sector. This technology, mindset change, and...
And just before coming to the stage, we also talked about students, about the education type. So do you also think that, you know, the new generations that are coming to universities, that are coming to the workspace, are they changing also the demand of new things, of new technologies in the market?
I think we are not looking for degrees anymore. We are looking what we could acquire, some kind of skills. So I saw the report what the young people who wants to study in the college or at university is decreasing, the number of them. So we need to propose something new for them, you know, maybe some learning platforms or maybe some nano learning and etc. So I think it opens quite a huge possibility to think and just, you know, yeah.
I would like to add to that, coming from health tech industry, we know that all these challenges, they motivate people to join and to learn. So challenges-based learning is the next big thing, I guess. So that's why our industries is a little bit interconnected. At the same time, I can see that when you organize any event in health tech, a lot of people are joining just because they want meaningful activities. They want to dedicate their time where we can make a huge change. And I think this industry is one of them.
Yeah, great. Okay, then let's go to clean tech, Laima. So let's go to Lithuania. Let's say, could you tell us some success stories? Because you just mentioned that, you know, it will impact all of us, and we want that or not, we'll have to change something. So do we have already like success stories, you know, the startups that already did something innovative that completely changed the way we could behave, and how does it also align with the trends in the globe?
Yes, we do have success stories. And actually, the only one unicorn in Baltics is in Lithuania, which is Vinted. And it's working in resources in the circular economy field. How we put in several sectors clean tech, three major sectors in Lithuania are energy, e-mobility, transportation, and resources. So in the resources we have Vinted. Also we have quite a fresh new success story, PBKs, which again shows that it is not only about one sector, it's not only about energy, it's also about IT. As PBKs is solar panels design, solar parks design software company, and I think everyone knows the quite recently attracted $100 million United States dollars, which is one of the biggest investments in Lithuanian history. And again, another huge investment for Winded. And I can name companies like Inian Software, Imbalance Grid, Ovoco, and others, many that are working in these three fields. But only taking these fields, we have more than 50 startups in Lithuania. But other than that, we also have sectors of chemicals, materials, and others. So, yeah, we are quite booming. Currently, well, we still compare ourselves with Latvia and Estonia. It's well, but we are one region, and usually we look at ourselves as a one region.
Yeah.
And when we compare ourselves as a region, we compare ourselves with France, with the Nordics, and others.
And what is trending, you think? What technologies or what kind of startups are trending globally? You know, where we have to look.
Yeah, it's Winded. It's Winded.
It's Winded. Yeah, it's Winded, but they are Lithuanians, right? But what examples you could give? I don't know, from US, from west of Europe, from Asia.
Well, mainly sectors are the ones that I mentioned, and well, we have global funds like Breakthrough Energy Ventures, which was established by Bill Gates, and Breakthrough Energy also is a philanthropic fund. They are establishing organizations like Cleantech for Europe. We in Lithuania representing Cleantech for Baltics, Cleantech for Iberia, for Nordics, and so on and so forth. And dominating sector is still energy, because we are very much dependent in Europe still on Russia. But again, Lithuania is a very good example, a pioneer of how to get rid of Russian dependency. And perhaps everyone knows that we made a very successful test. And in 2025, we will just cut the Brel circle, and we will start the synchronization with European network. And speaking of perhaps opportunities for startups, let's say, we have quite unexplored field of energy storage.
Yes.
Yes. So
I think that's going to be the future problem. So
yes,
where to store that energy,
yes,
right?
This is new black.
New black. Yeah.
Yes. So and Lithuania again, the first one in the Baltics, and I think it's the only one as not other TCOs in the Baltics did that. So Lithuanian TCO Litgrid, together with Flanco, another company, they deployed 1 megawatt battery energy storage system. So we can call it a testbed, a sandbox, an open innovation platform or infrastructure. But science, businesses, manufacturers, any actors in the market can test it for their own future innovations or breakthrough innovations.
Okay, so probably we're gonna store, I don't know, sun from Spain to Lithuania.
Yes, yes.
Let's see. Justina, I think I assume that in the past decade, health tech was really demanding new technologies, and a lot of things were happening, and also COVID also added something in that area. So what do you think that makes Lithuania as a very, very good place for these technologies, and where the potential lies?
Oh, very good question. I have so many arguments why we are...
Tell us.
Why we are super good market. First of all, we are small, we know each other, and to build an ecosystem network, it's quite easy. Our regulations, maybe they are not so strict as others. If you are building startup and you want to, establish good business, basically you need to test your product and services. So in the health tech industry in other countries, it's like super difficult to do it. In Lithuania, we can do it, and we can arrange. And I think governmental support as well. Health tech is one of the priorities, so it means that financial mechanism will be set, and interest from governmental side will be high. So basically, another thing, fintech experience. So tech personnel, we have very high level. We are well-educated country, and so on and so forth. So basically, all components which you need to start in this very, very well-regulated and very difficult area, it's better to do in small country rather than big, because it's easier for you to establish.
Yeah, it's like a sandbox.
Yeah, exactly. And I used to be in Portugal and other countries, and they always say, for instance, from Spain, people are going to Portugal because it's a small market, 10 million. So I always say, just come to Baltics, come to Lithuania, and you will see what you can do.
But isn't that also a challenge for the startups because of the small market, and they can't scale, they don't have so many clients, right?
Yeah, but I think from baseline perspective, we are very well established. We have universities, we have scientists, we have a strong investors ecosystem, and everyone are eager to invest in this area. So from one perspective, if you want to scale, then yes, for sure, Lithuania may be not the end market, but the first one, it might be. And if you want to test your solutions in safe environment, I think it's a perfect place to start.
Martinas, what do you think? In EdTech, is it Lithuania a perfect place to start and then to scale? And from investors' perspective, you mentioned that it's the least technologized, right, sector, digitalized, yeah.
Yeah, I'm a business angel and I'm investing in EdTech and I believe in this sector. And the question is, we have a potential big in the globe, but when it is, we need this potential to meet with opportunities. So are we capable of creating these opportunities in Lithuania? And my answer is yes. And why?
Why?
Because, everything starts with the people, and everything starts with strategical intention. So we have a lot of stakeholders in the ecosystem, like government, like investors, like startups community, EdTech association, etc. So it is exciting, but we all agree what we need to create this EdTech vertical in Lithuania, and maybe in the region, and become the EdTech hub, not only in Lithuania, but also for the region, where we could attract talents and work together and create EdTech startups. So, and it starts with the agreement. So this agreement is already done, and now we are moving to other stage, to do something about it. So I think what it could flourish. And in any case, at the moment, EdTech Association formed a new board, quite strong one. And in Lithuania, we have 50 plus EdTech already startups. And as I am, investing in EdTech startups, each week, I think, receiving 1 or 2 pitches. So I see what more and more young people are willing to create something with a purpose. So I'm thinking, okay, so maybe marketplace is already crowded markets, So why not to do this with something purposeful? And you said, what about the young people? So I think young people are already looking for some purpose in their life from the beginning. So, yeah.
So, okay, I cannot be expert of all these sectors that you are in, but I'm very curious. So what kind of solutions or the products are EdTech giving to people, what could be very interesting examples that you could share with us?
We could say Lithuanians examples. For example, Turning College. So it's where you could receive degree for university, not without, lecturers, actually. So you just, receiving the knowledge from your peers, and then you're receiving degree of what you finish, let's say, university. So when Turning College is Lithuanian startups, which was first, which participated in Y Combinator. So we could talk about Membi or DigiClasse, which I think a lot of you know, and we received investment from Bright Eye Ventures, so it's one of the biggest VC in the world, which invest in EdTech startups. So there are free groups, there are Be Bright, there are schools, and what we are doing, so we are doing personalized learning platforms for children. So what I'm seeing where, startups could be created, so, EdTech is quite a wide range. So we could talk, if we are talking about tech, a lot of people are thinking, you know, it's about schools. But no, it's about the long life learning, not about only schools, but also about the corporate learning, about upskilling, reskilling, and etc. So let's talk about key 12 of these schools. So where's the need? So I think a lot of you hearing what teachers are overloaded with their work. And this work is overloaded with a lot of technical stuff which they need to do during their daytime. Bureaucracy. So there are systems who already help them to ease this workload for them. For example, to create even the content for the class, or to evaluate the students when we are submitting some assessment. Also, personalized learning is also one of the areas which could be explored, because we could receive a lot of data from the person who is learning, and then adapt some materials to them. Because, you know, some of us are better of reading, some of them of us is better of listening. So then when we adapt, so then the learning curve starts to be better.
So you, Martinas, were talking about Lithuania as a tech hub in the region, right? Justina, what do you think about health tech? And you mentioned that there are a lot of stakeholders, that they are willing to do something. So is it there our potential, or how we could, you know, be brighter and more visible in the region and in the globe?
I think, you know, if you want to build a cathedral, first of all, you need to put a lot of different bricks. So what is happening currently in our system, what I can see, all different initiatives, we are bringing our own bricks, and we are trying to increase this baseline. And I'm super happy about it, because instead of like scarcity mindset, we are incorporating abundance mindset, and we really try to build these different initiatives and expand this value chain for our startups. So I think this thing is happening quite fast currently, because different stakeholders, we started to talk together, we started to think, okay, you are doing this initiative, I'm doing that one, how we can cooperate. Because actually what Martinas mentioned about startups, so most probably I am receiving calls from different stakeholders within a health tech ecosystem, and they all are super interested how we can cooperate. So I think what we can do now is this radical collaboration. Then we will collaborate with each and everyone, then we can become stronger as a nation, as a region, and then we can attract. Because I think when we focused our resources, our intention, then the magic happens. And we have so many success stories, for instance, you know, in different ecosystems. In Netherlands, we collected via efforts, universities, private initiatives, and we built a health tech ecosystem. We have other examples. The similar example from Lithuania, FinTech. When all stakeholders cooperated, we built something. So this is, I think, very important thing.
So are we competitive compared to the other markets? Yet?
I think that we are becoming, because a lot of startups, they face huge challenges to test their prototypes, to test their initiatives, to reach out to investors to whom they can talk and like get feedback, you know, early evaluation. And here in our market, it's happening already. So I think that we are competitive. What we still lack, most probably, we need to organize our health data, we need to work, we need to agree some schemes how we will do it, because data is the most valuable asset, I believe. When we will have all these things organized, then we can attract even more startups. And as an initiative, as health tech acceleration initiative, we're also thinking about it, and it will be our next step, what we are going to do.
Yeah.
Yes.
You know, I was on consultation at Judge Business School at Cambridge University for one professor, and asked, you know, what we need to build a good ecosystem, you know, in every country. And he looked at me and said, you know, you need the crazy dedicated people or team or leaders who could take a responsibility and lead some verticals and build something. So, you know, Justina took responsibility of health tech, and I think he is quite a good example, you know, but we are not waiting for some government to do something or some markets to do something. So here's people who are doing already and taking this leadership with dedication. Lima is doing with clean tech and taking leadership of clean tech, you know. With EdTech Association, we're taking responsibility of EdTech and development at EdTech. So I think what we need in ecosystem, we need leadership, and when everything, you know, will be in place. So when we will find the stakeholders, when we'll find the resources, when we'll have international partners. For example, we said what we want to build with EdTech region hub. So we're already in talks with some international participants who maybe would like to come here in Lithuania and to do something. Let's see, maybe
like
it
to
will happen.
do a startup, to do a product.
And to build ecosystem, but ecosystem, not local ecosystem, but the region ecosystem. And then we could invite, you know, people from the region to come and to build here EdTech, clean tech, or health tech startups. And here is the case, you know. We had this Grand Duke Gediminas who wrote, you know, the letters and asking, you know, people to come to Vilnius. So we could do the same. So we'll write the letters and ask, you know, startups and VCs to come.
Going to use ChatGPT?
Yeah, so
why not? Yeah, totally. Because I think ecosystem starts from people. So if we are taking leadership of different areas, it's already started. If we align our vision with governments, with private institutions, then it flourishes. So yeah.
I have also a question for Lima, because you also talked about the governments, about the help, about the ecosystem. But with the climate change, there comes also EU regulations, comes EU Green Deal, and I guess there is a lot of opportunities for clean tech startups, right? So Lima, could you give us a brief overview how we could use that Green Deal, how it can help, you know, to get investments, how it can help for our startups to flourish?
Yeah, so as the climate neutrality is the #1 priority on the European level, so everyone heard the Paris Agreement and everyone heard Green Deal. At the beginning of this year, European Commission also introduced a Net Zero Industry Act, which might be it was a follow-up by the Inflation Reduction Act, which was introduced a year ago by the United States, and we are kind of trying to catch up with the United States, but we are a little bit lagging behind. Because of the Inflation Reduction Act, there were several companies that just left Europe and they moved to US. But still the new Net Zero Industry Act, it will be in place, I think, at the end of this year, because currently we are having negotiations between member states. And again, Green Deal and Net Zero Industry Act, they are both are backed with funding, with money. And money, actually, it's quite interconnected. It will be for upskilling and reskilling as well. So there will be opportunities not only for clean tech, but for EdTech might be as well. I would just recommend for companies just to take a look at what's going on. And even if ACT is more oriented to renewables, to manufacturing companies, to put all companies onto a green transition, still there will be lots of place for startups. And of course there are
of EdTech hub, which we want to create, the region one here in Lithuania, it could be a good start. We could invite not only Lithuanians, but also other people from other regions in Europe to create the EdTech ecosystem.
Okay, thank you, Martinas. Stina, your vision.
Yeah, I dream that one day I will open my eyes and I will see doctors and nurses saying that we are entrepreneurs, we are innovators, we have an ideas and we want to implement them. So my dream is that not just we, but when tech people and design people will join these forces together and we will have like real health tech, which is based on good design, user experience, and all of them collaborate together, as Martina said, not locally, not within the Baltics, but really globally. And we have talents. I strongly believe that within this audience, we already have a bunch of people who are these people. So, yeah.
Oh, that's a great
dream.
one. I really like it. See you, Dr. Entrepreneur. Why not? Laima, your vision.
Well, I will start from a high level. Last year in Davos, Ursula von der Leyen said that history of clean tech will be written in Europe, not in China, not in US. Even now, Lithuania, together with other Baltic countries, considering all the numbers that we have in terms of startups, in terms of ambition, in terms of entrepreneurship and so on, we are already punching above our weight. I really dream and I really believe that Lithuania, together with the Baltics, we will be the new clean tech powerhouse of Europe.
Okay, that's a big ambition. Thank you, guys. That was really interesting to listen to those different sectors, and maybe somehow they even can collaborate, right? The clean tech, everyone goes to the better future. So thank you very much. Thank you for listening. I hope you enjoyed that. And see you later.
Thank you.
Thanks.
Justina, Martinas, Laima, Camille, thank you for your insights. And now the first fireside chat is waiting for us. This discussion will provide a deeper understanding of how the company's organic approach to growth, combined with strategic acquisitions and organizational setup, has built a foundation for a winning play. Let's welcome David Rainevičius, CEO at PVKs, and Arvydas Bložė, partner at Praktika Capital.
Hi everyone. David, welcome. Welcome on stage.
Thank you.
Today we're gonna talk about PVK Series B, I would say very monumental event in our ecosystem. And I'm Arvydas Bložė, Praktika Capital partner, the one investor for early stage companies here. PVK Series B, $100 million is I think had a lot of impact for the ecosystem, for the startups, for validation of Lithuanian founders and then kind of ecosystem effort, and also for investors, because PVK is the most valuable company backed by local investors. Probably it's second or third vintage fund managers going in the second and third vintage without truly having a lot of success stories. So PVK is kind of validating the patience of investors that were backing the funds alongside many other things. But also it's been transformational year for PVKs from the inside, thinking about acquiring Anderson optimization, raising around, I think it's very different cadence of development and understanding the way you run the company. So I think today we're going to cover a bit of that, cover a bit of Series B, and also kind of dig into more of a personal touch point, if you are okay to share.
Yeah.
So let's start with overall kind of understanding why PVKs is very relevant in the market right now, and why it is so, and what are the main tailwinds going forward.
Yeah, thanks for having me. I think 10 years ago, solar was totally different beast. Nobody knew about because it was highly subsidized by governments, so nobody was taking any care about optimization. Nobody cared about quality. It was just build time. That all changed 5 years ago, or maybe 6 years ago now, where subsidies were shut down. And then most of the investors started looking how we can increase return on investment for those projects. And the best way to do that using software solutions. So we started 5 years ago. We met probably 5-6 years ago. I was running consultancy before, doing all the work for those investors manually. Many drawings, many calculations, and then we decided to optimize some of the processes. And you and Rokas, maybe in the room also, convinced me to do a spin-off and create PVKs as a new entity. And yeah, very thankful for that. I think it was a good choice. And good journey so far. I think it took just 5 years to get where we are. One of the biggest solar software companies in the world now.
Yeah, so I think it's interesting to see, like, you raise a round and so on, but this is just like, it's a milestone, right? That kind of have a lot of things were set in motion, and this is kind of just a milestone in the company's development. And also probably important to understand that when we talk about PV casing with our investors in the fund, they're like, yeah, this is solar panel installation company or something. It's very hard to understand what PV case does. But ultimately, I think we have such a company in Lithuania, born in Lithuania, that kind of is very instrumental to achieve European Union's goal of net zero emission, right? So that requires a lot of solar alternative energy installation kind of deployment, and PV case is super, super critical to for solar, especially for solar, that is doubling or tripling per year.
Yeah, so I think everyone thinks that we installing solar panels on the roofs. That's not the case. PV case as a software is used to design those power plants globally now. I think we have clients from 80 different countries, from Japan to Canada, Brazil. Everyone is using it as a standard tool now. Some, I think, of the highlights that I felt throughout the years was, what's the standard, right? So like how to understand that you became that big player in the market. So I started seeing our clients printing like guidance books, how to design big-scale solar power plants using PVKs. And it actually printed client name to use PVKs to design. Then we started seeing that if those clients are looking for new engineers to join the team, one of the requirements, apart of language skills, IT skills, is to know how to use PVKs. So then for me, it was really interesting to see and get the feedback from those clients, especially in these like crazy locations like in Japan or South Korea. They're sending these photos of these power plants built in the mountains, and half of the mountain is cut. And they said, if not PVKs, if not your software, we couldn't build this. So it's many hours spent to design those, but a lot of intelligence in the software itself. That's like driving that.
Yeah, I think it's pretty interesting how you kind of fit in this $15 trillion deployed every year for alternative assets, alternative energy. PVKs also from day one we're heavily investing into R&D. So that's interesting point, because when we kind of invested in PVKs and when David and Doug came with the idea, right, it was this ground mount, utility scale ground mount, so meaning like you deploy solar park on the ground, right? And we understood this is probably not like a $1 billion ARR type of market. That's why it was very nice to see like how you were constantly deploying R&D for new type of products with a very clear vision that's software for solar industry, right? And right now, not only organically you're growing, but you're also having an acquisition. So I would like maybe to have zoom in a bit on this, like organic growth R&D versus acquisition and acquisition, and how was it kind of thought process in your head?
Okay, yeah. So I think when we met, the first question you asked, what's TAM?
Yeah.
How many licenses we can sell. And it was like, naturally, we felt that, you felt that it's not a huge market. So from not maybe day one, but maybe first year, we started developing new products that we are launching now. So it took 4 years to build those, but it's kind of piling up and expanding the TAM. So that was the idea, and I think we are starting to build new product every year that we are not announcing, but working with our clients to develop. We have R&D team working on innovation, on new features and understanding the market. But at the same time, especially after Series A, we started thinking about how to get to that TAM expansion or revenue faster. So building on your own or acquiring companies. So naturally, solar market is not that big. You cannot choose from thousands of companies to acquire, but we've been looking at the ones that have similar qualities that we have. So first, founder-led, motivated, running profitably. That was not a big topic, you know, 4 or 5 years ago when you invested, but now it's becoming as a main first question from each investor. Then traction, because you can look at the when I was looking before at the companies, I thought if they reach certain ARR number, then they have the market fit. It turned out to be incorrect. We learned that lesson. I think it needs to be at a certain level. That level is now when we're seeing at least 3 million ARR. This is when the company is reaching that mark that is becoming like known player, and the software is used quite well. So when we're evaluating those two factors, I think during the acquisition of Anderson guys I was underestimating how much time that will take. Now when looking back, probably would develop that product maybe in 2 years, 2.5 years, maybe 3 years. The process took almost a year to close. So it was super challenging because they are based in the US. It's quite a big company, biggest in the US, strong players there, quite a advanced team. So it was super challenging. So it's so many factors you need to think about and evaluate. But as I said, from day one, gut feeling is the winner.
Yeah, I think you are the second company after Oxylabs to make an acquisition in US, and the acquisition meaning like fast growth, very, very good team kind of company that is super interesting not only for you but for many other players. So that's also an important milestone. I was wondering also if we could shift gears a bit and kind of look at the premise for fundraising, right, for the Series B, because 2022 I think was the year where it was like everyone was underwater at later stage, right, and somehow you were able to have super competitive process, right, super interesting, and a lot of investors were chasing you. It looked like a pool of capital didn't shrink, but the criteria for investment shrunk so much that it was insane pressure of money to very limited amount of companies, but you still managed to navigate it perfectly. Maybe we can dive into that.
Okay, yeah. Completely different process from Series A, for sure. I think we did Series A in 2021, so the best year to fundraise at that point, highest valuation. So I would say comparing those both processes, Series A was by far much easier. It was led by the team, but partly or like heavily by founders, where Series B mostly led by team and me saying why and telling the story. So it was completely different. You need really strong finance, legal, operational teams. Like everyone needs to be in the process. I think the biggest advice I can give is to try to build network before. So I think we had so much traction during Series B because half or maybe 60% of those investors, I knew them for 2 or 3 or 4 years already. So spending time, flying to London, meeting them, Switzerland, US, anywhere, just spending time with them for them to not only understand what we do, but also understand motivation of the founders and the management team. I think that was kind of critical for them, like why you're doing this, what's your story, like why you started this business, where you want to go. So they are spending quite a bit of time, a part of the fundraise, that's over beers and dinners to understand like why. And then when the time comes, you just reach out back to them saying, look, the process has started, you know us, you're interested or not, you're even driving the valuation numbers, ticket size and that. And so part of them are saying, okay, it's not for us, maybe ticket size is too small. Some of them came back saying, okay, can you just update your financial numbers we have from like 6 months ago? So the process was easier, but I think building that relationship early is super critical. Knowing what type of investor you want, also very, very important. because all these nice names, but they are giving a bit different angle, like how they can help and why they're investing in sustainable energy or I don't know, AI or any of those. So do some homework. I really appreciate when you're asking questions that they know that you read articles on medium.com or anywhere about them, so they really appreciate that. And try to find new connections also. I think it was very competitive and oversubscribed in our case, because when those big names knew us and started looking to invest, all the other investors came just instantly, through our current investors, and that created a good kind of FOMO, maybe it's not a good word, but FOMO effect, and then valuation just started increasing to the one that we wanted.
Yeah, investors seem to flock like birds, at the sound of noise, like everyone is coming together to participate. But also, if we could make a tangent here and kind of think about Series B, like in terms of not thinking about the money, right? But did you notice that this Series B is some kind of very different type of company or cadence of development, and that it's really like a different stage of company's development, not measured, by amounts of money you raise.
100%. The investors are looking at different criterias, not only the story, but financials. And when I said that building relationship, what that actually means. So when you build relationship early, you're telling the story, what you're planning to do or what KPIs you want to achieve. And then when you're raising money 2 years later, they are saying, okay, so can you show the books now? Have you actually achieved that, what you promised? If you achieve those KPIs, so in our case, we've been successful in that, for them it's easier to trust that you'll build that business, 3 years ahead. So having at Series B, definitely you need to have completely different and stronger management team. In our case, we started with the C levels, and between Series A and Series B, maybe in 18 months, we built a leadership team layer. A lot of international people, although it was from day one, but leadership team is now from New York, Spain, and different locations. That gives that credibility. I'm not saying that Lithuania is bad for doing that, but just perspective. Like US investors, when they are seeing that you have people in the US, like VP layer, it just gives that a bit different flavor.
Okay. Yeah, that's very interesting kind of take, and maybe also you had a lot of interactions with very, very smart guys, right? With guys having McKinsey's and others on the payroll. It's been very different, at least from my experience, when investors are pitching you rather than you pitch to investors. Right? This is probably the place where most of the founders want to be. But did you have or did you notice learnings from these interactions, not necessarily with the lead investor, but kind of you integrate in the roadmap of your company going forward, and is actually fundraising, it took a heavy toll on the team. It was in 3 months of no sleep. But can you see now, looking back, that it's actually useful exercise?
As funny as it sounds, but the big names are the big names. All those big companies flew into Vilnius to meet us, and they, as you said, they've been so prepared. They hired McKinsey, Bain, all those consultancies to help them out, and they were pitching to us. We are thinking that with this space, you should grow in that area or to build these products because TAM analysis, competition, all the potential acquisitions, and they had calls. They had a transcript of calls, what they're saying, what revenue they have. So we've got so much free information that we don't need to hire Bain to do that. It was an amazing process. At least I was come over if you want, and just taking all those PDFs and just saving all that. So it was really useful. Completely, in Series A, you're more pitching and trying to get, where this round was opposite. Choosing the good investor. In the end, it came down, of course, valuation, but also personal feeling. In the end, they'll be in the board. You'll need to spend a lot of time with them, at least in the beginning. So it's, as I was always joking with you, it's still the team, right? Board is still your team. So it's nice to have cool people there and just spend time with them.
Yeah, truly invested not only on the legal side, like with the money, but invested as persons that really want to help you out. I think we have to like start wrapping up, and maybe for like the last topic, I was wondering like work-life balance and the overall like I think there's a point in time where you were investing so much of your time and energy away from the family to build a business, but I don't see if you notice that might be changing, that the company right now is giving more to the founders, to the team, and how is this work-life balance changing or not changing, and do you see like a mission right now extending outside PVK as you as a founder, like can you how you can give back, or are you giving back already? And maybe for the founders in the audience would be interesting to learn.
Yeah. So this is my second business. So from 2011, I think, for 10 years was definitely no work-life balance. It was just work. I started shifting that a bit maybe in the last couple of years, maybe 2-3 years. Giving more to the leadership team, for them having that ownership. I think then they are more dedicated and feel a bit different pressure that you're not checking, but it's like kind of their own company. So frees your hands a bit. Then we hired amazing assistance team that managing your calendar, emails, and all that. So it's from the outside maybe it looks like a small thing, but it's a lot for your like personal life planning and getting back to sports, spending a lot of time with my family, with my child. I was always, even those 10 years, family was always first. And what I mean is that, yes, of course, long hours, but not long hours on the clock hours. So I finished the work at 6, spending time putting my kid to bed at 10, and then starting to work from 11 until 4. Let's say. So it's long hours, but then you still have that, 6 to 12, let's say, 6 hours with your family. So that was always #1 priority, even with the first business. So that's, I think that's the biggest advice I can give. Like, business is business, but you can build many businesses. I think family it might be one.
Might be one, exactly. Okay, I think we're out of time. And David, thanks so much for finding time and sharing the story a bit, what you learned and so on.
Thank you.
Yeah, thank you for listening.
Thank you.
Thank you, gentlemen, for this fireside chat. And now the second keynote speech is waiting for us. This talk will explore the influence of AI on companies and if and why they need to adopt it to stay ahead of curve. So please welcome Maurice Beck-Verve, Managing Partner at Curiosity.
Thank you. There's apparently the first slide, but let me see where I can point it at. Oh, goes a bit too fast. Hi, Maurice Beck-Verve. I'm the founder of Curiosity. And before I started as a VC, I first worked at a VC for a couple of years, learned a lot. Learned also that in that time, I didn't want to become a VC or full-time VC employee. So I set up some companies myself from 2005 onwards. With that money, started some angel investing. From there, also started investing in some funds. And in the end, I ended up as a VC. But now with a different kind of an experience to also help our portfolio companies. I've been coming to the Baltics for, I think, 8 or 9 years now. I've been investing in some companies in the region, and I'm very bullish about this region and happy to collaborate with the people over here because we see a lot of potential here. We invest in B2B SaaS companies with an AI angle, and that is one of the reasons why I was asked to tell you something about it. Artificial intelligence, many people of you probably have read about it, what it is, etc. For me, my first encounter with AI was more than 20 years ago when I was working at the VC. We had one portfolio company who had the, let's say, idea to help people to prevent that their feet need to be amputated. Apparently, a lot of people with diabetes who are of older age, they have the yeah, they lose the feeling of the bottom of their feet. And what they were preparing was a foot scanner, where you could put a foot on, it would scan the foot, it would then analyze the picture with yesterday's pictures or a few days before to see if there was any major change there. Back in the days, it was quite early, and for them it was a big challenge to get it to a next level. So unfortunately, the company didn't make it, but it really triggered me that apparently you can use data, you can analyze it as if a human is looking at it, but in a better way. And if we look at today's world, look at the technology where we're now standing, way more things are possible. And therefore, I'm bullish on AI. We've seen a lot of discussions nowadays in the news about this, let's say, economic downturn. And we also see it with the companies that we invest in. You see valuations go down, you see pressure in many ways on the company itself. But what I also would like to emphasize that during these times, a lot of good companies have been born. And here you see some of the examples from Europe that have been started in these economic downturns. So what I would also like to emphasize that people be positive as a community, as investors, but also as founders that take now the effort to set up something, because I believe beautiful companies will be born. Not only because it's an economic downturn, but also because AI is helping many to create more simple a company. What is important if you start using AI, and I have some examples later on, is that you also play around with it. And one of the things we did in the office when I was asked to give a small speech here was, okay, what is now available to create something? So as you can see, ChatGPT you can go to, some other tooling like the Gamma to create the look and feel, and within 30 minutes you have a presentation. Is it perfect? Certainly not. Because the funny thing is, when we asked, for example, ChatGPT, which companies were successful during or were started during an economic crisis, they mentioned Just Eat, but they also mentioned that Just Eat was incorporated in Denmark, started in Denmark. I know one of the founders of the company itself, and it is a Dutch company. So this is also important when using information to create something, that you always double check the information. This is the result that we got from the Gamma. So we used some slides out of it, but we also learned by doing. The impact of AI, I think, in daily life, we all notice. In work, in school, family life, you hear a lot of people talk about it. And I would like to point out some of the elements that you see also in daily life, how it could impact yourself, your job, your company. For example, streamlining job processes. A friend of mine, he works for the government as an external consultant, and he's quite open that he doesn't do that much work. But now he's using AI in a very good way, and apparently he also doesn't do that much, but now he's doing it with 50% of the time available. So imagine if you're serious about it, and you use it within your company to produce kind of new efficiencies, you can save way more money than you're already saving by just using some simple tooling. And that's also the reduction of the operational cost, therefore. It creates opportunities. So keep that in mind. The creation of opportunities for growth, what we've seen is also in studies that now 20 to 30% is expected by the big companies to get growth from implementing AI. And of course, the bigger companies, it sounds like a small percentage, but if you're a smaller company implementing this, for sure there will be way more savings to be made, but also revenue to gain. And one of the things that we also have seen, not only within our own portfolio, is the service. So the customer support, customer service, you can reduce the cost quite tremendously, but improve the quality of these services. And therefore you see also with AI, when you implement it in the right way, there's money to be made, but there's also a higher, let's say, net promoter score to be gained. The adoption of AI is not easy, for sure. So therefore, it's good that you understand how you can implement it as a company. One of our portfolio companies is advising or has a Dutch fintech as a client, Bank they're called. Bank is being run by a multiple founder who set up different unicorn companies, and he's obsessed with planning. And his obsession for planning is also working in his advantage. He has this know your customer system that he thought was better than what was expected from the local authorities, the regulators. So what he did, he built an AI model which he could use to explain how it's working, and that it's being done in a responsible way, and that he rather works with his own system than what is being pointed out by the Dutch government. It ended up in a court case, funny enough, because the Dutch government just said, okay, we would like to see that you implement it the way we do it. But because he had a strong plan, he was able to explain what he was doing as a company. He won the court case. And it's an interesting thought, of course, if you think about it, that systems are being developed or regulations are being developed by governments. But apparently, if you're capable of showing what you're doing and therefore proving that your product is way better than what regulators are suggesting, I think you can have a case there. But of course, it asks a lot of adaptation for yourself to create this plan and be able to explain it to the counterpart. Let's put it like that. Let me see. Of course, it's not a walk in the park. That's also what we understand. And one of the big challenges, for example, is data. And it's not that you can easily get this data, which is structured, which is clean, which is annotated in the right way. And you also have the big boys who have a lot of data. Imagine you have, for example, Google, Facebook, Meta, I should say, and the other big ones. They have databases of more than 1,000 billion of words that they use to train their models. Wikipedia, for example, they only have 4 billion words. So imagine that if you want to get into those markets and use those technologies or build something competitive, you need to think of it on how to do it in a structured way and a cheap way, because it's not cheap. There are ways to buy maybe that data, but I would say pick your battles. And that one, well, I don't know if I would invest in. One of the other challenges is, of course, the cost to create something, to implement something. And a nice example is one of our portfolio companies called Alpha 3D, which is an Estonian company. They convert 2D images into 3D models. And what they've done is they collected a group of clients where they built the 3D models for, and they say, okay, we need 3D modelers for that. So you pay for the 3D models, but we can use then, or they can use, those 3D models to train their AI model, which is making it quite, let's say, reasonably cheap for them to train a model and therefore build the company. Another option is, and that's also what you see with, I think it is Adobe. They have 1 billion of images that they could use to train Firefly. And in the earlier days of Midjourney, which isn't that long ago, people were thinking that Adobe would not have a big market share anymore. But the funny thing is, because Adobe had this big database that they can use to train their technology, I wouldn't say they outsmart Midjourney, but at least they don't feel that much competition from these new challengers in the market. One of the things also to keep in mind is the employee resistance, and not because within your company, because most of you are smaller companies and everybody is willing to do some cool stuff, but it's more on the client side and partner side that you will see this employee resistance because it doesn't feel right, and is this AI taking over my job? So things to keep in mind when you develop your product and also when you develop your marketing and sales strategy. And of course, the lack of skilled talent it's a general kind of challenge, not only for AI, but within the company itself. The risks that are connected to it, you really need to keep them in mind. And I would like to share one example from the Dutch government that years ago, they created a system which selected people who were allowed to receive government allowance. And the thing is that because they created a system that was changed a couple of times, and in the end nobody could explain anymore what kind of decisions the system was taking based on what, so they couldn't explain, it ended up in a lot of court cases, and now the government needs to pay millions to all these people who were allegedly earmarked as criminals because they were playing around with the information, they weren't honest towards the government agencies. And this is a big thing now in the Netherlands because it still hasn't been settled. So make sure that you understand the risk of what you're doing and be careful with the information that is going through your systems. I would like to share two examples of companies that we invested in that have a different approach on how they have implemented AI. One of them is Neepal, and what is Neepal's idea? That they make it personal. So you can create an AI, you can create an AI bot, but the thing is they make it a colleague. And the funny thing is that they are able then to say, okay, this AI is Bart, and it's helping with HR questions, and it becomes a new colleague of a team that you're implementing it for. And the good thing is that they see that therefore they can counter the resistance of employees because they feel, okay, we have a new colleague, good to see. And let's train the colleague, let's help him to become better, improve. So it's an interesting way to approach a challenge that you will see when you're selling your product. Another example that I would like to share is Luna. Luna is a company that is making email automation, sales email automation for medium-sized companies and small companies. The thing is, what they, from day one, are doing is designing a company that, preferably with maximum 20 people, they become a unicorn. And not only their product is really interesting to see, but it's more also how they design the whole company by itself. And I think also, if you look at the opportunities that are there now, it is possible today. Look at the tooling that is out there, but preferably also design it, as mentioned earlier, in a way that you and your strategy is ready to get it to the next level. Also at Curiosity, we make sure that we keep on innovating. And here you see an overview of the processes that we are using to also make our life easy. And when you reach out to investors, I know that many also of the investors that are here today, they're all playing around with how can we use the assessment of the startups and the companies, the deal flow, how can we automate it to make our life easier, but also deliver quality to the people that are reaching out to us. Of course, you can also rig the system, therefore, if you know a bit how the system works. So this is just a test setup, so you can't rig it based on this. But it's indeed also, when you're looking for money, important to know what are your stakeholders doing in this field. I would like to finish my talk with that I'm really bullish on AI, of course. I see some challenges on the regulation part, on the ethical part, but I do think now is the day to start something, and I hope you all start implementing it from day one to have more European companies that bring it to a next level in an ethical and responsible way. Thank you very much.
Thank you, Maurice. It was a pleasure to have you here. The next discussion is waiting for us now. We often hear about startups within the finance, IT, the commerce sectors, but what are some of the disruptions happening in sectors often outside of our radar? So please welcome for this discussion Dovydas Čeilutka, President of AI Association of Lithuania and staff data scientist at Vinted. Vytas Ture, founder and CEO at Semantic Intelligence. Mindaugas Aglinskas, CEO at Pixevia, and moderator Kotryna Kurt, founder and CEO at Linkedist.
Hello everybody. Good to see you here today. Hello everybody, all the speakers.
Very good. Hello.
All right, so today we're talking about nothing else but artificial intelligence, a very trendy topic, right? And breaking barriers. a lot of the times these days when we're talking about AI, we're talking about AI innovations within marketing, sales, other technological sectors that we are very much aware of, right? But what about other sectors which are also having a lot of AI innovations? So I would like to start with some facts. There's a Sweden-based whiskey brand that recently announced collaboration with Microsoft and a Finnish tech firm to create their first world's AI-developed whiskey. There's also some innovations in agriculture. For example, AI bees are taking care of the pollination. There's also NASA that turned to AI to design missions hardware, right? So a lot of great and cool initiatives, a lot of startups that are happening and innovations, but yet not always we hear about those. So today with me, I have 3 speakers, and I hope to tackle some of these topics with them. And first of all, I would like to start with you, Dovydas. When we're talking about traditional sectors, usually everybody says that it will take time to get companies from those industries to speed up, to have some innovation happening. What's your take on this?
So for most part, I believe that's true. Traditional companies that are not like AI first right now, it's not super easy for them to just like wake up one day and become AI powerhouses. There are a multitude of reasons, and data, like a lot of the times we hear data is like very important, and that's true. Like for actual business like applications, so for artificial intelligence, probably you have to had made significant investments in your data infrastructure to support any additional, like for example, any real AI applications that actually provide value. Fun example with the whiskey, I'm very curious if that's actually going to be playing out as a real thing, or if it's just going to be like a marketing stunt. But if you're not talking about like marketing or being in the news for like, oh, we used AI for this crazy thing, it's like as any other technology, as any new innovation, you have to have supportive infrastructure to actually leverage that. In addition to like the data and the existing infra, you actually need to have people who understand how to use it. So these 2 things, they are not blockers in any way. And if there is like, I don't know, significant managerial incentives or power, that can be done rather quickly. Andrew Ng is one person who has, like, together with his team, developed like a guidebook how to do these AI transformations. There are like many more right now, but these transformations can be done like rather fast, but that requires, you know, to actually understand what you're trying to achieve and to actually invest into this into these new technologies.
These are some really good points, and let's see about the whiskey brand. Let's see if it will become a reality or not, right? It's just an announcement, but I wanted to piggyback on what you said and ask you more about Lithuania or Baltics. As a president of the AI Association here of Lithuania, do you see some startups emerging or have emerged in Lithuania around more traditional sectors?
So yeah, we actually we have Pixevia here on the stage that they are doing like very traditional like retail sector. We are seeing applications in I would say in the whole spectrum of things. And AI, there is like it's very hard to tell where AI begins and it ends, because like some statistical models can be classified as AI, especially as AI is like such a like I guess keyword right now that's very important for everybody. At the same time, some companies have been doing data analysis and like advanced data analysis for quite a long time. Banks and insurance companies, for example, very traditional, very, I guess, conservative companies, but have been using this for a very long time, have strong teams in these areas, etc. What I am observing, a lot of new startups in various fields trying to leverage these new technologies, because what actually changed, we have this new technology, this like new hammer, which allows us to use it for new types of nails. We have new solution that can solve problems that were not solvable before, or we can be solved automatically that could be only solved by just hiring humans to do that. So these new developments now enable new startups to actually go ahead and large language models now allow me to automate some customer responses, and that's very common problem that a lot of companies have. So we see a lot of this horizontal adoption of AI, including the traditional sectors, including these, I guess, less companies that we don't think this company must be very IT advanced, have a very advanced IT technologies.
Okay, so you mentioned Pixevia. I would like to move to you, Mindaugas, and I would like to ask you a little bit more about how are you using AI to leverage customer experience when they're shopping, when they're buying, and tell us a little bit more about how your journey began.
Sure. At the beginning, I would like to emphasize one thing when we talk about grocery retail, that customer experience was substantially degraded through last 10, 20 years. At the beginning, the KPIs were introduced for checkouts, that the cashier should scan an item in 2, 3, 4 seconds, and doesn't have time to talk with the customer at all, just scans, takes payment, pushes your items, that's it. Later, self-checkouts were introduced, when the customer should act as a store employee and scan items themselves. And AI here changes the game with our technology and similar vendors. When the customer can just take an item from the shelf, cameras recognizes everything, and at the end you just tap card and you exit the store. That's it. It's completely different experience without the queues, without taking items to the basket, removing them, showing them, scanning them, just different thing which can be and will be introduced step by step to all stores.
And how long did it take you to get from the idea to exactly your first store?
Okay, it can take 30 minutes to explain how we were in defense, then moved to parking space, and 7 years later we are in grocery retail. So it was a very long journey how we improved the system. We started in a defense with high altitude drones for Lithuania Ministry of Defense. In 2016 nobody cared. Then we moved to parking lot, and now we are in grocery field. And main reason is because we, I think, all hated experience in the stores, with queues and with kind of nonsense things which shouldn't be happening in 21st century when you have AI systems around.
Okay, and I know for a fact that you're working with a lot of big companies, not only in Europe, also outside of Europe. Can you tell us a little bit more about having this new innovation? How does it work when you come to a big, huge corporation and you're trying to, get them as a client, make sure that they buy what you create? How is that going, that journey?
Yeah, sure. Some of our customers, huge retail groups, some of them making 70 billions in revenue. Some tech companies, we distribute us 4 billions, we work with really huge enterprises. In some cases, we're also very small players, but it's a completely different experience, different game when your startup mentality go to huge enterprise, and you realize that, okay, a product is one thing, but just to take the full value of product, you should also change how enterprise works, how we make decisions, if the decisions are made by using data or not, and this all mentality also hugely impacts the value which can be extracted from our product. So one of our goals is not only to install product, but also make enterprise as digital as possible in order to extract the full value of our product. Because our product is way more complex, not only customer experience, but also we can provide a lot of data, we can improve store processes, we can make stuff way more agile.
And how long it takes approximately, for example, if you start talking with a corporate client and you get the solution out there, Can be years, months. What are we talking here?
It depends on geography. Like now we are deploying stores in the United States, we have in Europe, also like Middle East, Asia Pacific. I would say in the United States it's like a faster sales cycle. It can be just 1 year. And other countries can be 1, 2 years, sometimes even more, like to sell a product. So like it takes, I don't know, it's not, we talk about like a month, we don't talk about huge enterprises. We talk about like 9 months is like a super fast, 1 year is kind of okay.
All right, thanks for sharing. I would like to now move to Vita. Vita, you work within life science and you develop also AI solutions. You know, when we look into life science as an industry, it has this kind of a feeling when you think of it that it takes a long while to implement something, and also we all talk about R&D processes, right, which is takes a lot of time. How do you deal with that? Please share a little bit more about how it's going for you with your company.
Well, pharmaceutical industry, which is our main target customer, is quite conservative. I would say that currently the implementations of the AI projects is quite taking the baby steps. I also know, because I have the financial background in banking industry, it took a while for the banks to adopt to the AI approaches and technologies and introduce them into their workflows. Quite slowly, but pharma is just currently realizing the potential that they have, might have, collaborating with the startups doing something in AI field, and what we are very happy to see that from the market movements, that collaborations between the startups, AI technology startups, and industry players are actually up to like 4 times, which is very good signal for anyone working also in conservative industries like pharma.
And I guess there are a lot of ethical things that come in play, right? When you work within pharma, how do you deal with that? Do you just hire very good lawyers, or what's the way? Did you experience some challenges along the way with that?
I think that, as I said, the realization that we need to do something, we need to introduce the AI technologies and the processes in their R&D workflows, the understanding is already there. Some companies are trying to do everything in-house, which is, we all know it's not doable thing for products that they develop. As we know that currently the new medicine development takes up to 10 to 14 years and costs up to $2.6 billion. And we are very happy to see that, for example, leading AI drug discovery companies like in Silicon Medicine, they were able to already take their first AI-generated molecule to the clinical stage, so actually trying to, starting the clinical trials with the people.
I'm really curious to see how many more like drug solutions we will have and medicine solutions we will have in the future, because like you said, in Switzerland and Zurich, they're already doing a lot with that. Now, I wanted to ask everybody this question, right? So everybody on the stage, it's about personalization, because when we're talking about AI, of course, a lot of the times we mention personalization. It helps within any kind of sector that we're talking about, right? So have you experienced some hurdles, or maybe you're seeing some key trends when it comes to personalization in these sectors that are not the traditional ones? Maybe Douglas, you want to start?
So you're right that personalization is very important in like most companies. As anyone who deals with, like different types of users benefits from understanding like these groups better and like analyzing the dynamics that each of the groups have. So to answer your question, like what we are observing in personalization is, like in my opinion, the most like obvious trend is the large language models and the personal assistant chatbots, because they can understand a lot more context and a lot more unstructured context that, like compared to what we could do like easily with systems before that. So like if your user has like an unstructured chat with your support agent, now you can take this information into account, you can understand what happened there, and you can like take actions based off that. So I would say that like I would not say that this is particular to like non-traditionally strong like IT sectors. I think it's relevant for everybody, like the leverage of the large language models and the level of understandability of the users and personalization that it enables.
It's definitely relevant for everybody, for all sectors. I'm thinking maybe in some traditional sectors it will take a while for some of the personalization aspects to be applied. For example, pharmaceuticals. How is that with personalization?
Well, I think that we are quite far from that point. As I mentioned, we are in a very, very beginning of this in this particular industry. But I think that there is a lot of startups out there working with the clinical trial phase, which is the most expensive part of the new drug development. And there is a lot of technologies, and especially AI technologies, that can actually help to select the most appropriate things for the clinical trials. And the other thing that we need to be more aware in this particular industry is the health data is very sensitive. Yeah, you don't want to share your personal data with any technology provider or anyone. So there is all these things that are related to the data security to also make sure that the data that actually are, developed during the clinical trials, that even if this particular trial is fail, which is like 1 out of 10 currently, unfortunately, it's a very expensive game to be in for our pharmaceutical companies. For those companies, it's very, important to select the right, for example, pool of the people for particular clinical trial. And as we probably all know, that there is a cases where for many people some kind of new vaccine or drug is actually the last hope, right? So you want to make sure that that particular person actually gets this particular treatment. So it's a very, very long time where we still need to go until like very, very personalized medicine in the future. But I think that we are, with the help of the AI and the latest technologies that are coming out to the market, I think there is a huge potential for that.
All right, I hope it will move a little bit faster than we expect. Mindaugas, I have the same question for you, right? When you work within retail, within grocery shopping, everybody has that question about, hey, am I being filmed? Am I being, somebody tracking me? How do you deal with those kind of challenges? Or is it changing with generations?
Okay, like if you talk about grocery stores, yes, you can see a lot of cameras in any store for security purposes alone. In our case, we introduce more cameras and we do more data analysis, but cameras are not new things in any of the stores. When we talk about personalization, we can talk about most likely 3 different levels. One is already happening and mainly based not on camera data, but on your sales data when you get personalized offers based on the things you purchased earlier. Second most likely thing will be localization of the store, which is not happening right now, because the store should have different assortment when the store is placed close to student campus compared to the store placed like in a residential area or office space. Especially important for smaller stores because you don't have like a huge variety of space and you should put items accordingly based on customer habits. And here, like AI systems can super helpful because we know, for example, things how fast the decisions are made close to the shelf. It's like it takes, forever to choose one or another item, or customers knows, and they used to pick one or another item. And the first is not yet and it will require also acknowledgement from the shopper when personalization is made based on the customer journeys and like a specific picked, which items were picked, which items put back. If you, I know, pick 5 items and you still cannot choose, most likely, I know, like you should be provided better price or layout should be changed. And we are not here, but like data privacy is super, super important here. And I would say retailers play very fair game. And like each time you are asked if you can be provided personal data or not. If not, no, like a personal data will be collected because like it's regulated very, I know, strongly, especially in European Union.
All right, so I hope you all are taking notes because these are some really good points that you just made, all of you here. Since we don't have that much time left, I still want to touch one topic before we end this discussion. And that is looking ahead, right? We're always trying to see what's coming. So again, a question for everybody, but let's start with you, Dovydas. What do you foresee in the near future when it comes to AI and startups? Maybe some sectors still are behind. What would be your opinion, where we could try to find more solutions in which sectors? Because there are today a lot of people who maybe are aspiring founders or are founders already. So what could you see are the potential opportunities?
Yeah, so I'm a strong believer that every sector can benefit from adopting and using AI technologies. I do not want to say I believe whatever healthcare is the most important one, don't bother with anything else. I feel that there are so many potential applications, and the niche does not have to apply to the whole, everything that you do, you just have to apply to one thing that you do with your startup. So I believe that the technology right now has made this very significant leap forward, based on just products such as ChatGPT. We have uncovered some very large area where these models can be applied, and I hope to see in the world and in Lithuania as well that we are going to see a lot more startups taking this technology, understanding what value it can bring for our users, just adapting it maybe a little bit as ChatGPT is so adaptable that just adding a prompt is sometimes enough. And with proper understanding of the user journeys and user profiles and their problems that you're trying to solve, you can very easily create a valuable startup with just the technologies that are almost already available. So I see unprecedented opportunities with AI right now.
For any industry, right? For all of us.
For any industry, I believe any industry, I give you a challenge that any industry, we can think of applications where AI would add very significant value and solve real user problems for which the users are willing to pay.
All right, and since you two are founders, I would like to ask you, what tip or advice would you give for somebody, for example, trying to enter pharma market with their AI solution? What to avoid, or maybe what not to avoid?
We started several years ago, and when we look at the market, it was I don't know, maybe 70, 75 companies working with the AI in drug discovery, particularly. Few weeks ago, we checked the market, what is the temperature there. Currently, there is 800 companies. The drug development, of course, it's a huge and very long process, and there is a lot of things that could be done in this particular field. Especially, I think that one of the most impressive parts is actually clinical trials, as I mentioned, because it's most costly, and everyone is trying to figure out how we can do it faster and more efficient, which technologies we can use for that. And would I suggest particularly look on the pharmaceutical market in general? Maybe, but because this industry, it takes all the sales cycles and finding the customers and actually to getting to the customers to get what they need. It takes a lot of nerves, time, and actually very good network to actually work with. And I think it's in general for every industry. Let's not touch the pharma. I think it's a very good time to be alive for everyone who wants to do anything. And if you are not doing that right now, so don't do at all. It's, you know.
All right. What's your take, Mindaugas?
Just if I can give a couple of advices, most likely in all fashion industries, prepare for very long sales cycles. Prepare to work with enterprises which are not agile as you in any way, just a completely different culture, completely different way of making decisions. But also, super important, if you will be successful, most likely you will face few competitors, and also you will access to enormous market. So like a couple of advantages and some disadvantages.
How do you know if you are successful? Is it the sales that give that away? Or?
Like if you can cope with demand, you are certainly successful in like an old-fashioned market.
All right.
Maybe if I may just add something to what Mindaugas said.
Go ahead.
That could be maybe your competitive advantage. If you are prepared to work with companies that are not agile, maybe that's your competitive advantage because others might not be willing to do that. So that's like if you are a founder, maybe that's, you know, you can bridge the gap between the old school of management and the new school of management and like show that the new ways are better, but you can work with the old ways as well.
And I guess bring your willpower and strength with you to kind of get those companies to sign with you, right? In a long perspective. All right, so that was it for the day from our wonderful panelists here. I hope that it was interesting for you guys. I hope you got some new ideas, inspiration, and there's still a lot to be done within the traditional sectors, right? There's still a lot of niches. Just the other day I did like a search on different sectors and I can see lots of gaps. Lots of new things coming, right? Space tourism, a lot of other things, digital remains, whatnot, right? So I hope this inspires you, and thank you so much for listening. Thank you.
Thank you.
Thank you.
Panel discussion. So selected investors will share their view on the Baltic region, explore the key factors that make the region exciting, as well the key factors VCs consider when evaluating investment cases, and of course, we will hear about the success stories. So please welcome Peter Sandberg, founding partner and CEO at Nordic Secondary Fund, Oguzhan Ozer, principal at Early Bird Digital East Fund, Julian von Ekakberg, Managing Director Europe at Burda Principal Investments, and moderator Jone Vaitulevičiūtė, Managing Partner at First Pick.
Okay. Hello. Thank you. Thank you for being in the room. I think when the weather is so nice outside, but I bet there are a lot of startups that want to hear why these investors from Copenhagen, from Istanbul and Munich made it over here. And really, at least one of them in this panel made it just for this panel. So it's really an honor for us to have these funds. And I'll give them a little bit of time to present themselves, up to 1 minute. But okay, the main things in common. So they have investments in the Baltics. So Peter has 8 already, right?
Yes.
Ozan has 1, and Julian has 2 investments here in the Baltics. All of them are later stage, and I think it's very interesting to hear what they are finding here in the later stage, especially since yesterday we were speaking that pre-seed and seed is actually growing quite a lot. And I also asked them to learn 1 Lithuanian word to prove that they are into Baltics, because we're in Lithuania. So we'll start maybe from Peter, just a short introduction.
Yes, I'm Peter, and I'm apparently the boomer, big surprise. I'm 6 years old. I was lucky to begin doing angel investments in the Baltics in 2016-17, and was introduced to the ecosystem and found it super attractive. I have done before that around 30 investments of my own money, but then I founded a secondary fund because founders all over, not only Baltic, but Europe and Nordic, have the same pain in common, which is that if they are founder of a successful company, their money, they cannot capitalize on those gains they potentially have. Of course, they can ask their co-founders, but they are typically also not super well financially off until the sale. And so therefore, I got the idea together with my partner to do secondaries, and we have taken that category. We have raised 2 funds in the past 3 years, 140 million euros. And
how much?
The first one was 50, the second one is 92 million euros.
Super.
And for that we're deploying, but
yeah.
That was 58 seconds.
Yeah, 58 seconds, nicely done. So I think just to mention a couple of investments, and especially for those that are from here, so Kilo Health, TransferGo, these are the secondaries Peter has done. Anyone who's interested to do the secondaries, you'll know the guy. Ozan?
So hey everyone, this is Ozan from Early Bird Digital East Fund. We are a 200 million euro fund investing in tech startups with global ambitions, but having roots in the Central and Eastern Europe region. So far, we have been lucky to be investors in like some of the, I think, the large success stories emerging from this region, including UiPath from Romania, Payhawk from Bulgaria, and Peak and Trendyol from Turkey, and looking to do more, especially, I think, in the Baltics.
Yeah, I think for us, whenever someone says they are scouting in the Baltics and then mention companies from the Balkans, we're like, no. Like, that's very different. And I know that you're aware of that, but even scouting and like team fund-wise, they're quite different. But I forgot to ask, what's the word that you've learned?
Oh, I chose the easy one, Labas.
Labas, yeah. And Peter?
Achu.
Okay, that's the easy one. Okay, Julian?
I chose Sveiki Vise.
Did you hear that?
I'm Julian. I'm Managing Director Europe at Burda Principal Investments. We are a early growth venture capital firm investing all over Europe, in the US and Southeast Asia, out of also local offices that we have there. We do this, we invest as of Series B typically, so when a company is really ready to scale, when they've build up a company, have a product market fit, and it's about to go really to new markets and do more of the same. And we've been quite connected to the Baltics since our investment in Vinted. We led the Series B round back in 2015, and since then obviously have been around quite a bit, these days in Lithuania, in Nord Security and in Vinted. And yeah, it's always good to be here. So thanks for having me.
Yeah, thanks a lot for coming. So yeah, so we have pretty big names as funds and also big investments where I think it's really the stars of our ecosystem that you have invested in. So majority of our local funds are not in there, so I'm very happy for you. But okay, let's start from, so you are investing in Baltics. A lot of funds are claiming to invest in Baltics. I've seen so many of them. They haven't even stepped into Lithuania, Latvia, or Estonia. So maybe Julian, let's start from you. When was the first time you visited Lithuania or any of the Baltic countries? And how many times have you visited these countries afterwards? Real in numbers, just numbers.
Okay. I went here very early because as a teenager I visited, I think, all 3 countries. I went to a bachelor party in Riga. Professionally, I try to be here every year 3 times to each main conference, and typically I'm here 3 to 4 times a year. So I've been here probably 12, 13, 14 times.
Nice. What's up?
For me personally, the 2 months ago in Tallinn was my first time to the Baltics, and this is my first time in Lithuania. But I think, especially with our fresh fund that we just raised, I think you'll be seeing more people from our team, maybe me or someone else, but yeah.
Okay. What about the boomers?
Yes, unfortunately, I missed the bachelor party. I wasn't invited. So my first trip was in Tallinn in 2017, and because you asked prior to this event, I calculated yesterday. I've been here 36 times in the Baltics.
Wow.
And but it's the first time I'm in Vilnius with such a weather like this. Usually I come here in the autumn or the winter. Yeah. So yes, and we have. You also asked, about the numbers we have done. In the first fund, we invested around 32% of the fund in the Baltic companies, around 17, 18 million euros. And in the second fund, for which we deploy now, we have already invested 20 million euros. So, and that is actually 49%, and 40% of the investments done so far is actually Lithuania by Kilo Health and TransferGo. And we believe that Lithuania is narrowing the gap rapidly to Estonia, which is very impressive, but also super important because you need, of course, even more role models. And you saw on stage earlier today, both Darmantas from TransferGo and David of PVK. There are so many great founders. Hopefully can inspire many of the early startups sitting here also to copy their track and work hard to go
do
in
the
their
secondaries
footprints.
soon enough. Yeah, I completely agree. And that's a very good lead up to the question that I had afterwards is how much of your fund, do you have some specific dedication that you will be investing in the Baltics?
We don't have, you could say basically there are no limit, but I would assume as the first fund was about a third of it, given the deal flow we see currently, which is extremely strong, especially in Lithuania and Estonia and then Sweden, I would say, I would be surprised if Baltic was at least 50% of the fund because of the opportunities here. And of course also when you look at the traction on the unicorns per capita and all the numbers, you always love to hear about it in the Baltic when you compare. But there are, the challenge is huge, but I would say to my best belief it will be around 40-50%.
40-50. And what about for early bird digital?
So we don't have any specific percent target per se, but similarly, I think given the quality of the deal flow we see from the Baltics, I would expect also a meaningful part of our 200 million fund might be invested in Baltics as well.
Okay.
We don't have a fixed number, so we invest in everything we like, and this can be 10 startups, but it can be also 0. We just do anything that we like, but nothing else. And I guess starting at Series B, that's when we invest. If you look at the numbers, in the entire Baltics, you got I don't know, 6-7 Series B per year overall. So, the likelihood that there's one that really falls into our criteria is super low.
It's true.
Would be great to have more of those, but still.
Yeah. So the 2 shots you made, that's already quite a lot then.
Absolutely. But I'm looking for the third unicorn. Yeah, that's why I'm here.
I think they're around somewhere.
Exactly.
Actually. Okay, but whom are the Baltic companies then competing for your attention? And you personally, for example, Julian, you scout here, but you also are looking in Nordics, Germany, I don't know.
Well, I'm MD for Europe, so I better make my job and look everywhere.
Everywhere, okay.
But personally, I focus a lot actually on the Baltics and Germany. In Germany, although we are a German-based fund, until 2021 we didn't invest into Germany.
Okay.
Everywhere else but Germany. So we changed that, and yeah, that's why I'm focusing a lot on that market. We've done 6 investments since then in Germany.
Yeah.
But I really like being here.
Okay, so we are competing then. Julian's attention is across Europe, so that's what we're competing with. And what about you?
So for us, our whole fund is kind of like focused on what we call emerging Europe, essentially.
Oh no, but I think like personally, you're
So
here.
I was coming there, but also personally, I think we are quite kind of like opportunistic and don't really differentiate in terms of location. Okay. Just looking for kind of like the best opportunities wherever they are and trying to find them.
So that's the eastern part of the Europe.
Yeah, exactly.
Okay, and Peter?
Well, we are a bit more focused, I would say, or we have a knowledge that we have an extremely strong network, of course, in the Nordic and the Baltics. So the first one was purely either companies located, having headquarters here, or founders from this region. And our second fund, from where I'm deploying money now, we can do 10% outside the region. And we have actually very good conversations with both very strong German companies, Austrian companies, French companies, even one Polish, and I'm pretty sure we will be doing also the things. But the thing is, you would assume, having done secondaries, which is another discipline than doing early venture, you would having done more than 200 diligences and 35 deals, whatever, you would be faster and faster. It goes the other way around because you are aware of more and more risk, and of course the whole change of the environment and the higher interest rates and all the alternatives. So there's so many things to look into, but saying this, we are pretty confident that we will be looking at things. And of course, if you guys have interesting secondary opportunities, as long as our criteria is they must be post-Series A, having raised 10, 20 million and a valuation of minimum 30, 40 million, because we are minority investor, only do up to 10%, and our minimum ticket is 2 million. So
okay.
That was a long answer to your question, sorry.
No, but then I understand. So basically, we are competing for your attention with almost the whole Europe, or like that's what we're trying to cover. So you're not only traveling 3 times to Baltics and then back to Istanbul, Munich, or Copenhagen.
And then go asleep for the rest of the year.
Yeah, exactly. It's like one Series B in 3 years. That's fine. But okay, maybe Julian, you can tell a little bit more. So you have Vinted and North Security. I understand that you were quite involved in North Security deal. Maybe you can shortly tell how did you find it, what was the path to it, and what was the decision-making process?
Well, I think Nord Security was actually an example of how a perfect world works for us, because 2 years before, we had actually decided to focus on cybersecurity. And we did 2 things. We invested in 3 cybersecurity-focused funds. So we do also fund-of-fund investments for pipeline and purposes to get basically exposure to the market. And we did basically meet every company out there. That was the second thing that we did. And so, Nord was one of the companies in the list that fell really into our criteria. And then they kind of started, to raise, and we were, and the good thing is if you really get, expertise beforehand, then you really know which company you want. And, we had basically an advantage of knowing our shit. And that's how we entered it. Why do we like it? Our claim is we invest in exceptional founders that are building global category leaders. And Nord is just that. I don't know who has met Tom, the founder. I mean, he's really exceptional. So he's one of those, 0.05% of the founders that you meet out there. He built the company to a 300 million company himself without any funding until we came. And then obviously, I mean, they are, a global play and a market leader. Yeah.
But that was probably a very competitive deal, or no?
It was, and that's why also our expertise and showing him that we are basically also adding value in terms of, let's say, the topics that he needs afterwards. That was basically part of obviously also, I guess, his decision. Yeah.
Super. Zan, you have one investment here with Early Bird East Digital. Was it more accident, or was that active scouting and you were like, we need this Baltic investment or something?
It was a result of active scouting, but not necessarily looking for a Baltic investment, but I think we were more actively looking at the cybersecurity space at the time. Yeah. And then I think, we aspire to invest in category first creators and then winners. And I think in Binalize, we have a very strong, exceptional founder with a great product that was at the time yet to be kind of like being adapted in their respective markets. But we kind of like through our process, we realized that this could be one of the new things upcoming in the cybersecurity space. And obviously the founder was kind of like the type of person who knew what they were building and what they were shooting for. So, yeah.
Super. And Peter, you are investing almost 50% now of your fund in the Baltics. Did you set up the fund with this strategy, or that's accidental?
Well, there's no such thing as accident, I believe. when you see opportunities like this, even though I promised my wife that when I sold my second company like 10 years ago, I would never be working as much again, until I saw this opportunity on secondaries.
Yeah.
And when I spoke to smart people in the region, many of the VCs from Estonia and Finland, they invested in our fund, and some of the smartest private equity founders in Sweden and Denmark. So that was a good way to check if the idea we had actually also gave meaning for people even with far more experience in private equity and venture than we had. So yes, it was obvious to do it simply because provide the liquidity for the founders, but also allowing successful entrepreneurs like myself and others to deploy my capital in the companies. Our first deal was in Klarna in December 19. At that time, it was worth $4 billion. That's expensive, but they would want to IPO the company in a year, they said. So we invested, and then it went crazy. We sold 16 months later, 5.5x higher, and now it's down 90%. So we were very, very lucky. And of course, it tends also to be the harder you work and the more people you talk to, the luckier you also get.
That's a good promotion for your
hopefully.
fund. Okay, I'll ask each of you to name one anti-portfolio case. So something that you've completely missed and you know there's no way back, probably. I don't know.
Sorry, could you please repeat?
Anti-portfolio case. So something you've missed to invest. And now,
missed?
Yeah. I know for you it's difficult because you're a
I have
secondary
many.
fund. Maybe I'll ask Early Bird or Julian.
Well, he just mentioned Klarna. We could have invested in Klarna at I think 200 million valuation.
Yes.
We didn't.
But from the Baltics?
From the Baltics, I guess both. And we've just in Lithuania we've got a good, really track record. In Estonia we have not. So both, yeah.
Yeah. Okay.
When I think about it, I think especially when you say Baltics, I would say Bolt has been the one. We looked at it at the very early stage, and I think sometimes the more familiar you are with something, the more you see and feel the difficulties and the problems in it.
Yeah.
And I think probably our experience in some of the local and regional, more operational type of model champions that we have invested, but also have seen the problems with, kind of stopped us from, maybe among other things, but making that investment decision. So I would probably name that one.
Okay, so now maybe let's get also quite practical. There are people probably waiting to catch you after you get off the stage and speak to you. So maybe something, Julian, that you would say a company needs to have that, it might sound bad, but you start talking to them. So when it's too early or when they should actually start getting to know you?
I think stage is definitely a key factor because, it's not many that make it really to my stage, and I guess when it's time, before Series A, when they're about to start raising a Series A, I think it's a good time to connect with us. We like to be actually in contact for quite some time, getting to know them. Sometimes we actually pass the Series A, but then invest in the Series B. I have a few in my mind that we did the same in Lithuania. Yeah, I guess it's kind of the good time.
Yeah. Okay. Any pre-Series A companies? So go to Julian. Ozan?
For us, we are quite flexible in terms of stage. We have pre-seed investments as well as...
Be careful, they will come your way.
Be careful.
Yeah, they're welcome. We have Series B investments as well as first checks. So that's not really something we have a hard criteria for sure.
Peter?
Yes, well, 5 years ago when we started doing our fund, at that time we had a category saying if a company had raised 1 million euro, that was a Series A. Now it's slightly bigger. So I said we typically start talking to the companies when they have raised minimum 3 to 5 million, but then because like you said, we are talking to for some years to follow them, of course, but when they, as we are also only buying from existing founders and we can maximum buy 10% of the company, they need to have a post-money valuation of around 25, 30 million, otherwise it doesn't make sense for us. We don't put a price tag on the company, we simply invest at an on average 25% discount to the last valuation they've done, due to liquidity and credit risk, and that is our way we provide the liquidity, but so they need to be at a certain level, but sometimes we know that things can go very fast.
Yeah.
We did an investment together 4 years ago, put in 400K in a company, a few million, and now a year ago they raised more than 50 million, so we know things can go, luckily, very good, but it can of course also be more challenging, you could say.
Yeah, I hope the crowd caught like what kind of, what's the cap and the maturity and whatever what you were mentioning, but I'm pretty sure you can speak one-on-one with those that are interested. And anything else that you would say besides the stage that really matters? So obviously by that time, I guess, when you are all investing, they are not local, they're quite international. Anything else?
Yes, we could say what's also super important for us is that we very much have very good relations with local VCs like here, working with Practica and Iron Wolf and Contranian, and also in the other countries like Specialist VC and Trend Ventures, because we are not a competitor to the VCs. We are actually in between the VCs and the private equity, and also especially now when the exit market has been again hardly challenged. You see from P2 data that the IPO number of deals has fallen 70% quarter to quarter from 22 to 23, and also at the same time multiples are down. So instead of forcing a sale in a great company now, the smart VCs and LPs understand the value of allowing the founder to take a little bit off the table, maybe a few million euros, and then building a company and trying to exit at a later stage when things are more valuable. And again, for the founder, whether they have 17 or 16%, if the company goes very big, means a lot. So for us, it's a blue ocean doing secondaries, and we love what we're doing. And if you know anybody who have secondaries in a great company, you're always welcome to ping me.
Super. So you've mentioned that funds are a big source of leads. What about you two? How, for example, did you come across North Security? Was it the kind of your cybersecurity research, or was it introduction from someone?
So I would say 80% of our deal flow comes from really network, so other VCs, just because they are a great filter, right? So not in terms of filter and for getting in touch, but let's say, the companies that have made it into Series A or seed and Series A in the Baltics, they've gone through a lot of competition. Yeah. And I think here especially because the number of early stage investors is lower. But those that have made it, they are just of high quality. And so I think that's the best funnel, I would say. Asking the question on Nord, it was actually an advisor, so they engaged an advisor.
Okay.
That's rather a rare case, I think, for us, because that stage is still not so advisor focused. On the other hand, Nord is really a big company. In that case, it was an advisor, and it was kind of like that, coincidence that we had actually already prepared ourselves.
Yeah.
But yeah, so I think VCs is really the go-to.
Okay, and Ozan, how is it for you?
So for us, it's a mix of everything, essentially. We have a lot of active kind of scouting and research activity within the team, but also I think pre-seed and seed funds and angel investors, especially in the local ecosystems, who I think we've gotten to know, and also maybe through working together at the board of another company, or just getting to know each other, that in a way we left a good impression. I think those are probably among the kind of the best channels that we
And maybe just to add, sorry, do you want
No,
to,
please.
Maybe just to add, the beauty of our stage is that there's the previous rounds, seed and Series A, and those are typically announced. I mean, these days not so much anymore, but typically they have been announced, and so it was a lot on us to actually just screen the market, look out for rounds, and then basically through venture capital networks going to connect them. And that's, I guess, I would say always the beauty for our stage.
Yeah, that's very true. Peter.
But we are also privileged by having in our second fund 225 LPs, which are mainly entrepreneurs. among those, 15 of them are founders from whom we bought secondaries in our first fund. So we have many angel investors from mainly Denmark, but also from the other Nordic Baltic countries. And that is a big advantage because, one, they bring a lot of their best deals potentially because then they have a part of the cake themselves, they're part of this. And also we use it when we do our due diligences because we have so many of our investors who have done either cyber, e-commerce. We have always smart people around, which is very good because the older you get, the more aware you get that there's very little you know a lot about.
Yeah.
When you are 30, you think you know everything, which very few does. So having a broad investor base like we do, we don't have institutional. It gives us many advantages in this space, especially.
Yeah, that's true. So I think, yeah, LP's base, and also I think you've heard that probably you have to have good relationship with local VCs, and then we'll be, pushing it your way. But obviously, when the stage is that late, it's quite easy to sort out. It's not that difficult to find all the Series A deals in the Baltics this year. So I think that's pretty obvious. Anything that you will ask a startup founder to do after you invest in the company?
That's a great question. We would never do that.
You would never do that? You would never.
Like, if there's something that we want to change in the company, we would not invest in the first place. So there's also those funds that, for instance, have also, I don't know, like marketing or HR departments themselves to help the startups afterwards. We would also not do that at all, ever. Why? Because we believe that we want to invest in those 0.5% of those founders like Tom that I mentioned before. Those guys don't need any help in terms of recruiting or marketing. And so this is kind of how we think about it. And we would not want to change anything, otherwise we wouldn't invest.
Yeah, that's true. It's like getting married and then changing everything for the person. Anything from your side?
Yes.
No.
I would say what is super important is also in general, what I have invested after that. Basically, I believe that no matter how promising things are, as a person, I only invest in people I like. I also only like to have investors who I like because life is too short to work with assholes. That's my period. So if you can choose, no matter how good a slide deck or whatever, if you really don't have a trust in the belief that person is worth having a cup of coffee, don't spend your time. It's also super important for a startup not to be trigger. Find the right investors, find the right local angel, find the right local VCs, and then you can, because it's so important and it means a lot and it changes a lot. So I think and I said, if we don't like the founders, we will never buy because we are not even active. We are more like sitting in the back. We used to have a picture being with the unknown nephew Warren Buffett in the Nordic, having a big wallet and buying shares, but only if the management team is strong, if the current cap table is strong, because we will not be participating in the B, C, or D round, because we are minority. We can buy secondaries after the next round, which we have done a number of times, but it's essential for us that we only want to go in, hopefully, in the companies that are on the right track, where we can, instead of the venture, which I will not say pray and spray, but you have to, that no matter how good you are at your work, 5 or 10% will pay we hope by investing at a later stage, more mature companies, of course we will miss the X100 probably, but we will hopefully have the fewer which doesn't make it to a certain level.
Okay. Ozan, anything that you ask?
So essentially, similarly, like we wouldn't invest if we were to ask something major or fundamental to be changed right after at all. But maybe I think it might also be kind of like related to the fact that we invest a bit earlier than those funds. Is that I actually think, so we have our kind of like a 3-person talent team in-house, and we've seen, I think, time and time again, the fact that like regardless of your vertical, of the sector of the company, one of the most common and probably the biggest challenge in a VC-backed journey has been to scale the organization.
Yes.
And going at the early stage, while we obviously believe that our founders can learn that and do that, it is, especially in investing in the kind of like Central and Eastern Europe region, I think it's also a common kind of like theme that our founders are super strong product and tech people who have less experience in sales and marketing. And then that's where actually that team started 6 years ago, how we built it. And I think we've seen a lot of like benefits provided to our founders. And in the sense that, as I said, like we believe our founders will learn and obviously manage that organization themselves. But I think any time that we can leverage them on that journey, any value we can provide on that journey is, we've seen it quite helpful. So that's just one thing that we do differently.
So that's more than support rather than intervening. Okay, so there is then probably a myth that you need to change headquarters or move the whole team from the Baltics, because some investors are a bit wary of where we are located. So none of you are. No,
not at all.
Okay, yeah, we're well equipped, we're well prepared. So since we're nearing the end, and I think it's just enough to a little bit wrap it up. And I've mentioned that I think this room, like I can't really see who's in the room, but I assume there's a lot of early stage startups, people who are involved in the tech ecosystem. Is there anything that they should come to you today, find you, and what would you advise them how to kind of catch your attention and at what point? Anyone?
Peter.
Well,
should they come to you?
Well, maybe I'm the less interesting guy for the very early companies. Of
Yeah.
course, I'm always happy if people want to have introductions to companies or people in the Nordic region. I'm always happy to help. I still have a few spaces on my LinkedIn. You can always write me there. I'm pretty visible there. That's probably the easiest way, so I'm glad to do so. But also happy if you're searching for VCs with interest in verticals outside the one you maybe are looking at. But I think you're privileged by having very strong local VCs in the Baltics and who have had many successes. So, talk to them and find the right one for you. And I also know that both Litban is doing extremely well. When I met Litban first time, it was like 40 businesses. Now they have more than 300. So it's very impressive to see how that ecosystem is. And I think it is very important that the angel environment can grow all together with the VCs, because the combination will help the startups a lot. So
thanks for the compliment, but it means then that they will all be coming to us, not to you. But that's fine. That's fine. We are excited about this pipeline. Ozan?
I mean, one thing I think I maybe previously told some people I spoke to as well. I think it's important. I think before approaching VCs, I think it's important to kind of identify and decide what kind of a journey you are looking for and what kind of an ultimate picture you have in mind for your company, and looking at it I think realistically as well. And I think approaching the right sized VC with the right focus, I think is also dependent on that. And I think that can save a lot of time when fundraising, but also after the fundraising as well, to find the right match for a startup.
Okay, Julian, you've mentioned you're looking Series A, Series B. You know all of those companies that are like that. Any reason people should come to you today?
Look, I think if you have, let's say, a pitch and think that I could be a good partner and that the stage fits well, please get in touch with me. And I always try to answer. It might take a bit of time, but I think do a message, send me a message every time. I can just advise the same what Peter said. There's great local VCs, which I think typically if you're earlier, at my stage maybe not, but if you're earlier, really use their expertise. I've seen really 5 cases at least that made it to Series A, and I would say mostly just because of, let's say, the support of entrepreneurs, of the Vinted founder who really puts a lot of time into it. You guys, Praktika. So I think really use that ecosystem, because these guys help you, and they will help you to get at some point to the stage where it's relevant for us. Yeah.
Well, that was a very good conversation for me personally then, but thanks a lot. So I think you can see your ačiū or something, labas, in Lithuanian now for the crowd, and then we are done. Yeah.
Thank you.
Thank you.
A big thank you goes to you. And I hope you are ready for our other discussion. What should a startup consider while choosing the accelerator, and what commitment they should be prepared to make? And also, we'll cover the difference between accelerator models, and finally touch upon the Baltic outlook. So please welcome Greta Monstavice, co-founder and CEO at Catalysta Ventures, Alexandra Valkova, partner and head of portfolio at startup Wise Guys, Leonardo Rocchetti, investor at Plug and Play Ventures, moderator Dalius Misiūnas, president of ICM University. Welcome.
Hello, everyone. I hope you're having a good time. A small secret disclosure before we start. We have an agreement with the panel that there should be at least one joke during this discussion, so make sure you notice that. And if it's funny, please laugh, okay? So the topic is quite clear, I think, for everyone. Everybody's more or less aware about the word accelerator and what does it mean for any startup, especially the one that is in early stage. And here we have people who have been hands-on active in this accelerator world. Accelerator, to me, coming from academia, is a very nice word because I think about the progress, I think about the environment where people are learning, and it sounds like it is, a must-do in a way or no regret decision for a startup. However, I realized that it's not for everyone. So today we'll try to touch both sides. What is good about it, why is it so attractive, and also what could go wrong. And of course, another thing that comes into my mind when I think about the accelerator is the success of Y Combinator, okay? So it's a sort of, when you imagine something that is very hard to get in, but once you get in, everything is done. The success is there, guaranteed. So let's talk about that as well, whether it's really truth. And finally, of course, what does it mean for us here, for this ecosystem? What could work, what shouldn't work, and of course, how special we are, because we here in Lithuania like to talk about our specialties.
Okay? Was that the joke?
Not yet, no one is laughing, but this was an attempt, number one.
What is an accelerator?
Yeah, exactly. Let's check. Everyone is here for the same panel? Yeah? Okay. Good. So let's start, and I'll start with the general question, which is a no-brainer, to be honest. So what is the benefit and what is the risk of an accelerator? And I will start with you, Alexandra. So kick it off, please.
Taking it off. I don't have yet the joke coming. It will come. So the benefit, I think for me, basically you always have to, there's always a price for anything. For all the good things that you have in life and for all the bad things that you have in life, there's always two sides of the coin. And I think if put it super simply, the best possible outcome of the accelerator, from my personal perspective, is not even the knowledge, which is a really good thing and one of the most important values, but also the community of people, of like-minded people that you can trust, that you can share your experience with. That's on the positive side. Yesterday I had a meeting with one of our portfolio founders who asked for a meeting because he's working with the employees, with his employees that they're not the owners. So of course there's a co-founder as well, but there's like employees are not the owners of the business. They're expecting the CEO to decide. Then his family is not in the, I mean, of course they've been supporting him for life, but they don't know the journey. And the friends are from different industries, so they don't understand. They see the success in the news, but they don't see the story behind. So he wanted to talk with someone who actually understands what it takes to be a founder. So accelerator, if you're going it, especially in the group of people, in the cohort of people, gives you this community of people who will understand what happens with you, what it takes to get anywhere, to get from 1 to 0, or at least from 1 to 1 point, from 0 to 0.1, at least somewhere there. And then what it takes, like you have to sacrifice something because it takes time. And if it takes time, you have to sacrifice, I don't know, family, friends, free time, sleep. You decide. If you have you can spend time only on, I don't know, on the business, on your family, on your friends, or on your free time. You can choose only 2 or 3 max.
Yeah.
Something will fall.
Okay, we'll come back to what it takes to be successful when you are already into the accelerator. But Greta, maybe let's move to you. And when you think about the illustration of success of accelerator program, maybe you have some example that comes to your mind, the specific business startup that, you know, captured the value.
Yeah, that's a great question. I think when I reflect on the benefits of like any accelerator program, I would be thinking about how can you get access to people and the knowledge that you wouldn't have access to otherwise, right? So one of the angles that we take at Catalyst Ventures, we have one acceleration program which is mostly with the largest corporates in the region. And for us, the success there is hypotheses answered to the startup by the large client that they have, customer traction, and further investment. So we've had a really nice case study a while ago with one of the startups that we also ended up investing in, Earthbank, who worked with Swedbank and worked on their sustainability challenges, and therefore actually even they got some of the answers from the questions they had, even when not continuing the partnership with the company itself. They have successfully raised a 1.5 million round, and they are now scaling incredibly, and that was all kickstarted by a partnership driven by an accelerator program. And I think that's a really nice example.
Okay, great. So the role of the corporates, Leonardo, coming to you now, how essential and what kind of role does the participation of the corporate plays in accelerator, and looking especially from the point of view of the startup?
Absolutely. So I think that every accelerator has to be created according to the ecosystems and to the stakeholders like involved in the ecosystem and in the accelerator. So I think, for example, like at Plug and Play, so in Germany, like in Stuttgart, we started our accelerator program with like the role of the corporates just having a led mentorship in helping them helping the founders how to build the MVP and how like to frame the idea, etc. But when the ecosystem was maturing, so we saw that actually we started like verticalize like the accelerator, more focused on mobility and on the technical challenge of the founders like in delivering the product. And so like we framed all the framework of the accelerator to deliver like POCs at the end of accelerator. So I think that, in fact, like the ingredient of an accelerator program are mainly two. So one is the people that you involve in the accelerator, and in our case, the corporate attendees are very, very important for our accelerator program, for the success of the founders to deliver the product, and the framework that should be adapted to the context and should be able like to deliver and capture the value of the people within the accelerator to create something new and something like concrete for the companies.
So in your opinion, in the experience of Plug and Play in that model, who is the main beneficiary?
So I think the founders can have like a great experience to how to de-risk their assumptions directly with the corporates. So because like corporates are really, really in depth into the technologies, into the market, and can deliver like a great value when it comes to industry expertise or how to deliver like a technical problem on a public scale. And the corporate themselves, so they can get the value from the founders to involve like their new technologies in the current operations. And also, I would say that today we have seen many corporates that are starting like their CVC arms, and in the past they've seen, and also that today we've seen most of the corporates, they want to like run accelerator product themselves. So because they saw the value that are coming from founders and new technologies. And having, for example, corporations in the cap table of the founders can also give a certificate of quality.
Could be benefit.
Exactly,
Yeah.
especially for specific industries.
All right, so we talked about what's good about it. Let's now flip the coin, and it's not the joke yet. Let's now flip the coin and say, what can go wrong, Alexander? What can go wrong? Maybe you have an example where it went wrong, and we can learn from it.
You know, like we have currently more than 400 startups in the portfolio, and I have all of it. All of what can go wrong.
Choose the best one.
And especially it was a very special moment when the first startup was dying, and you're like, but I raised you. But yeah, but I will tell actually a fun story of what can go wrong, and it would be on our side, on the investor side, what was our mistake. So we got a startup that arrived to the batch physically with a bit of 1 week delay, pretty much. Because of the visa issues, they were coming outside of the EU. They had a little bit of delay, so they arrived 1 week later, they missed the onboarding as such. And they jumped straight to the content, and content on the second week was supposed to, I don't know what's the English word, but basically to go to the essence of your why you're building what you're building. And this is what the question that all the investors obviously are asking. You probably know the rule of 5. You have to ask 5 times to get to some inner feeling. And we're making a lot of investments and a lot of investment decisions, so we're making decisions fast. We asked our why, but then there was a workshop on like why exactly. And then after that workshop, the founders, so they arrived, that's the first day. And they went through the workshop, and then they asked to talk with me, saying, hey, this is an extremely awesome accelerator. We really enjoy this extremely great experience, this 4 hours of the workshop. We quit. We will not run our business anymore. So we are leaving the program. Thank you for your time. Thank you for your efforts. We're leaving. They were building an e-commerce sales-based e-commerce solution to drive e-commerce sales. I said, okay, but why? Why you're leaving? Like, what's the problem? So we're like, we feel that we want to help men to talk with women.
Yeah, the new idea.
So we found our why finally over this essence.
Sounds like the most efficient accelerator
ever. It is
ever.
the most efficient 4 hours in our lives. They left.
Okay.
Yeah. So what can go wrong? You have to, before going somewhere and before taking any investments, you probably have to. Those guys didn't take the investment. They didn't have time to take the investments yet. But pretty much you can. One of the things to be aware that you, talking more on the serious side, that you can actually break the team. The team can break through the program. There are different accelerators with different intensity. In our case, there's a lot of content and a lot of intensity. And we saw teams breaking through during the program because they were not aligned on the why, they were not aligned on the values, and they couldn't go through the pressure.
But do the new teams then appear? Do they form the new teams?
We are talking about the negative experience.
Okay.
So not everyone,
okay.
Not everyone.
So looking from the positive side, it tests also the resilience of a team.
Yes,
all
absolutely.
Right.
And obviously, if you find your why faster over 4 hours of intense workshop, that's a lot of saved time.
Okay, so it's advice, it's community, it's a test of your own resilience. Greta, what could you add to the failure list?
We had
failure
also
bucket.
teams that broke, actually. And we literally launched an accelerator yesterday, starting with why, which is one of the catalyzers. So we see the similarity.
So how many
there.
left?
None
Okay.
yet. Let's see. But I'm glad that a lot of them are here and listening to you also saying that that's super important. So that's great. Yeah, I think maybe something that was not mentioned is also a little bit from the other side, from even the accelerator side, and also for the founder to have in mind the mindset with which you come into the program. So I have also had personal experience when mentoring someone, and just every single time we speak, I have this know-it-all attitude from a person who you're speaking to. So if you feel like you know it all, you shouldn't go to an accelerator, right? Like, you are going there to get insight and get feedback. So that is something that is super important. And if you have that kind of attitude, then it becomes like really difficult to work with a person. And we've had some confrontations based on that. But so that I think is super important from the negative side. And also accelerators may be a waste of your time if the accelerator is focusing on something that's not your focus, right? So we are an impact accelerator. If a startup wouldn't care at all or do a little bit of a greenwashing pitch to us, I mean, we spot it immediately. Or if we haven't by some chance and you came into our accelerator, what will you do there? We are talking about impact as a core theme in everything that we do. So it's choosing a wrong accelerator would also be another one.
Okay, Leonardo, what about you? In what case you would tell the founder not to go there?
I mean, so especially when we work with corporations, so especially if the product is too early, for example, like because like in a lot of locations, so at Plug and Play we work with stage agnostic like accelerators. So where like the corporate component is very important because like they are the objective is to create POCs and create like real value between like in the relationships between the corporate and startup. So, and what is important there is the role of the mentors and the role of the business units. So on the corporate side, especially, so that might be like someone that is not really much open like to work with startups or like to involve the business unit and to be the sponsor of these collaborations. So that might be like really important. And for example, like in our case, we saw that many corporates were not maybe not the right like mindset to work with startups. And on the founder side, maybe like joining the accelerator when they are too early. So especially in a lot of locations, we saw that they are super early, but for this kind of program that is mainly focused on POCs.
Oh, I see, I see. So it could be too early. Can it be too late?
Can it be too late? Yes, because like especially when it comes to like growth stage companies, so like their goal is to get to the next milestone and to reach the metrics, and so it can be perceived as a waste of time.
However, yes. I would just add that yes, probably it can be too late because everything can be a little bit not a fit. But from the experience, which to me was quite surprising, the most value that we see from the gratitude from the program, we saw from the mature founders, from the ones that were doing businesses before, that were running, that had the startup before. I would explain it, and then like the first-time founders, many times, not always, because it obviously depends on the personality, on the human, but sometimes the first-time founders expect this like magic pill. So that, okay, if we went to the acceleration program, there will be, okay, we will know everything, and then we will raise the money. Talking about the YC, there's a perception that if you get there, like everything is magic, but only like 30% or something started from YC raised the next round, so it's not everything, right? Yeah. Everyone, right? So there's specific statistics.
It's a very harsh selection that makes it successful. Yeah,
absolutely. And so to the point is that I think it depends on the human ability to extract value and to learn, and the more mature you are, the more you understand that you actually can get the value from pretty much anything if you know what to focus and how to get it, and you're not expecting things just to happen to you.
All right. We didn't touch upon the money, but sometimes accelerators also serve as investors, yeah? So, Alexandra, maybe in your experience, how do you compare accelerator that is making an investment versus pre-seed fund?
Let's talking about these positive and negative things. I'm obviously biased, so I mean.
Try to be objective.
But let
now
me put
this was a joke, yeah. Try to be objective.
Try. But I will put it this way. I honestly believe in this parallel. Think of it as an MBA, in a way. Obviously, it's different. But will a person be successful if a person doesn't have an MBA? Probably yes. Why
Yes.
not? It's possible. Will the person have more network, more connections, and more opportunities if someone will get the MBA? Probably yes. So it doesn't mean that if you don't go there, you won't succeed. It's not directly correlated, but it's a tool. It's a tool and an opportunity. And of course, talking back to what Greta said as well, that if you're not ready to learn, if you know everything, it will be a clash, because accelerators as such are built on criticism, on giving feedback,
on testing things, yeah.
on fixing things, on saying, hey, this is wrong, this is wrong, this is wrong. Pre-seed investor, whatever, investor would have meetings with you, will probably give will not probably, but will give the feedback, etc. But the accelerator as such, it's a time-framed, it's an activity that has a time frame in which the whole feedback is squeezed, and like you have to process a lot of information over a very specific period of time.
So we need to be very open. All right, Greta, so if we move on and we talk about accelerators, we have the big names that everybody knows, that thinks this is all very nice, successful, and then we have the other ones, and especially talking about European ones, what do you think is a path of development? What can they do better? What can they do more of to be even more successful?
Yeah, I think, of course, it's super difficult to compete with the big brands, right? Because they speak for themselves. It's just cool to have it on LinkedIn.
Yes.
However, if you as a founder have a particular problem or challenge, you may look for an accelerator that helps you solve that particular challenge, right? So then we start talking about the niche accelerators with some sort of verticals. So I think you've talked on this stage also about health tech and like other things, right? We ourselves are working with impact. So impact already, like when we started 6 years ago, it was super tiny niche. Right now, impact is becoming very broad as well. But still getting the insight into the exact ecosystem. For example, we are getting a lot of startups who are two kinds of startups, really. One kind is like very businessy, wants to scale, and another one is like very impact-driven. And they, what they want to do is what we want to do. We want both of them to be able to, for example, fundraise from impact funds. And in order to do that and take that, I think right now it's like 1.1 trillion funds and impact investment, right? So if you want to get that money, you need to speak that language. You need to speak like all the taxonomies, regulations, CBRDs, like all of these things, life cycle assessments, all of these things. And getting there is not easy, and you need support. So having that vertical niche concentration on certain topics, I think that is something that could be done for the smaller brands of accelerators.
All right, so specialization, focus on something, and then of course a good matchmaking, because they need to find each other.
For sure.
All right, Leonardo, so Plug and Play has gotten a lot of locations, a lot of regions, and then when you think about the Baltics, what do you think is the magic house of the Baltics? What should it look like, and to make it a success? Is it specialized, as Greta is suggesting? Maybe if someone needs a specialized one. Is it more general because of the market size? What ideas come to your mind when you try to make the architecture of this magic house?
So like being here and looking at this audience, so I would say that you can get a taste of how the ecosystem is. It is very well connected. This mall is very vibrant. You can perceive it. And I think that, for example, like the recent success and the companies, the unicorn companies like Vinted, North Security, and the almost unicorns like Kevin, PVKs, that can be like the house of a second generation of founders. So, but like in these ecosystems, I believe that an accelerator should capture the value that it will come from future generation of founders that will spin out from these companies. And sure, I think that it might be like more universal as possible in terms of industry. But in the Baltics, I think like one of the main challenges is to create like a global company, And so, like, to attract customers from other countries or investments from other geographies, from overseas or the rest of Europe. And I think like the house of, so the accelerator of a region like this, for a country like Lithuania, should help the founders to bridge the gap between other countries and to find other customers and other investments abroad. And so
outwards oriented, looking at the global market rather than staying here. I think this is a common problem oftentimes, that we're so much in love with our local country and our local market that we don't dare to spend time on other markets. Okay, so time is running fast. We still didn't have a joke, so now let's make a round of jokes. Or
I tried.
More,
there were 3 people laughing.
All right, sorry. Then we qualify it as a joke.
That was on the notion of the small country. Yesterday we had a really nice dinner, and there was a foreign person, and she said, I think the Baltics are like, you go to one and you get 3 for 1 price.
All right, that's very nice.
There you go.
3 for the price of 1. That's a good joke. Okay, wrapping up. Okay, if you would have a billboard on the street that everyone is crossing, and everyone happens to be all the startup founders, and you only have a place for 5 words, 1 sentence on that billboard, as a message to a founder who is thinking whether to join or not to join, what to do, what would be your message? Who's first? Leonardo? I see you have it.
I would say that the founders should choose an accelerator to the risk, the assumptions when they started the business.
Okay, so the main value in your opinion is de-risking the assumptions, making it fast.
Yes.
Okay.
Accelerators should help the founders to fail faster in order to get the right path as soon as possible.
So one of the values you hear is accelerating your failure. Alexandra?
If it is not fun, it's not worth it.
All right, very good. I guess many relate, but not always. Greta?
I would say scale your impact through the network you get.
Scaling for the network. So network, ability to test and fail, and having fun.
Because
Maybe some stories to start off. One short story about the fun part of accelerators. Who has a story about the fun?
We were discussing if to put in our values on the company website tequila.
Okay. Good, great. So I hope it was useful for the audience, that everyone who has doubts will make their minds up. And also, please know these people. You know them by face now, by name. Approach them, talk to them, because they know what they are talking about. So thank you guys very much. It was a pleasure to discuss with you, and have fun.
Thank you.
Thank you. It was a pleasure to have you here. And we're not stopping. We're moving forward. So entering a new market with a new team, I think you will agree with me, is tricky, with plenty of pitfalls along the way. To help guide companies through the complexity of international expansion and help to navigate through the decision-making process of selecting the next battlefield, we are discussing different expansion strategies with experienced operators. So please welcome Povilas Rutkauskas, co-founder of Brigital, Saulius Česnulevičius, COO and co-founder of Ovoko, moderator Kevin Losh, investor at InVenture.
So perfect. I hope you can hear us all. So
Hello.
today we're talking about expansion, international expansion. Maybe to kick it off before we jump to the beef of the discussion today, I would say let's introduce ourselves. Maybe start with Tobias, Saul, and then I can make an introduction briefly to my side, and then also InVenture, and then we come to the topic of the day.
Yeah, thanks, Kevin. So first of all, amazing to be here with you today. Also to have Solus with us on stage. Solus is an old friend of mine, so I'm really looking forward to the conversation. I'm Povilas. I'm one of the co-founders of Brigital. We're a data analytics company. But before starting my own company, I was part of a company called Choco. And Choco is a platform that connects restaurants and their suppliers. And it quickly became one of the fastest growing companies in Europe. Within less than 4 years, it became a unicorn. And I was very lucky to be one of their first employees. My role at the company was to launch their business in the US. So I was the person who went to the market, tested it, built a team, opened an office in San Francisco, and kind of like grew from there. So I'm really looking forward to talking about that.
Fantastic.
Awesome. Hello, hello. My name is Saulius. Hello to everyone. Hello to Avoko people who's watching outside. So I'm the CEO of the company called Avoko, and I'm primarily responsible for driving growth of the company. And one of the factors of driving growth is actually international expansion. So happy to share my thoughts on that topic too. Very short intro about Avoko. Avoko is a marketplace connecting scrapyards of how we Lithuanians call them shroty, to the people who buy parts all around Europe.
Fantastic. And I'm Kevin. I'm with Inventure. We're the largest seed fund across the Nordics and Baltics. We just launched our fund number 4, which is 150 million, and we deploy basically across the Nordics and Baltic purely. We write tickets up to 4 million initially, and then we have capabilities to basically follow on. And we had the pleasure to work with fast-growing companies like Volt or Swappy or Material Exchange, and we kind of like always work quite close to the large international expansion plans. And I think that's something which is eligible to talk because we have seen pre-seed seed companies in the Nordics and Baltics standing in front of kind of after they raise the seed round towards the expansion, which is usually the biggest make or break point for all the seed companies because we unfortunately aren't small markets in the Nordics and Baltics, which basically needs, by default, you need to expand quite rapidly out of your home market. But it's not kind of like a quite easy task to do so. Hence, kind of like we invited the 2 experts to talk about it today because obviously they know more about it than we do. Because I also believe you shouldn't always listen to investors because we are more conservative than you might think. But maybe kicking it off with the big question, like when is the right timing to expand? Because I think we can maybe jump first into the point, like when did you expand with Choco? When did you expand with Avoko? And then basically when is the right timing? Because for us as investors, what we always would like to see initially is the initial indicators of product market fit before you actually go out. Why do we say this? Because initial product market fit enables you to basically 2 things. Yeah. First, you understand your ICP, you understand your customer discovery, and you also understand how product market fit looks like before you enter a new market, right? Yeah. And on the other side, on the positive side, you have a revenue engine unlocked, which basically enables you also to shift focus to a new market. But how's it with you guys? Maybe starting off with Saul. When did you expand the first time? And when do you believe is the right time to expand?
Yeah, so I think regarding the Avoko story, we actually, in a way, expanded from the very early stages because when the company was set up, we started seeing people buying, spare parts from us from Italy, Spain, just organically going through, Google search and finding us. So that was, a good precedent that, the product market fit exists not only in your country, but probably in other countries if they're finding you organically. But I think if I have to look at it, I think it's very important, a couple of factors to consider when to expand. So one, do you have a product market fit in your local market? And usually there are a couple of factors that might decide that. One is what we will look at is actually repeat number of sales. Are they actually repeating? Are they actually repeating with a higher degree of frequency? That's a very good indication of that. Another one is, competition. Basically, if you're really winning your local market, but you're winning, let's say you have 40% of the, penetration of the local market and the competitor has 30, is it a good time to actually expand it? You should consider whether you actually have a chance of winning that market, because if you have a small team and you expand too early, you might just focus and lose the competition. So for us, we actually started properly expanding when we really have had a dominant position in Baltics, and at the same time we had the funding to do it. So we raised our Series A and we started expanding in the Western countries from the demand side.
From Choco's side, we started expanding, I think, from the day one that we launched. I think even when I was kind of getting recruited, one of the conversations that we had was about international expansion. So I think it was very much in the DNA of the company that we're thinking global from day one. So I think the storyline was that we launched in Berlin. We had product market fit fairly quickly. Within 1 or 2 months, we launched in Paris, our second market. And I think within 6 to 9 months, I was in San Francisco opening up our first US office. I think the story behind launching the US is quite a unique one. We were very focused in Berlin doing sales. Like, it was very intense. Like, we go to restaurants every single day, like talking to 30 people a day, going to meetings and kind of like staying in the office till like midnight. And at some point, kind of Christmas came around, like December, and we realized that no one wants to take sales meetings at Christmas, especially if you run a restaurant. You have so many events, so many things happening. So there's a guy trying to get you to use some kind of app. Like, definitely you don't have space for that. So we decided, okay, why don't we go to the US and try out and see maybe there's an opportunity to do sales there. Turns out in the US, doing sales anytime is no problem. I kind of landed there alone, 3 weeks, ticket, Airbnb, and kind of like figured out how to grow from there.
Fantastic. I mean, I absolutely jeopardized now our agenda, but both you mentioned it, like, was you expanded with the Series A, you expanded basically from day one, and I think that's kind of like always the perception of what we investors tell founders, like, find product market fit, raise the seed round, on the back of the seed round, raise the Series A, and between seed and Series A, you can basically expand and then raise on the metrics, right? Yeah. But obviously now, you had more money by hand to expand. You arguably has also kind of like a more capital-intense business, like Shoko has. And obviously, you told me in the pre-discussion, you basically expanded by day one, right? Yeah. So kind of like, how do you believe founders think about like capital intensity of launching a new market and expanding? Like, would be great to get your thoughts, because I think the misperception is sometimes right, but also wrong in a sense. So kind of like, what would you advise founders to do in terms of capital intensity when launching a new market?
So maybe I'll start. I think in Choco's case, their business model is very asset light, and I think there are certain business models and certain marketplace models that allow you to fast very, very quickly, especially if you're able to expand basically just by sending a commercial team. And I think that's the best litmus test to find out if your kind of company is easily scalable, is can you find a team of, I don't know, 5 salespeople, find an account manager, maybe a customer success person, and go to a new market and basically start operations there. Those kind of businesses are very easily replicable and very easy to scale. Additionally, I think for us, we saw a market opportunity at that particular time. I think certain markets that represented a big portion of our TAM, for example, the US and Western European markets, didn't have any formidable competition. So we knew that we also need to do it very, very fast before someone else does it. So there was also kind of like urgency to launch very, very quickly in order to win those markets.
Sounds pretty much like Rocket Internet back in the days. No, maybe not just to you, so like, how do you think about it? Because you obviously have like way larger capital by your hand.
So I think we think in international expansion in like 3 ways. One is proving product market fit. I'm a fair believer that you can go into the market and with less than 50K, you can try to prove it whether actually your product or service is needed. Pavel has done it with his own like sweat equity, not having like no 50K perhaps or something like that. Another one is scaling. And scaling, I think, depends really on the business model. In our case, we are a marketplace, so we think from the demand and supply. On the demand side, quite a fraction of our users are customers, so not businesses. So with that, you can launch by scaling in digital advertising, and for that you don't need a lot of capital intensity, and sometimes you get a good return of investment on the money that you can reinvest after some period of time. But in terms of, for example, supply, and Poland is a huge market for us. You have to have a sales team because we're selling to the scrappers. We have the B2B SaaS, and for that you need the team, the structure, a legal entity, and everything else, and that requires much more capital. So I think it really depends when you think about it. In some cases it's easier, in some cases it's more expensive. We would really look at the model, but in our case, from the demand, it's actually not that capital intensive. From the supply, it is, but there's an upside of that as well.
Yeah. I mean, it makes totally sense. And I mean, maybe to shift gears now a bit, the next questions we receive always as a fund is kind of like where to expand to, right? And now I can tell you a bit how our pre-discussion yesterday went, because what we usually tell founders, like, make a thorough analysis, collect enough data points on a different market to kind of really analyze to the last data point if it makes sense to expand to the respective market. I mean, there are also a lot of soft factors like competition, general funding environment, et cetera, et cetera. And then I presented this to you guys, how we usually operate with our founders, and you said, no, fuck it. Don't collect enough data points, just go out test before you launch, right? So maybe kind of like walk us through your thought process and kind of like general approach when you decided to go to a new market. How did you do the not so much data collection part of things and decide on where to go next?
So on our side, we actually did a bit of data collection. I remember this management meeting that we had before expanding, and the management meeting started the following: like, if you would take €1 million from the bank account, which we had, and we would hire like 3 consultancy companies to pick the market to expand, they will probably find the best market. And everyone agreed in that management meeting. And then we asked a follow-up question, well, what about if we really focus as a team? Can we be those consulting companies because we have a domain knowledge? And everyone agreed. So that's what we did. We basically looked at 12 markets analyzed from 4 angles, like microeconomics. Is the average age of a car, alt? If it's all, they probably need some spare parts, competition, supply, also a little bit of growth metrics, because at the beginning we had some sales. And then we picked some countries, and we picked one country. And were we wrong? No, that country is like number 4 right now, but the number 1 is the one that we didn't pick. So data helps you a little bit, but probably practice helps you more.
Makes you productive, huh?
Exactly.
Yeah, I think there's still a lot of value to doing desk research, right? Like you can look at like very tangible things. You can look at, I don't know, like number of restaurants, total market size. You can look at concentration of restaurants per area. You can look at any kind of like metrics that are important. You can look at intangibles, right? Like what's the importance of a specific market in a larger market. For example, San Francisco, not many people know, it's the 2nd largest city in terms of Michelin-star restaurants in the US. So it has like a lot of importance in gastronomy. You also have a lot of kind of like exposure to investors and top talent. So there's like intangible things that make a market very attractive. However, there's a lot to learn when you go into the market and speak to the people themselves, right? You can build very complex Excel models, and it makes you feel very productive and very smart, I think. But when you go in and talk to customers and actually try to acquire customers, you also get a depth of knowledge that you wouldn't have otherwise. You not only understand if the market is ready for you to expand, but you also learn, okay, like how can I do sales here? How can I how does the supplier market look like? How does the operations market look like? How does the talent market look like? There's a lot of things that you learn in those, let's say, a month or so of doing kind of market testing that otherwise you wouldn't know because you're just building an Excel model. And on top of that, I believe it's not that capital intensive to do so, like buying a flight ticket, getting an Airbnb, and, like a small budget for food. So the person who's on the ground doesn't die from hunger, I think is more than enough to get all those learnings.
So you basically would advise like, over-engineer on basically being on the ground and test before you launch, and kind of like not to put too much weight on the data side. I think that's everything what a VC doesn't want to hear when talking to your companies at the end of the day. But maybe like, what is a piece of advice you would give every of those early stage founders when they think about expanding next, right? Maybe like also consider the attractiveness of the Eastern European side of things, right? Because I don't know how much you know about Wolt's expansion story, but Wolt came quite late to the game of food delivery in 2014, right? I mean, in Central Europe, we had food delivery, we had Foodpanda, Lieferando, Deliveroo, so you could basically argue the market was quite saturated, right? So hence, what they have done at the end of the day is, and I can tell you they have not opened up their own Excel sheet, I can tell you that, expanded Eastern European, kind of like went into the overlooked markets. So maybe like, elaborate on kind of like what is the piece of advice you would give early stage founders in terms of like assessing market attractiveness, and maybe also thinking about what do others not do, what I can do in order to maybe capture market share others maybe oversee.
Yeah, I think it's super important to think about timing. There are markets that are open opportunities, and you can go in without competition and win a lot of customers, get a lot of revenue, build up the team, build up the product, raise another round, and doing all of that like in a fairly easy way by taking markets that are not competitive. And there are markets where there are existing players that are quite well-funded, have good products, have strong teams. And I think it's not a question like if you should go into these markets, depending obviously on the situation, but it's also a question about like when you should go into these markets. And I think it's also understanding your strategic position. Where are you? Maybe you're a smaller team, maybe your product still lacks some features and you need to wait till entering those competitive markets. And then when you do, that you enter in the right way, and then maybe your competitors end up like spending a bunch of money, competing with each other, giving each other discounts, and then you can come in and really take the market. I think that's what we had with Wolt and Berlin, right?
I think there are three things that I would look at based on our experience. So one is basically, well, 3 factors basically. One is how big of the market it is. And it can actually go both ways. Like from the demand side, usually the bigger the market is, the better. You don't necessarily compete directly that much with the competition. You have a lot of buyers who already have a presence. But in some cases, smaller markets make sense as well. So especially if you're like a marketplace business and supply and constrained marketplaces. So you want to dominate the supply first. And if the country is big and you need to dominate the supply through the B2B of sales, it might be easier to win that country by the smaller one. And when you win that country from the supply, the network effects usually kick in, buyers becoming very, very cheap, they go directly to you, don't need to do a lot of advertising. Second component that I would look is competitiveness. Like in our case, France, we thought it's a very competitive market, but actually if your offering is very good, you have good prices, or your product is 100% better than the competition, you can actually take the customers that already know how to use your service and acquire them cheaper than actually educating the market to use it. And the third one, very quickly, is I think it's a regulation. Sometimes we overlook in the auto space, like in France, for example, there's a law that requires repair shops to offer used car part repair as an alternative to the new one in writing, and that's regulated. Like, and it's only in France at the moment, so if you miss that, it might be missed opportunity as well.
Maybe to add this, there's a funny story from Bolt, our beloved Estonian unicorn. I remember when they wanted to go to the UK, they overlooked the license for taxis there, right? What they thought, okay, well, we don't apply for a license for taxis here. It takes us too long. We want to go to the market straight away. So they acquired a small company with a taxi license and thought they can operate on this license. Well, took them 3 days until they are out of the market. So I think it was probably the fastest exit out of a market Bolt ever went into.
Fastest entrance, fastest exit.
Exactly. Now talking about execution, right? Because I think a lot of founders are also kind of like thinking about how do I execute on it, right? And I think always comes down to successful expansion comes with a very successful execution excellence, I would even argue, right? So kind of like what is kind of like the must-dos in your point of view to be efficient and also effective when you execute the expansion strategy?
I think one, in our size especially, it's very, very important to align the teams to actually focus on that. So, before when we did tests in other markets, you would have in the management meeting say, well, let's try to focus in France for the next 2 months, etc. But everyone also has their own activities goals. Now we do it a little different. We take 4 teams and we said, look, we're going to scrap OKRs for you. You're going to be focusing on one single goal, expanding in this market, on this project. Give incentives, give more resources to that, and really say that's the most important for the company. If someone else goes in your way, put a blocker in it, redirect to the management. So I think hyper-focusing part of the team, but like super intensively and motivating them on that goal is very important. And another one is basically strategies. I think, in our case, when we entered France, we tried different strategies, B2B sales, direct marketing activities, paid advertising. And you have to try a lot of things very, very quickly and understand what works. Because one is product market fit, and another is actually channel market fit. Some channels might work for some businesses very well.
Oh, makes sense.
Yeah. I would love to add on to what Solus was saying. I think one of the fundamental things are like the company values that are I think from day one, very, very important. And if the company is slow, it takes time to make decisions, it's risk averse, it's unlikely that an expansion team can succeed because you want those people to be lean, you want them to be able to take risks, to take decisions in the market that need to be taken to win those markets. So I think that's the first thing, is like kind of having the right culture for expansion. Secondly, I think it's also hiring the right people. It takes a certain type of person to be really successful when going to a new market and basically starting a startup within a startup. And it's really, really hard. It takes a long, many hours. It can be very, very lonely for people because you don't know anyone. You go into a foreign land. And you need to hire those type of people who are, first of all, very ambitious, very hungry, very humble, but at the same time think that this adventure of going and starting a company somewhere else is awesome. Because if you don't find joy in doing this, like it's very, very hard to do it successfully, I think.
It makes a lot of sense. So I think to summarize it, pure focus or crystal focus, KPI tracking, kind of like know exactly what your North Star is. You say kind of like lean structure, fast decision making, and then hiring the right people. Maybe we add on the talent density here, right? Because I think that's a huge discussion in every board meeting before you expand, right? Do we need to hire on the ground people, or do we shift internal people to the respective country we are expanding to, right? I think that's the difference between pure B2B SaaS, because I think in pure B2B SaaS you need to hire people on the ground who can chit-chat with the respective customers in their respective language. But like, how does it go generally for you? How did it go? Because there's always the trade of like, do we take trained people or do we train people? What is more capital efficient?
Yeah. So at Choco we had this concept of thinking in generations. So for example, let's say you open a market in Berlin. Let's say it's enough to have 5 people, but maybe you'll add 7 people, because then after you launch the market, out of these 5 people, you have 4 or 5 who can also go out and launch new markets. And kind of like this allows the company to grow really fast. I think there was a time where they were opening a new market every 2 weeks. So first answer, I think, is like structural. Okay, like how do you how do you train teams so that they can expand one after the other. And we need to understand that expansion teams are also cultural or knowledge carriers within the company, right? Like you have your headquarter, and to hire a new person and to maintain the same culture, maintain the same processes, understanding of the product is very, very hard. So oftentimes, oftentimes teams that have been in the headquarter or maybe in the other expansion teams, they also carry that knowledge of product, processes, and values, as well as they have connection to the HQ, where if there's, let's say, like there's a feature request from your market, you already have those contacts and you can kind of like push that to be higher in the product roadmap and things like that. So I think like the structure is very important, and also the values. Yeah.
How was it for you?
Yeah, for us on the supply side, because we do sales, physical sales, we realize that almost every single culture has some like cultural differences. Even Poland, which is like our neighbor, very close. So our kind of strategy was to hire one person, which is your advocate, and he will build the team and the structure behind it. And I think that's the most important part. And for that, my advice would be to everyone else: if you have investors in that country, you will be able to just utilize those connections to find the talent. So in our case, in Poland, for example, we hired ex-Uber GM, like super, passionate guy, young, full of energy, and he built a team behind it. He even, said, my culture is going to be different in Poland. So instead of renting an office, he rented, a house, put all the adverts inside the house, and off scrap yards, cars, etc. And that's how he built the culture. But he's your advocate, and he's making that efficient. On the demand side, we have support here in Lithuania and French-speaking languages for French markets. So we don't have people in there. So on that side, I think if your product is more of a digital advertising, through the digital advertising strategy, if you're utilizing that, you might not need to have many people until a certain stage. And that's actually, talent density is not that important factor. Later it will be, but at the very early stage, not necessarily.
That makes sense. And now kind of shifting a bit gears, I mean, obviously, you have a couple of VCs on the cap table. You work with Shoko, which is amazingly funded, right? So how would you advise early stage founders, kind of like when they're in the conundrum of basically, you have on the one hand side the VC who tells you like be conservative expansion, but on the other side potentially missing out on a quite capital efficient expansion strategy to unlock new markets and revenue, right? So how would you advise them? How would you think about it if you would redo it in a sense?
Yeah. So from the VC side, I would think when you talk with VCs, especially during the fundraising, right? They evaluate your company, but I would be very, open, but at the same time, we take a punch of salt with advices from the VCs that don't analyze your company as much, because every single strategy is very specific. But what I would advise if you're thinking international expansion is to have someone investor that done that before. So in our case, we have an amazing investor, like super active, Mantas Mikuskas, who actually done a lot of international expansion. So he tends to give you advice and basically not to push you, to think it through. And he says, like, maybe it's too early, maybe it's not. Because the VCs that look at it, if they have, 2-3 meetings, sometimes they might not be able to assess what's the most optimal. Is it really capital intense? Is it not? So I would take it with a punch of salt, but having someone internally that would advise you that done that, super huge asset.
Yeah. How was it?
Yeah, I didn't have that much exposure to VCs, but I know that our investors were all kind of aligned on our global ambitions from day one. And I think that's also was one of the criteria of selecting them.
I mean, it makes tons of sense, right? And I think what obviously we discussed today, kind of like how to expand, when to expand, how to assess new markets, etc. You always obviously need to always differentiate what type of business model you actually drive, right? For B2B SaaS business, maybe not applicable what you just told us, but maybe for kind of like marketplaces, for instance, or platforms, I think it's easier to basically scale faster than maybe others, right?
Yeah, exactly.
And given we're running a bit out of time, I would like to give both of you, and also I'm going to tell a good story about Volt, the biggest failures in your expansion. Like, what is the single, let's say, disaster even when you expanded to a new country? What is the biggest disaster plus learning?
Very good. Pavelas, what's yours? I think we didn't have a disaster, in terms of international expansion that much, but I think we had some misconceptions that prevented us to do it efficiently. As I mentioned, we done this Excel model, SL, and we picked the market. Now it's the fourth market, but the one market that we overlooked is a highly competitive market, like to us. But actually, if you have a good offering, that's even easier to expand, because you basically take over the customers of another company that it has. And I think that if we would have knew that faster, or if we wouldn't have that preconception, that would allow us to even expand even faster. That's one. And another one is basically just not aligning the teams, I guess, because if you don't align the teams, partly they will focus on that, partly they will focus on activities. You really need to have that crisp focus, and I think that would have saved us, months as well.
Yeah. When it comes to maybe lessons learned, I remember when we launched our first market, I recruited a team of I think salespeople, 6 salespeople. We got on the plane and we kind of flew to the US, and it was very, very intense. We kind of worked every day super hard, and I think the market launch was fairly successful. Within a month or so, I realized that we actually have no one who's looking after the customers. We have a bunch of people going out hunting and trying to find new restaurants to join our platform, but we don't really have a person who's kind of looking after them post sales. So that was kind of a big uh-oh moment where we realized, oh no, we need an account manager, someone who will take care of all these customers and kind of make sure that the ship kind of is steered in the right way with all the customers. So we kind of very quickly converted one of the salespeople into an account manager. She loved it and kind of solved the problem that way.
Well, pretty much aligned with what you said in the beginning, rather test before launch, and kind of do capital efficient, right? And I have the allowance to basically explain now one of the beloved Volt stories, because Tony, the head of international expansion, should have been with us on stage today, but he's unfortunately sick, and he asked me to tell the story. So when Volt expanded out of Finland to Sweden as their second market, they did it super green behind their ears, how we would say in Germany. So absolutely no idea. They didn't localize the product. They sold still the product in euros, even though we all know Swedish has SEK as a currency. They didn't have a proper corporate governance structure. They didn't know who makes the decisions. They didn't have country lead, etc. But the biggest failure they had, and they learned quite significantly on their market entrance campaigns or marketing campaigns when they entered a new market, was what they have done. They always did something like a big splash with guerrilla marketing, right? And what they have done in Sweden as the first opening is they sprayed the blue pepper mills basically on the billboards. You remember, in the restaurant, the big pepper mills, right? And on the next day, one of the largest newspapers in Sweden basically said, Finnish dildo company is expanding to Sweden because they apparently look like a dildo, not like a pepper mill, right? And this is a good example how marketing can also fail. So it's basically, you will never get all the data points by hand to basically proper plan through an expansion strategy. It's always A/B testing at the end of the day, right? So, and I hope that you enjoyed the conversation with 3 of us today, and I believe you are very 2 experts in expansion here by your side. And I'm also quite sure if you ping them on LinkedIn, they're probably happy to give them advice to you. And I believe also a different point I wanted to mention is obviously that you don't always need to go to the center and to the biggest markets to expand. We have enough examples with Bolt and Volt in the Nordics and Baltics, which shows also expanding Eastern European first and going to overlooked markets is also a big success factor, right? So I hope you enjoyed it, and thanks very much, and thanks for coming here.
Awesome. Thank you so much,
Thanks
everyone.
a lot.
A big thank you goes to you, gentlemen. And our next discussion is named Decoding Go-to-Market Strategy in Turbulent Times. In a high-stakes world of startups where every decision can make or break success, understanding how to navigate a go-to-market strategy in uncertain times is a must. Please welcome Dalia Lašaitė, co-founder and CEO at CG Trader, Tomas Montvilas, Chief Commercial Officer at Oxylabs, Andrius Juozapaitis, CEO and co-founder at Algori, and moderator Domas Urniežius, co-founder and CEO at Growtech.
Hello everyone, and thank you a lot for speakers finding some time in your busy schedules. Today we're going to unpack, I think, a very important topic, especially for the Baltic startups, go-to-market, and especially go-to-market in certain times, right? And how you need to adapt your strategy, how you need to adapt your tactics while penetrating foreign markets. We're very lucky that all of speakers have different experience in different regions, in US and Europe mostly. And super, super excited to kick this off. Our discussion, to be honest, already started in a prep room. So let's continue. And I would like to start, with the short introductions. So maybe, Andrew, let's start from your side.
Hi, everyone. I'm Andrus, CEO and co-founder of Algori. We are a consumer analytics company that is reimagining the consumer panel. We have a 20-person team, post-seed, half in Lithuania, half in Spain. And we had the fun times of entering and penetrating a very monopolistic market this year.
Amazing.
Yep. Hi, guys. My name is Thomas. I'm Chief Commercial Officer at Oxylabs. So for those who don't know, Oxylabs provide infrastructure solutions for public web data collection, and majority of our clients are based in the US, so probably that's why I'm here. Right?
Yep.
Okay. Hi, everyone. My name is Dalila Sheita. I'm a co-founder and CEO at CG Trader. CG Trader is the world's largest 3D model marketplace. We run the marketplace that provides stock 3D models for designers and other customers. And it's very popular. It has around 8 million users and really used by plenty of 3D designers. And then we have another business line that is called Modelry, and this is 3D content production for enterprises. So today I'm excited to share our experience in go-to-market for both of these business lines.
Thank you. So let's start from your experiences over the past year. We had a lot of different things happening in the market. The tech kind of bubble kind of bursted a bit. And Andrew, let's start from Europe, the closest region to us currently, and how you adapted your go-to-market specifically in Europe. And I know that you are working a lot in Spain. So it would be super interesting to hear a bit more.
So I think the European market is, the challenge with the European market is that it's not uniform, it's fragmented, right? And different countries have significant differences amongst each other. So Spain and Southern Europe is very different from maybe Nordics, the Netherlands, the UK. Spanish market is especially conservative, and it's actually the second startup where we're trying to build the first case study enter the market in Spain, and it's challenging. So the word adapt is probably the key word for us. We had to change everything. We had to change our business plan, our pricing, our approach, with the goal to basically cut complexity, cut sales times, cut the stack, to have less people doing more. We tried to be really innovative and close pre-sales agreements that even when you don't have the product, you sell it and you use that to fundraise and get money. In the US, our peer company was able to close 5 companies with 2.5 million euros in pre-sales that start on the first day after signing the contract. In Spain, we did the same thing, but it was 2 years, out of which 1 year of work is free, and the next year is only like 400K from 6 companies. So the scale is different. You have to adapt, but the key goal is to find stuff that you can sell now quicker. So instead of 6 months, how can you sell something in 3 months? And we changed our approach from building fancy SaaS interfaces to just basically giving the clients what they want in a PDF form, in a CSV form, in whatever form they want, just to enter the market and then go from maybe the first client being 10K to the second iteration of the same client being 100K, instead of the other way around, trying to sell the 100K from the first hire.
Wow, super interesting. And so let's jump to US. So Tommy, Oxylabs are, everybody knows, performing like crazy, right? You are acquiring American companies. Yeah. It's so bizarre to kind of think that Lithuanian company acquiring Silicon Valley company, right? So tell us a bit more about your year in US and what you guys changed.
Sure. I think we should firstly define what is turbulences, right? And what type of turbulences we're facing, because in the last 3.5 years, we faced global pandemic, larger military conflict in Europe. So this period for me feels like a friendly swimming in the rainy weather rather than turbulent times. But it doesn't mean that there are some changes in some markets, right? And talking about the US side, we see that a lot of tech companies, especially those who were VC backed, are tightening belts and kind of saving. But at the same time, we don't see that enterprise deals are stopping. They're moving further. They're more kind of conscious and kind of slow down for a bit, like, oh, we don't want to make decision yet. But now it's kind of returning to normal, and at least on the enterprise side, we don't see too much of bigger changes. What we see that a lot of small companies are kind of leaving the market and going bankrupt, but it is what it is. But that's from the market side. From our side as Oxylabs, we were bootstrapped from the beginning, so we don't have that problem. So we use this as a unique opportunity to double down on investment, especially on sales, and doubling our sales both in Lithuania and in our key markets. So.
Amazing. And Dala, we had the chance to work together as well. I know that you had a really, really big clients in US, and this is one of your focus for years now. So what you saw, how CG Trader kind of dealt with all the turbulence?
That we finally rebuilt and the traffic is back to pre-ban levels. On the other side, on the Modelry side, which is an enterprise targeting business, we had also quite a turbulent year in terms of the customer profiles. Our ideal customer initially was e-commerce companies and furniture companies. But as you know, there have been talks about recession, there have been changes in interest rates that impacts that market. So then we've been following it very closely, and then we moved more towards the technology companies to target that market as well. If you remember, there was quite a lot of metaverse hype and everybody was trying to build different applications. So we went after that market. And now more recently, we are seeing more demand on the AI side. And of course, we are bringing up new business models that are related with AI. So it's been a lot of adjustments in the go-to-market.
Okay, thanks for sharing. And let's speak about more about the differences, how you're approaching those markets, right? So, for example, in Europe, Andrew, so when you're working with European companies, are you trying to get them through partners? Are you doing like very robust outbound? Are you more like leaning to the inbound side? Like how you're tactically, moving?
Assign resources.
Yeah.
So we are operating in the consumer goods vertical. So the key client groups that we have are consumer goods manufacturers like Coca-Cola, PepsiCo, Unilever, retailers, and then media agencies that work with the sector. So it's a niche vertical, right? So we do a combination. We started with outbound, and the key factor, I think, as in any country, if you're a tech company and you want to sell, you have to have the local sales force. So the deals that are the quickest in terms of timeline from high to money in the account are the deals where the sales rep has a personal relationship with the enterprise, has a previous history with them. Everything else takes a longer time to develop and build trust. So first of all, we invested in having local sales representation. We started with a lot of outbound and at the same time kicking off inbound. In our niche, it's super easy, because you don't need to spend, waste vanity marketing money to get featured in Fast Company or Fortune or 30 under 30 or all that bullshit. What you need to do is you need to focus on 2-3 key sources that in each European country, all the people in the sector read. So you can go to 1 or 2 clients and ask, where do you get your market knowledge from? Oh, I read this, I read this, I read that. Do 3 ads, do some content marketing, and the inbound comes in. So now we have a healthy combination of outbound effort and inbound effort. But still, the lead cycle, that's the challenge. How can you get something done in 3 months instead of 6? So it's always a combination of being flexible and being able to adapt to what the client needs. That might not necessarily scale in the long term, but at least it gets the revenue in the pocket, and it gives one the ability to maybe not rely so much on investor money, which is key for everyone now, because you need to survive for as long as possible without hoping or having to go and raise big rounds at the end of this year or even next year, I think.
Great. Okay, very interesting. And Dala, Andrew started with retail. I know that we have some retail customers as well, but not only the retail, right? And I know that you have very interesting approach in US. You have partners. how you are, dealing with more like a tactical, what kind of tactical moves you're making, recently?
Yeah, so I think the way we could summarize it is pretty much kind of account-based selling, perhaps that would be the name. So we have a clear list of customers that would potentially benefit from the solution. They have to be large retailers, and then over time, they have to start investing into AR. They need to convert their products to 3D models, ideally in furniture space or similar. And so we kind of we're narrowing it down over time, but actually I think one approach that has also worked for us is having our technical team quite involved, because often the customers that take the decisions, they actually have also 3D designers or 3D experts that are kind of pushing these projects forward, so that has worked quite well. And then we have had some very successful, and currently have some very successful collaborations with US-based sales, where we just, I mean, not every time it works out, but we have some really great experience, and it has been extremely valuable when the person that you hire knows everyone inside out within your target group and can go have a coffee with this person and figure out what they thought about your pitch and about the meeting and so on. So it's really just the results that can be really very, very good.
Yeah. And Tomei, Oxylabs, right? I know that you have an outbound machine.
Yeah, we have some people.
Yeah, but can you tell a bit more? Maybe you're doing much more than outbound. Maybe do you have channel partners in the US, like how you're
right.
doing that?
I'll try to relate to maybe your original question on the market difference as well, because also majority of our kind of clients in the US are in the retail e-commerce business. So most of our sales are direct sales, but we just recently started hiring people in the US. So most of our sales were done from here, from Lithuania, so-called inside sales. And we're very happy that we have that talent to do that. But we needed a lot of people to build that motion. But when we were selling, because we were selling globally, and of course US works very well for us, but we're trying to sell into UK and other European areas, and especially for retail industry, we see very interesting differences. So retailers in the US are significantly more focused on the tech part and doing it internally, like building it, right? So building the solutions, while especially UK retailers are very dependent on consultants and third parties. And for those who are launching their own B2B businesses, thinking about these kind of larger traditional industries, always think about the value chains. So that particular area, is that done internally or is it done by third party? Is there a space for you to do that? Because we noticed that when we talk with UK retailers, they already want like 100% a solution, which works for them, right? So extremely customized. While US retailers say, well, we want to build it internally because this is, especially talking about data, this is a strategic area for us. So we don't want any third parties involved. We want to control that part. So those are sort of very kind of few differences we notice when kind of playing in the same industry but different market.
Got it. And what about Central Europe? Do you target Central Europeans as well?
Yeah, Latin America, we have quite a few large clients there. What's very interesting that it's a bit different selling methods, right? So again, we were able to do that from Lithuania, but what helped us is that we spent quite a lot of budget on going to our clients, so visiting them in Argentina, in other countries, and building that relationship. A lot of people think that you need to speak Spanish to sell. Yes, but you can without doing that. But if you want to build a long-term relationship, you need to have a Spanish speaker amongst your team or somewhere in order to kind of have a longer relationship rather than someone just drinking coffee would decide to go with a different vendor.
Absolutely, yeah. And what we recently kind of saw, with my company is that people really missed face-to-face time. And when you offer face-to-face meeting, oh yeah, of course, let's do that, because we haven't had that for a long time. Great. And what about budget? you know, the most fun part for founders especially. You know, there's of course less VC money in the market. You know, everyone is really conscious about where they're spending their money. So, how you realigned your go-to-market budget and how the proportions changed? You know, so maybe Andrew, from your side, you're kind of early.
I think I think it's more of a meta question. Like for the these are the OGs. They're the companies that are established quite a while ago and very successful, and they have the ability to have budgets, change budgets, and so on and so forth. If you're an early stage startup, I think we took a difficult route by deciding to start in Spain because of the. Now, for us now, because we've already committed and started in Spain, we're a very deep techie business. Like we have to collect data for 2 years for it to have value, for trend comparisons and so on. So we committed. So now we said we're going to grow the sales team, we're going to grow the marketing budget, and then the market's crashed, and now the adjustment is that you have to do more with less. So we have the challenge of having to do sales, customer delivery, content marketing, and some product development with the same core people of 4 or 5 individuals. And the only way, I think, the only reason that that works is that we're very aggressive with our ESOP. So as a post-seed state company, we have 14% of our cap table dedicated to ESOP, and all of these 5 core members, like that's 2.5 times more than the European average based on Index Ventures data. So the only way to collapse the stack and to really come together during these hard times and ask people to do more in terms of something not in their competence area or to do more with zero budget or very limited budgets is to be really sharing the upside from doing that. So we're a small team. We have the ability to make everyone an owner and share the responsibility. But in reality, the plan that we had at the point when we fundraised and the reality right now is very, very different. Because as someone that's not fully reliant on retained earnings, we need to expand our runway, which means making a lot of cuts and making the sale and go-to-market journey a lot more difficult for us. But at the same time, it's better to have the ability to have 6 or 12 very difficult months than one very easy month, and then, as our colleagues have said, a lot of small companies die. So at this point, is adapt and survive.
Yeah, the ESOP is actually interesting. Takes kind of to save, to kind of lock the talent. And I know Dala launched last year. I'm not sure about Oxys, but I'm really happy that it actually starts to get a lot of companies in Lithuania start to do that. So that's a good one. And
we have the best regulation. We have the best regulation in the world, the Baltics, to reward employees with stock. And hopefully we can do more education and make everyone a co-owner. So that when success happens, as it already has for these companies, that trickles down to other startups, other companies, other wannabe founders, maybe even.
Yeah, this is a shout out for Unicorns of Lithuania. Actually, they did. I mean, tremendous job in the back end.
And the VC, VC association.
And VC community. Yeah, teamwork makes dream works. Now let's jump to OGs. So, Toma, you had much more budget probably than the typical early stage startup. So how the proportions changed, there?
So as I mentioned, because of a lot of companies kind of tightening up, we're kind of double downing on investment. So those who divest, right? We actually invest more. And our goal is to actually double the budget and use that opportunity because we see a kind of increasing competition overall in the market. We see new players kind of entering the market, and we want to have that stronger position as we're kind of placed right now in a first spot. And there's new players coming in. At least there's, with us, I think 4 companies selling proxy infrastructure only in Lithuania. So it's like, you know, in Latvia, there's two companies who sell T-shirts, right, printing T-shirts. So it seems like it's a Baltic thing. We don't go far away from what works. It's just kind of, you know, copy-paste. And but if it works, you know, it's good news. But in our case, our goal is to keep our momentum, keep the #1 spot, and kind of protect that market share by doubling the investment.
Great. And Dala, what about you?
Yeah, so in terms of budgeting, of course, I think you know, we went through a process where, of course, we did eliminate a lot of strategies that were maybe more kind of nice to have or experimental, focused on the core, what works and what, you know, eliminate what doesn't. And then maybe another aspect that, you know, I think after this year reflecting worthwhile to take in mind, not only the level of your revenue you should think about, but also the variability. Because if you have a business line where it's like 1 month it's like, I don't know, 100K, another is 500, then it's 50K and so on, you have to also have a much kind of smaller team than if you have like a steady 100K or something like that. So this is, especially for the enterprise, it's remedied very much by long-term contracts, but the long-term contracts don't always work out in every market like in ours.
Mm-hmm. And like, how you would advise like you know, early stage founder, you know, what would be your main advices, you know, to them? Like while budgeting, you know, trying to figure out where you should put more money, where you should put less money. Like, what is your main message like that you want to, you know, tell to the young founders? Everyone.
I know it's kind of like advice that I should be using or telling to myself, but in reality is, I think, you know, it depends on the case, depends on the situation, how much revenue you're generating, what stage you're at, what runway you have. I think the key now is for everyone, is to become as self-reliant as possible. Mm-hmm. But at the same time, you have to understand that in a startup, like if you cut all the experimentation in your pre-product market fit, maybe the whole exercise loses purpose, right? Because you're not going through the feedback loop, you're not learning, you're not getting closer to the product market fit. So I think it comes down to the fact that, you know, it's not going to be comfortable, it's going to be hard. You still need to do some iterations, some experimentation, but you need to really double down on what's core and not be able to cut. You know, not be able to stop, sorry, but you can cut what you can cut, and then, you know, you cannot cut everything, right? So something needs to be the main priority. Yeah. But it's definitely not the case that, you know, at some point when the market is hot, joining a startup or starting a startup is almost a lifestyle decision. Yeah, now it's not a lifestyle decision. It's hard, and that's why the VCs and the investors are saying, oh, this is going to be a good vintage, because people are joining with the understanding that it's going to be a challenge. So if you're up for the challenge, do it, because, you know, you'll do it anyway. But if you're joining for a lifestyle decision, then maybe wait a few more years until the party comes back again.
That's for a fact. Yeah, and I heard some stories while working with startups that they, you know, for some startups, the investors pushed them, burn the money, you know, pour the money in. You know, and it's very important to keep that resilience. You know, that no, guys, like, let's take it slowly. Let's wait for the better times, and then, you know, let's move faster. You know, and maybe, you know, some key takeaways, you know, for founders like Tommy or from Dala from your side.
Sure. I mean, I can give a tip maybe on go-to-market side, especially for those bootstrap businesses. Never skip on client relationship and client service or customer service. I mean, everyone knows that your product is not going to be as good as, you know, a large enterprise, but that relationship kind of even out the issues. And believe me, Oxy Labs was underdog for many years, and we kind of were able to beat the market and beat our competitors by basically investing into relationship, into kind of trust in us that we can deliver, although our product lacked in functionality, in speed and other areas. And this is, I think, very important tip for those who are, you know, testing the waters.
Yeah, so from my side, I think what Andres has said about product market fit, I think it's very important to understand where your startup is. Is it pre-product market fit, or is it kind of getting towards that direction, or is it if you have a strong product market fit? And you know, the current times, they are a bit more maybe harder. The people are spending money with the much more strings attached. That's not so easy. And when I think growth and product market fit solves a lot of these problems, when you don't have it, you will have all kinds of issues. Teams, you know, they are unhappy. People get into conflicts and so on. But it's just everything becomes much kind of edgier in a way, but you need to understand that the fundamental problem is how you're doing, where is your product market fit, and if you can have the growth and try to solve those areas. And I think maybe the final note from my side that these times come and go. And maybe if it's your first startup, maybe it sounds scary, but you know, we are all signing up here for this kind of roller coaster that is very, very interesting and rewarding. And so therefore, you know, this is part of the business.
Well said. So thank you a lot for sharing, you know, really, really insightful insights, and thanks for audience for listening. So I think I can wrap it up. Thank you very much.
Thank you. Thank you for the moderation.
And I hope you are ready for our last discussion. The name of the discussion is Empowering Startups with Limitless Opportunities. So please welcome Laimonas Noreika, CEO and co-founder at Ask2Sell, Kamilė Jokubaitė, CEO at Attention Insight, Dovydas Vangutė, co-founder at Learn, moderuoja Andrius Milinavičius, general partner at Baltic Sandbox Ventures.
Yes. So hello everyone, this is the last panel. You still need to survive until we will get to know who gets the biggest prizes. Okay, let's give them a moment, right?
Yeah.
Sure.
That people are leaving, it's okay. Yeah, it's fine. It's a good topic. It's a good topic we chose. Obviously everyone did expect Edmundas sitting in my chair. But at this point, yeah, there are still some viruses going around, and sorry to say that shit happens, so I will be the replacement. At this point, hopefully everything is going to be all right. So, my dear panelists, some amazing people that do love technology. Obviously, half of this hall is already puking from the topic AI, but let us finalize with everything and literally destroy you guys before once again we will be looking at actually exciting pitches on this specific stage, right? Okay, what a world we live in. AI this, AI that, AI empowers, AI does this, doesn't do this, and whatever. My first question, just to open up, to give a bit of the context for our discussion is, how did AI, how we see it today, impact your personal life, everyday life? Maybe I can start with you.
Yeah, I'll definitely start with working, because I tried using AI in my daily personal life, but I caught myself at a certain point that I'm like, yo, I'm getting dumber. So stop that, but I'm using it daily basis with Copilot. So if anybody's a developer here, GitHub Copilot, freaking rocks, saved me hours and hours and hours of work.
Okay, Laimonas, what about you? Are you throwing away your phone when you're driving home because you do remember how to get home?
So at the beginning, I was really a heavy user. I would describe it, I was using it daily for content generation, and but like right now...
Yeah, turiu, gražiai.
Yeah.
Lovely. Lovely.
I agree, totally.
Yes, mics off, people.
Yeah. And right now I'm using it way less. Mainly I'm using it to automate some of the tasks that I have at my job as a founder. So to give you a very concrete examples, to generate terms and conditions, to generate privacy policy, works like a charm to get you a starting
It's an
version.
amazing way to actually use the technology, because no one ever read those
Exactly.
user licenses, etc., right? We just click accept. Camila, what's up with you?
I'm started as well as a very heavy user. I used it for everything, generating content, generating blog posts, generating LinkedIn messages, generating content for posters. But then I dialed down and focused on the tasks that actually bored me, so like generating terms and conditions or legal documents, which no one reads. And I'm using it for my personal preferences as well. So for example, if friends are coming from another city, I'm using it for planning of travels and things like that. Planning of meals for the family is also a great way to use ChatGPT.
So there's no place left for human interaction and improvisation. Okay, I get it. But at this point, half of this hall are the startup founders, are the people that are actually trying and they are searching for the ways to execute their ideas, to solve real problems in the world as soon as possible, as effective as possible. And obviously, all of you sitting here, you already found a way how can you empower basically your daily life or your daily activities with generative AI, right? For everyone to understand, very briefly, so what the F are you doing with your
what the
company?
F am I doing? And so, Learn, we create personalized content for education using AI.
Who needs that?
You do.
Okay, go
But
ahead.
I don't know, maybe you don't, but basically right now we're focused on language learning. So we create various content for people to read, practice writing, practice their grammar, talk with an AI teacher, but it won't say you're dumb unless GPT goes nuts and it says you're dumb, and where you can feel free and not worried about making mistakes, because AI doesn't give a shit if you make mistakes or not. So, yeah.
Good approach. Camila, what's up with you?
So we have an AI model which predicts where people look. So we basically enable marketeers and business owners to optimize their marketing campaigns, their websites, their banners, their posters to grab an eye. This is what we do.
Okay, and Limas.
And for me, it's a bit personal story.
It all began in 1996 when I finally looked at the screen, right?
Yes, so I'm a recovering startup founder. Previously, we have founded Zity City. And one of the reasons it have died, it was because of high customer acquisition costs. We had like low customer tickets. Customers were paying 200 euros per month to us. And we had tens of salespeople doing like sales which could be completely automated. And like right now, we are building a software that we wish we had back in those days. So I'm a founder of a new company called Ask to Sell, and it helps busy founders to completely automate sales process or for small deal sizes, from the called out email to objections handling, negotiations, and till your deal gets eventually closed. It sounds like a magic, and
Dude, it sounds really sexy.
Yeah. So
how's with the traction?
So that's why it sounds really sexy, because it wasn't yet tested in a real market.
Oh, right. Okay. Theory. In theory, it works.
In theory, it works. So the first customers will get to try it in the next 10 days. Our CTO is not attending the conference. He is coding right now. So fingers crossed, in 10 days, we'll give you a try.
Awesome.
You were just mentioning that you don't need to code anymore, right? Because the AI does for you. You see people do it.
But he's also using Copilot.
Okay, go ahead. Okay, so
I think
it empowers them, right?
Yes.
Yeah.
Okay, at this point, I do remember back in the day, in March, something like that, I became very curious on the, let's say, the dark side of AI, and I was watching few of these AI dilemmas. Everyone saw those presentations, right? And I do remember those two guys that were talking on the stage. They were literally laughing. They said, like, we need to update this slide because it's already too old, right? We did it the night before, but it's already outdated, right? Because we get so many various, very interesting, very handful, very effective applications every day, right? It's not only ChatGPT, for God's sake, right? There's a lot of different applications that are already available, and they can actually empower you. So at this point, if I would ask you, look, we have a founder sitting in front of us. He has an idea. It's just an idea. No MVP. Nothing is there. What would you, let's say, mention as applications that you would start with, and you would advise him to check it out?
Yeah, I'm looking more from a developer's perspective.
Okay.
So I like to get my hands dirty. If you're not technical, go ChatGPT. I mean, most of the apps are ChatGPT or GPT-4 because it's still the most powerful LLM as of now. So I would definitely get your hands dirty and try. Don't go in those courses where for 4 months or something, you'll learn everything you need to know. it's outdated. Everything gets outdated in a snap. Get your hands dirty, try to deliver value, and get to the market ASAP. Because the market ain't waiting. And once you figure out you got your hands dirty, I'd personally recommend LangChain. So that's something that saved me a lot of trouble and made everything way easier to abstract away. But that's more developer stock, and I don't think everybody's interested in developing here. But LangChain is awesome.
Okay. Camilla, you're living with something called AI for quite a while, and at the same moment, you're very well aware on how the marketing industry is changing, right? So what are the tools that did literally surprise yourself when you found them and you said, like, Jesus Christ, why only today?
Wow, so generative AI in general, generating images and text, so generating images, Adobe Firefly literally blew my mind. How well can it do product photography? How well can it do posters as well as Midjourney? Midjourney is a great tool to generate unique content for images that you need, everything from doodle posters all the way to customer models for your e-com store. So those would be the tools. The tool that recently blew my mind was Stable Doodle, which actually enables you to transform the drawings that you do into art, into AI art, and you actually can control AI with your drawings. So you draw mountains and then you get mountains as a return. This is very powerful because Midjourney is hallucinating a lot. So if you brief them on specific thing, you're not only getting the specific thing with that. So these would be the ones. And the last one would be Cleanup. So it's basically Photoshop for people who cannot use Photoshop. So you can delete things from images without Photoshop help, literally
oh my God,
by
this is
dragging
awesome.
this
You
mouse.
make a picture, you hate the guy, you click it, he disappears.
Exactly.
And then you post it on Facebook, you tag him, but he's not there.
Yes.
Beautiful. Okay, let's do this. But also, I've seen solutions where, for example, at least they claim like this, you write the text and they create a video, and it's actually pretty good.
Well, yes.
Like for advertising of your solution.
Well, yes.
Have you tried something like this?
I tried one.
Shit.
Don't remember the name of the startup, but I tried one of the tools. But I would say videos are still the future because AI is great at generating images and moving images, but it still struggles with videos. But again, the pace that AI is moving is superb. So the videos, commercials that we saw at December, which very bizarre things like bizarre pizza, bizarre faces. Now we see very quality content created by these AIs. So I would say give it time, and it will generate videos for you, but not yet.
Okay, well, Laimas, what's your approach towards the already existing, very interesting applications that you say, like, oh my God, why aren't you using it yet?
I will be like devil's advocate here, like keep things simple. Don't use AI just for the sake of AI. If you are a founder, start from a problem, not like a tool. And maybe a slight piece of advice, don't waste time using open source models. To reach product market fit, use like the best commercial models like OpenAI API and few other leadings.
You mean you just pay a bit, and then the
Yeah,
delivery
and
will be
once
way
you-
bigger and
Once
way
you
better?
get traction, you can optimize using like some tiny model from Hugging Face or replicate.com and etc. But right now, like keep things simple and focus on the customer problem. And like personally myself, I also tend to use like, I sometimes spend more time using AI tool to get the output than just to get the thing done myself. So be rational about it. Like it's not just
Because
flash.
otherwise, we're getting into the world where you open LinkedIn or Facebook and you're just scrolling down and you see every second company making a post with a beautiful picture that begins with, "We are thrilled to announce," right? Everyone is freaking thrilled to announce nowadays. I'm actually capturing those print screens because I really want to do a research on how many of the companies are not using ChatGPT to write their posts. And is it a problem that we will, and there's a chance that we will become very similar because everyone is using the same tools?
I want to say that if you are using tool wisely, and if you're using the fusion between the actual, for example, copywriter and
mean the actual
ChatGPT,
brain
the
and
actual
technology.
brain and AI, then you can get freakishly amazing and unique results in half of the time. But if you're just plainly using, as you correctly said, AI for just sake of AI, then yes, everything will be freakishly amazing.
Amazing. At this point, obviously, there is this position in the world that everyone is like, I don't know, maybe people just like to talk, right? They're saying like, with the AI, what it will do, we will have the companies that consist of 1, 2, maybe 3 people, and that's it, that's what is needed. But at this point, Lyman has pointed it like, look rationally at this, right? But what is your perspective? Can it actually save the costs of a decent company, or it's like, it's minor, you know, we still need human beings, we still need developers, we still need, I don't know, accountants.
Yeah, I like ways, I don't know, somebody on YouTube said, your job is not going to be replaced by AI, it's going to be replaced by a person using AI well. And I think that's where it's moving to. If we can see OpenAI recently move to enterprise, where they're selling directly to big companies, they're like, hey, you have your own ChatGPT with super security and all, and you don't need to hire 5 people. You can hire 1 guy that knows this thing well. We train him, bum, bum, bum. I think that's where it's moving. But it's not moving like we will replace all developers, because somebody needs to architect it, somebody needs to test it, and somebody needs to talk to people. For me, it's like we're solving human problems. If we're solving AI problems, AI can probably solve AI problems pretty well. At the end of the day, we're solving human problems, and we do need to talk human to human. That's at least how I see it.
Anything to add?
Yeah, humans like humans, so certain things will not be changed with AI, but it will be revolutionized how things are going. So I encourage you to identify the most repetitive, boring things that you do in your daily jobs and try to find an AI, or not even AI, a program for it, because you need to focus your attention towards the thing that you do best, which is creativity, which is entrepreneurship, which is critical thinking. And this will not be taken over by AI for sure.
Lymanas, you remember in your previous project, you were entering new markets, right? From the problems that you faced there, today you already built a new tool to solve them. But for example, if I am a very early stage startup, my market in Lithuania is way too small, and I'm trying to figure out how can I expand abroad. How would you use the generative AI to help you? Are there any opportunities or possibilities?
So best way to test it out is to so you have built an amazing product or a hypothesis about a product. Now you need to help the world to know about it. Previously, how you could do it, you could buy Facebook ads and advertise in a certain market, or hire salespeople to do sales in a certain market. Right now, hopefully, once Ask to Sell goes live, for example, so instead of hiring a salesperson for a few €1,000s per month, you could deploy technology at 10 times cheaper the cost. That would have, feedback loops to you faster compared to a human salesperson in that sense. So, and like right now, it's like really exciting phase for founders. Like Ask to Sell right now, it's like just 2 people, hustler and a hacker. Myself, I'm a hustler, so I'm responsible to get customers on board. Hacker is responsible for not going to conferences. Right now we have everything what's needed to grow the company like at least to 1 million in revenue. We know how to do it. But like, of course, for some steps, we'll decide to hire people. But like technology right now allows you to have more options how to test out things quicker and more efficiently.
Yeah, but at this point, maybe Camilla, the next question is for you. Mm-hmm. We all want to make data-driven decisions.
Yes.
We all want to make rational decisions based on something, right? And we all try to ask ChatGPT somewhat questions for example, you did mention that you use it for your friends' trips, right?
Yes.
What to do, where to eat, etc., etc. I remember I asked how to make zeppelini, and it wrote me that I should use the oil on the pan to bake it, right? So at this point, when it's hallucinating, how can you rely while making your business decisions? For example, should I enter to Poland and this and that audience would be buying my solution? Do you get my
Of course,
idea?
of
Okay.
course.
So
So
how can we rely on it, or can we rely on it?
So there are certain things. So of course, the first one is critical thinking. I would not advise to make critical business decisions based on AI feedback or AI-generated content. Then second is trusting not one AI but several. You can ask how to make Zeppelin for ChatGPT, BART, and other large language models. So just spread around the questions throughout AIs, but don't make the decisions based on AI hallucinations. Make them on your critical thinking. And this is why I was talking about dedicating boring tasks towards AI models, not dedicating your whole future of your whole business.
Okay, Dovidas, anything?
Yeah, I was thinking like it also depends on the lifetime value of the customers we're talking about. Because if we're talking B2B, I wouldn't want to say we have 10 potential big customers in Poland. I wouldn't want ChatGPT to text them and be like, hey, my name is Sam. No, I want to talk to them directly. I worked in B2B sales, and that direct personal feeling, when we're talking about deals that, I don't know, exceed $1 million and above, you want to talk to a person. You don't want to talk to an AI. When we're talking about small scale, when it's all about quantity, and we can get a lot of quantitative data, I'm all about AI. Launch in Poland, B2C product, you see the data, you know how to make decisions. We're talking B2B, I still think a good salesperson can make a hell of a better job than an AI ever could.
Yeah, I kind of agree with you, because it's still human-to-human approach, right? AI can maybe analyze a bit of, or give you a bit of understanding on who that person is, what he likes, right? And at this point, maybe we are getting to this very popular topic of privacy and ethics, right? So at this point, obviously, you can write all the instructions in your company that you want, and like, never ever put this document into, for example, ChatGPT to ask a question and analyze this. But people are people; they still do it, right? How can we approach this specific issue? Is it a big threat, or the big companies, let's say the OpenAI as a company, do they have any solutions for, let's say, corporate needs where the information is really sensitive and it can impact the results of the company?
Yeah, as I mentioned previously with OpenAI enterprise version, that's where we're focusing at.
Okay.
We don't train the models on the data you're providing us. We keep that safe, and I think there's a good market segment for that. Obviously, there's another market segment where people don't care and it's like, hey, go have fun. And the price obviously is very different if we're talking enterprise. Whatever is enterprise, you can go 10x the customer license. So I think the market is moving there anyways.
Yeah, I would add on training for your employees, because AI will not go anywhere. They will still use it. It's up to you and upper management to make sure that they are using it correctly and they're using the tools that are approved by companies.
Yep. I would also add that startup, we have 1,000 ways, 100 ways to die, and privacy is like...
Let's stick to 1,000.
100.
Hundreds of thousands.
And privacy is like least of those things you should be worried about right now. So
what are other than risks that you would be looking at, or you see on the market?
With AI or
yes,
in
exactly.
general?
Especially with the applications that everyone is so easily opening up the data. Just log in, click here, add the data, and see what happens then. Do you see any threats there?
No, just do it.
Just do it, right?
YOLO.
Just feed the system with your data.
Hey, you're already feeding Google or somebody else. Why not OpenAI? Come on, man. Be generous.
Bali. I want to go to Bali. You know, I need vacation. I need good price. Okay, at this point, if someone is really curious to see what's available on the market, what would be the resources you would offer them to subscribe to watch, to monitor, and where would they could find something interesting that comes up every day?
I think
What are you checking every day?
every day YouTube. Yeah, but I'm probably
YouTube.
addicted to it, so I wouldn't recommend it. But YouTube is my main source of. I really love YouTube. You just go through it and you get a lot of data in it.
There are some specific channels where you're.
I think it's called AIpreneur or something.
Uh-huh.
But at the end of the day, if you really know the basics, I think it's like in coding. The basics ain't changing that much. How LLMs work, how you're chaining different responses, that ain't changing. Most of the hype is, hey, we have a new model. This changes everything. Yeah, it probably doesn't change everything. The base of LLMs is the same as it was in the few papers that started the thing, right? Nothing is changing that dramatically that fast. So the hype is all good, but at the end of the day, just sit down and get shit done, you know what I'm saying?
You're oversimplifying stuff. We're
No, I
more
think-
excited here, you know?
No, I think you need to oversimplify things because it's very easy to get caught and
I
just
heard
be,
you
oh my
shut
God,
the
there's
fuck
this.
up and go and do your job,
And
right?
do your job.
Write the thesis.
Absolutely.
Don't ask ChatGPT about it.
Just do what you got to do.
Okay.
Because there's a lot of hype, and it's very easy to get caught. Blockchain was also a lot of hype. If you remember that wave, it's
I know a few people in the hall
everything
that
is
say that it
freaking
still
blockchain.
is.
Yeah, it might be. I mean, it's my
Okay.
personal opinion. But
Let's
you know.
ask ChatGPT, right?
Let's ask ChatGPT.
Okay. Camilla, where do you search for new and exciting tools to use?
I want to say Generative AI LinkedIn group is a great source. It has over 2 million followers.
There's someone that visits LinkedIn groups. You heard that, right?
Yep. Check it out. But I would say not go to forums, but go to communities. So I would invite everyone to join AI Lithuania, which AI professionals are actually stumbling around in one room talking about new AI tools and talking about AI applications. They have meetups. I'm not sure when is the next one, but check their Facebook group. It's a thing. Facebook group is still a thing. You can find a lot of content there. And in general, GitHub and all other community forums there.
Livenas?
I would add Twitter.
X.
And,
X.
yeah, exactly, X. And
Yeah, it's going to be Twitter for 20 years, you'll see.
for sure, like Statoil or Circle K.
Yeah, absolutely.
And follow like engineers from top AI companies like OpenAI and etc. They are openly sharing what we are working on. So you know you'll be ahead few weeks in this fast evolving space, but at the same time, don't get like it's easy to get overwhelmed with flow of information, flow of new tools, and stick to the fundamentals and what makes your company.
Okay, and for the very end at this beautiful Startup Fair 2023, maybe my last question, and I think the most important question for people in this hall. How can startups capitalize on generative AI to attract investors? Didn't expect that, right?
Yeah.
Okay.
I mean, the name, I believe, first of all, it sounds very nice, but nobody is surprised with AI anymore, that you're using AI, especially since LLMs became such a big thing. It's like everything is AI. I think moving to different markets, what we talked previously, and moving fast to them and testing your hypothesis, even with two guys, I think is something that was not achievable previously on that base. Where you feel that, hey, Nigeria might be a good market, boom, you can try it out without having to hire a Nigerian prince. And I think that's something that we can really capitalize on, and then you come with the numbers.
Okay.
You get your numbers there.
Camilla, what do you think? Are there any applications that you would offer to use?
Well, I would say first find your product market fit. This is very important before you approach investors. Second of all, find investor fit. So you can use tools as ChatGPT to find your perfect investor profile, but invest into research yourself and remember that people like people. So if you do your homework correctly while attending the conferences such as this, you will already have certain meetings set up with investors. So I think I would say that investors are high-profile customers as in B2B, so you need to approach them person by person. No investor would like to get generic ChatGPT message, but you can still optimize the process of your investments road towards using tools like Midjourney for generating unique content, using tools like ChatGPT to generate intro mails to kind of approach them at the first step. So there's a lot of tools that you can use, but be smart about using them.
And Limas, how can we capitalize on this?
In my view, you can't. Like, it's simply technology of choice, and just using generative AI in your startup doesn't mean you get funded. It's same as saying my startup is using cloud infrastructure right now. So it's you should describe the problem which you're solving very well and see some clear evidence of people relating to that problem and evidence of them trying to pay you as well. So this is the most important. Technology is secondary, and you can pick whatever works best for your use case. And just don't use AI for sake of using AI.
Got it. So basically, in a nutshell, stay hungry, stay cool, and get shit done yourself, right? At this point, and if you want to find an easier way to get funded, so outside of this building, just on the left, there's a huge D-Money zone that has all of the Lithuanian VCs and accelerators in it. So go there and talk to them, human to human, live. Thank you, my dear panelists. Can I ask for a huge round of applause to
Huge
live
round!
on a huge panel. Laimonas, Camila, and Dovydas, thank you so much, and may the force be with you guys.
Thank you, guys. That was an incredible ending, and this is it. We reached the final moment. I hope you are ready for pitch battle finals. So 40 of the most promising startups had an intense day at pitching on stage in front of the investors' jury. So now we have 10 of the best startups which got through to the finals and which will be competing for the Pitch Battle 2023 winners, titles and prizes. So let me introduce that top 10. So Vocal Image, Axiology, Zeno, Free Bionics Taiwan, Vital Signs, There is Business Solutions, Jello X Biotech, 3 Cubes, Glassity, Droplet Tech. This is final 10. This year, startup partners have prepared some amazing prizes for the winners. So, winner gets these prizes. Flash program in Taiwan by Startup Terrace Taiwan. 1-year membership at the Association Unicorns Lithuania, 7,000 euros check for workshop and playbook, plus 1 month of weekly consultations by Salt Sales. Selected startups will get opportunity to receive 100,000 euros investment plus acceleration program by First Pick, up to 125,000 euros investment into selected team by Baltic Sandbox Ventures, 150,000 euro investment plus accelerator program by Startup Was Guys, and 5,000 USD worth Amazon Web Services credits by Cloudwiser. So today we have a panel of judges who will be evaluating the finalists and deciding who will become the winners of Startup Fair Pitch Battle 2023 and take home those wonderful prizes. So please welcome Dmitry Sosnov, First Pick, Sandra Goldbright, Baltic Sandbox, Anita Chen, Startup Terrace. Yes, let's make some applauses for them. Martinas Kanzeras, Litban, Inga Langaite, Unicorns LT, Alexandra Balkova, Startup Wise Guys, and Vilius Kativa, Practica Capital. So, we have to know the rules, and rules are simple. Each startup will have to deliver a 3-minute pitch. Then he will follow by 2 minutes Q&A by the judges. So startups, please follow the time. I will see the time as well here. So if you will go over, you will be cut it off. So the startups will be marked on the following criteria. So it's product, market fit, business model, traction, team, and presentational skills. So, I think we are all ready to start this pitch battle. And the first one is Vocal Image. The stage is yours.
Yeah.
Hi, my name is Nick. I'm from Vocal Image, and we've created AI coach for communication skills. We have 100K in MRR, 1 million in total revenue. Our year-over-year growth is above 500%. We are a team of 6, and we are awesome. Communication skills cost a lot of money, and the only available choice is training with a coach. But it is expensive, time-consuming, and sometimes even embarrassing. With Vocal Image, you can improve your voice and boost your communication skills. How does that work? Users record their voice with the phone. We analyze their voice. Based on that analysis, we create for them personal training plan. Follow this plan, improve your communication skills, and improve your life. We have strong unit economics, and users unlock features and content with subscriptional access. Our conversion rate from installation to customers is 9%, and this number is 3 times better than average on the market. For example, Headspace had in 2018 4%. 1 year ago, when I was speaking at this stage, we had 20K in MRR, and now, 1 year later, we are 5 times bigger. Historically, communication skills coaching was available in B2B mostly. Rich companies could hire expensive coaches for their top-level employees. Not anymore. We made it affordable for everybody and left behind most of the competitors in the mobile space. But we are not stopping here. We are developing AI voice filters that will eliminate communication challenges without training. Forget about hours with coaches and mobile applications. Speak naturally, and AI does the rest. Our team has all the necessary skills. Our voice guru taught top-level employees from all over the world and worked with Warner Brothers Studios. Our growth marketer stands behind success of Joom and Lensa AI, and our CTO is the first one who developed AI for voice evaluation. I'm without any public speaking experience, but with hard vocal image training managed to win some pitch competitions, so technology definitely works. And with current metrics, we're approaching break-even, so this is the perfect time for us to fundraising. We are raising 3 million to reach 100 million in next 6 years in ARR. Our mission is to build the best tool for communication skills, and just imagine if people of all races, genders, or ages, no matter their financial status or location, can speak clearly with a beautiful voice, without accents, speech disorders, or any kind of communication challenges. My name is Nick. I am CEO of Vocal Image, and reach me to become part of this story. Thank you.
Perfect start. Now it's time for Q&A.
So thank you. So the question is, I remember you from the last year, so why only 5 times you grow?
Because we're not yet at that point when we can skyrocket in 10 times. Right now, we're testing basic hypotheses to understand our product market fit and to understand our customers better. We find the best cohorts with retention of 75% and LTV to 100, and we want to double it. But for that, obviously, we need some money.
Thank you.
Yeah, Nick, so you work hard during the year and also reached quite amazing metrics, also the other indicators. Can you tell how big it can be? Because the concern is that maybe the market is not so big in the end, so you're growing, but you reach some kind of, the line, where it's not growing so fast, So can you just tell how big is the market potentially?
The volume of the market is $37 billion in USA and UK only, and these numbers from Hall's report, they were scored by estimating companies with more than 100,000 employees. But just imagine that when you speak about taxi service, you think about Uber or maybe Bolt. When you speak about language learning, you think about Duolingo or Babbel. I want everybody in this hall to think about a vocal image when you speak about communication or communication skills.
So is there a potential threat that, for example, iPhone or Android will deliver a very similar feature inside of their core things, and you just won't be needed by the users anymore?
Our application is cross-platform. We are available in iOS, in Android. Also, we have web application where you can access the same features. Thank you for your questions.
Thank you. A round of applause goes for you. And we are continuing. Number 2, axiology. Please, welcome.
Hi there. My name is Marius, and I'd like to make bonds accessible to all. When I say all, I mean all of you, and that's why all of you should listen. I have 2 multi-billion questions for you. Why settle for 1% on your bank deposits when you can get 10% yield in the bond market? Why bother with a bank account when you can give money to your own government and earn 4%? The answer is that the market is rigged and it's only made for the big boys. There's no infrastructure and no space for you in this market. The average transaction in the bond market is 2.5 million. I bet that's not your ticket size. But the pressure is building on. There's more than 2-fold increase of retail participants in the capital market. And there are more than 50 million users of the banking apps waiting to be monetized in European Union. And there's a monumental change in the regulatory environment which opens the door. I would like to take you through that door. Imagine vertically integrated, regulatory compliant solution which is integrating all the layers of the capital market, brokerage, exchange, settlement system, central securities depository into one layer. There are 25 trillion bonds being issued in the European Union, and there are 15 trillion of deposits waiting to be employed. We are not reinventing the wheel. Our business model is based on the current established practices in the bond market. And the numbers you see on the slide, these are the fees that we all pay in that market right now. Do we have competition? Yes. Anyone can be a competitor. They have to go through this regulatory route. And to the best of our knowledge, there are 6 companies who are trying to do the same. Our traction. We have secured support from Ripple Labs and SuperHow. We partnered with the biggest brokerage in the Baltics. We vetted this infrastructure with a partner, and we implemented a successful pilot of them. We are now looking for a strategic partner who can go along with us, or we're willing to go our own route and become licensed entity. Our main go-to-market right now is the government bonds market. And we have a dream team, which is ready to dream big. We have covered all the bases of the skill set needed for that. So we're raising 2 million to become a regulated operator of so-called DLT-TSS platform, or we are looking for 500,000 support to become a partner with a strategic partner. I'm on a mission to make the bonds market more efficient in Europe. I have done the same in the payments market and developed the backbone of the payments market in Lithuania, which the fintech system is built on.
Thank you. And now it's time for our judges and their questions. The applause goes to you.
Hello, Marius. Question is, why you from the 6 competitors, so why you are better?
I have done it. I see the problem, and I have a dream. I want that an average company anywhere in Europe, then the bank is not giving the loan to them of the average 2 million euros. They can find a place in Europe, in Lithuania, where there is this platform where they can issue bonds in a very efficient and cheap way and make them accessible to everyone to invest.
Hi, thanks for the pitch. Can you tell us a bit more about the regulation part? You mentioned that the change is happening. When is it happening?
So for those who know, financial market is highly regulated. So this regime is a list of exclusions from MiFID, CSDR, and MiFIR, which are the main legal acts governing the infrastructure and the provision of the financial services in the capital markets. And it allows technologically to create the platform which otherwise would not be able to implement. And this is the glue which allows this vertical integration and ability to have the operational efficiencies for such a platform to appear.
Hi, Marius, also have a question. So I saw this brokerage fees, so 150 bills, something like that. Some guys definitely not be happy about you like disrupting the market. So is it you or there's a team behind your back, doing this? Because you need probably a strong team to do this, and maybe you can a bit tell more about who is with you together doing this Axology.
Right. So on the team, we have the tech guys, and this project is being incubated in the technology company, and it benefited from the support from Ripple, and the persons on this team have more than 20 years of experience in the exchange, depository service, and leading innovation departments of the biggest exchanges in the world.
Thank you. Let's continue. Number 3, Zeno. We're waiting for you on stage. Good luck.
I'm here. Hello, good afternoon, Startup Fair. Hi, everyone. Do you see the screen? Here we are. Zenu, best life for your best friend. My name is Mindaugas. I'm co-founder of Zenu, data-driven pet health and wellness service. Think of it as Kilo Health, but for pets. The problem that we're solving is actually very simple. There's too much sugar in regular pet food, and they're getting sick, and they're dying. So my co-founder, Agata, who is chief nutrition expert, who's somewhere in the stage, has created a raw superfood and human-grade meat ingredient together with scientists even from NASA that we're now selling as a subscription, and we're using freeze-drying technology to make sure that this is, subjectively speaking, the best food in the market. Our secret sauce is that it's a monthly subscription. We're using personalization, and with more customers and more data that we collect about our customers, we can make better suggestions to the new customers. We have a very tightly knit community that keep each other engaged, and that causes very good customer loyalty. The market that we're servicing is around 6 billion euros, which is premium pet food market in the UK and Germany. It's growing around 12.5% every year. Talking about the market, I mean, probably to investors out there, like dog food, how scalable is this, right? So last year, Mars Corporation bought Nom Nom brand in the US for $1 billion. Top 5 subscription services in the US market have now exceeded $1 billion in revenue. And recently, another juggernaut has raised $350 million as their series B, C, D, E, whatever. So basically, the market is there, and we either jump to the big boys or we get acquired by them some point. Here are some customers. So we already have a bunch of like 200 customers that spend like 2,000, 3,000, 5,000 euros with us on dog food. Yeah. And by the way, we're going to have cat food soon enough. We have very good customer lifetime value, which is increasing every month we spend on the market. And yeah, customers tend to stay around. The business model. We are currently targeting the UK market. We have really good customer acquisition costs, and with €1,000 lifetime value, it has a very good return ratio, which is around 26. And right now, we're here today trying to raise to build a bigger market foothold in the UK market. So that's our vision, focusing on the UK and German markets to educate the customers, build brand awareness and brand trust, and to become one of the leading brands in the region. We have an amazing team that's very PR friendly. I'm running out of time, so I'm just going to jump to the ask. We're raising 450,000 euros as our seed extension, and it will allow us to get the Series A and 200,000 euro MRR. Thank you very much.
Thank you. Judges, the time is yours.
Pet market is increasing, right? Not only food, but I'm curious what a NASA guy or girl was doing. What's so special about it?
Well, the freeze-drying technology was sort of implemented and pushed forward by the NASA. His experience is with the way that carbohydrates affect astronauts' nutrition, and he's a very passionate dog lover, so his hobbies carry into pet health and wellness, and Agata is working with him as a mentor to apply these technologies and know-how to the pet health and wellness.
Hello, nice pitch, and I'm just wondering that because you also mentioned the expansion market to Hong Kong and South Korea, how did you choose these two countries, and what's the strategy different from the expansion in Europe and in Asia?
Thank you very much. It's a great question. We are already in these markets. We have partners servicing the markets on our behalf. Actually, they're one of our leading markets right now. Which proves the point that our food is loved by dogs and cats in Hong Kong and South Korea, which will hopefully one day become our target markets as well. So we're selling as B2B service, but now we're focusing on our home turf, let's put it that way, in Europe. So yeah, we have partners there.
Hi, thanks. So the last time I heard you was at Tech Chill. So can you just name us maybe one big win that you had over the summer?
One big win that we had over the summer. Well, actually, we really nailed the acquisition funnel in the UK. We managed to reduce the customer acquisition cost, so we now just need to throw in money into the funnel and acquire as many customers as we can. It works. We can acquire customers at scale. We just need to produce the food in order to service those customers that we acquire. And that's why we're raising the funds.
Time is up.
Thank you.
A big thank you goes to you. Number 4, Free Bionics Taiwan. Please, welcome.
Hi, everyone. I am Zhenghua from Taiwan. Do you remember when did you walk with your family last time? Walking is a natural demand of human beings. Walk to our parents, walk with our family, walk to our love. But unfortunately, there are over 20% of population that lack the injury, got a disease, and lose the ability. Due to the limitation of human power therapies, they cannot get very well a rehabilitation program. So with the disability, they may decrease their 20-year span life. The stroke patient, until over 2 years, use our data-driven exoskeleton system, used for only 4 minutes and regain her function. Our solution can be used in institute and used at home, and we can measure the patient diversity for upper limb or lower limb. All the treatment data can be transmitted to our cloud. Compared to the main player in the market, FreeBionics is the only one can provide a solution for patients from hospital to home for different indications. We provide our solution for our customer by sale, by rental model. But in next year, we will launch a subscription model, and in 2026, after our IPO, we will provide a treatment service directly. We are aiming the market of over $300 billion. With our strong IP, we already install our solution in 20 countries now. Our revenue is continually growing up. And this year, we already signed a contract for $2.1 million. We have a complete product line plan, including each kind of exoskeleton device. I'm founder and CEO of FreeBionics. Michael is our research team leader. Sam is our financial manager. Aaron is our marketing director. And with our strong strategic investor, with strong USA, Japan, and the Taiwan National Development Funding. To the 2030 outlook, FreeBionics will be a company with over $300 billion revenue company. Now, I'm calling for the pre-IPO run $5 million for 16% to launch our subscription model and the personal device. FreeBionics is changing the people's life now. I would like to invite you to join us to work together and make the world better. FreeBionics, smile away. Thank you very much.
Thank you goes to you, and judges, the time is yours.
So thank you. In which country you are planning to make IPO?
Mission.
Sorry?
Sorry?
I ask you, you said that you're raising money for pre-IPO
Yeah.
fund. So my
Yeah.
question is, where you are planning to make IPO?
Okay,
in which country?
Yes, sorry. Thank you for your question. And we already cast the secure company in Taiwan, and our schedule is after the 24 months, we could be qualified for the IPO. So this round we call the pre-IPO round, yeah.
Okay, thank you.
Can you tell us a bit more about your round structure? Where is the money going in, the 5 million that you're raising?
Sorry?
Can you tell us a bit more about your round structure of the 5 million? Where is the money going in?
For this round, we try to raise 5 million, and we want to launch the subscription model for the assistant device for hospital. And we would have very amazing personal assistant device, and the pricing would be $1,000 for the OA user, yeah.
Do we have more questions?
What do you see your biggest obstacle right now? Your biggest challenge?
Sorry?
What is your biggest challenge in the coming?
For my company?
Yeah.
Yeah, now the challenge, the first one is we don't want to have the COVID again. And the second is we need some cash to support us the operation, to promote the technology in different countries, to help the patient. Yeah.
Yeah, so the jury is just sitting and saying, wow, you know. So yeah, really outstanding product. So wishing you best of luck, you know, and if you, like, we need some help, you know, in fundraising here, so probably we should discuss later after.
Thank you, judges. The time has ended. Thank you. Number 5, vital signs. Please welcome.
I'm a medical doctor with 30 years of experience. During this time, medicine and medical devices has developed a lot, but some of the tools are still archaic. I have 15 minutes per patient, and during this time, I have to do several examinations, measure several biosignals with different zoo of devices. Some of these devices, like the stethoscope, are 200 years old. That's why me and my team in Aalto University in Finland have developed a state-of-the-art, space-age, connected and a smart device that does all of those measurements in one device. In addition to that, it documents everything in digital format in patient files. So when the doctor goes back to his desktop, he sees all of the results, and additionally AI analysis of each signal and all of the signals together. So he gets a diagnosis, assistance, and probabilities of what could be wrong with the patient. The system is so simple that we are also offering it for home use with an app. So people can measure themselves or measure their family members at home and use it, for example, for telemedicine. This is where we are now. So we have a working prototype of the device, user interface, and the AI. Actually, our AI is much more than a working prototype. It's best in class and better than human in 6 categories. We did a pilot clinical trial with excellent results, and a survey of Finnish doctors returned very encouraging results. 91% were saying that if this device was available today, they would buy it. We actually collected the emails of those people, so we have our first 400 customers already waiting. So as I said, this was a 4-year project, a research project. We still need 1 year of development and then CE certification to get it to the market. A round of 600K is open. Some of that has been already committed. And the device and the system has multiple use cases in addition to what I told you, the professional and the home use. It can be used for veterinary medicine, animals, and clinical trials, and also telemedicine, which is a growing field. This is our team, all PhDs and one PhD student with large experience. Some of us have been working for Nokia and Philips, and our AI developer is one of the best in the world. And this is an impressive list of our mentors and advisors from Aalto University and beyond.
Yes, the time has ended. Thank you goes to you. And judges, the time is yours.
Thank you for the presentation. Do you need any certification to put the product on the market? And how is it scalable in terms of different markets? So how is it accessible globally or in regards of regulation?
Yeah. Yes, this is a medical device CE2A, which is one of the lightest certifications. When you have that, then you can sell in the whole EU. And even some countries in other countries accept the CE certification. For US, we need an FDA approval, but this is a very low-risk device, so these are not complicated to get. At the same time, they give us protection from competition.
Do you need still to get them, or you have something already?
We will have to get them after the device is in the final mode. So because after that you can't change anything. So after 1 year of development, we will have a device which would look like this, and we will certify that, and then we can go to market immediately.
Seeing your team, my question is how you ensure that your device is suitable for women?
This is our core team. Yeah, this is our core team. Actually, when we were doing this pilot clinical trial, 70% of the patients we examined were women. So we are paying a special attention to that. We also have in our advisory, like now, also female physicians. Their pictures were not here.
So what's your go-to-market strategy? You are going to get the certification, and then what? You are going to sell the device, you're going to sell the license for manufacturing the device, so how you're going to basically do the sales?
Well, at the moment, the way we see it is that we will offer the device as a hardware and software as a service, so doctors have to pay only a monthly fee to use everything. And this will decrease the threshold for going to the market because they don't have to take a risk of 500 to 700 euros of buying the device and not being satisfied. So, and then we will update the system all the time. So that's how we ease it into the market.
Thank you. Vital Science was here with us. And now number 6, De-Risk Business Solutions. Please welcome with a round of applause.
Good afternoon. I'm Naglis, CEO of De-Risk, a B2B SaaS for corporate treasury and hedging. This is our client. It's Canadian leader in bullion sales and jewelry sales online. Annual revenue about $1 billion a year. And 1% change in currency or commodity price can mean instant loss to them of 200K on a balance sheet. Their CFO used to spend 80% of his time doing number crunching to measure this exposure. We build a tool. It takes less than 1 minute to him to make a decision based on the data that he sees. This is industry agnostic problem. From airlines to manufacturing to autos, all companies involved in trade of commodities or currencies are actually exposed to these risks. The root of, or the cause of a problem is in data volumes that are hitting finance teams. They don't have enough capacity, actual knowledge, or resources to deal with it. We've been together as a team for 5 years. We've got all operations covered, from operations to admin to compliance to software development. And we built something called Chill Pill for finance teams. Effectively, it's a data aggregation tool, which on top has analytics platform and is capable of providing advanced analytics to make the decisions. It integrates financial products into the platform from banks and ensures efficiency and business continuity to corporates in various industries. The hedging market is huge. There's a reason why Wall Street banks are big. It's because of derivatives. Our target market is 50 million to 1 billion annual revenue companies in Europe. We've got roughly 27K of those on LinkedIn. And we approach them with two business models. They can pay us MRR, or they can use our partner banks, and we recoup our revenue through share of banking products. After 3 years of bootstrapping, we've built MVP late last year. We've got 300K annual revenue, investment firm license in EU, healthy pipeline, and we're in talks with 4 global brokers for partnership. 2 of them already sent paperwork. We need 750K. A large chunk of it will go into business development efforts, which needs to be supported by also technical talent for customer support, onboarding of clients, and product improvements. Thank you very much.
Thank you goes to you as well. And now, dear judges, the time is yours.
I will start from the end. So on the last slide, you had 750K that will help you reach 50 million ARR.
Yes.
So you need
in 5 to 7 years. We might need a bridging bridge.
What do you need? Where will 750K bring you, actually, realistically, in 18 months?
Roughly 2 million, at which we're talking to big banks like HSBC, Citibank, who are interested in a product like this.
Okay, thank you. So what is your secret sauce? As I think there are plenty of such
Lack of
systems.
skill set globally. So, I mean, someone with this skill set, he works in Wall Street, London, or somewhere.
No, but your secret sauce, what is as your team or
I used to
some
do this for
non-techno-
big financial institutions in London.
Okay, so you.
Yep.
Okay, thank you.
Good answer. So how you see this company in 10 years?
There's a data plane here. If you noticed, I mentioned data aggregation. So think of us as a company which aggregates enterprise-wide data, not financial, not only accounting, everything. We can make further products out of this and go into lending, credit risk measurement, etc.
Hi, can you mention once again, like, that, one main problem that you are solving at this stage?
It's convenience. So typical CFO, he's an accountant. He knows nothing about CRM systems, integrations, etc. We aggregate data to him and show it in a fairly easy to understand manner. So it's numbers crunching exercise and integrations with multiple enterprise systems, from banks to CRMs to accounting systems to ERP systems, and pulling it all together and showing him in an easy to understand way to make a decision.
Thank you, judges. Thank you for the pitch.
Thank you very much.
Please welcome number 7, Jello X Biotech.
Hello, everyone. We are Jello-X Biotech from Taiwan, and we provide next-generation pathology platform for precision health. And first of all, what is pathology diagnostic? Pathology diagnostic is responsible for the most precise examination in the major disease, especially for cancer. So the pathology diagnostic can diagnose the patient tissue in the cell level. But can you imagine that this kind of a precise examination is doing like this? So, this causes a problem. In some cases, the two pathologists has the concurrence only 60 to 70%. It's a dead or alive problem, only 60 to 70%. So have everyone think about using the digitize digital the images and using like AI to improve that? Yeah, many big players want to do that, such as Philips, such as Leica, but they made many, many challenges. The first is performance challenges, and the second is hard to integrate the pathology digitally in the current workflow. The third is the learning challenges. So in pathology, only less than 5% practice are fully digital for now. And with GeoX, we provide a solution with our 3D AI solution to enhance the current digital pathology solution. We can enhance the efficiency, lower the budget, and make it for easy enable. And all of these results are published on the peer-reviewed journal paper. And we are a university spin-off startup, and we spin off from 2019, and now after 4 years, we are still alive and also doing well. Because we are a university startup, we have our own technique. We have 15 granted and pending patents, and many, many trademarks, and many, many like FDA-listed products. Okay, so how are we doing business? The hospitals can enable our solution and starting provide the precise diagnostic to the patient and to the pharmaceuticals. So after several years, now we have dozens of individual paid customers, over 8 paid institute customers, and our revenue stream doubled and doubled. And now this year, we target triple. And we already got this kind of, this amount PO. We just need to finish that. And now we're seeking about like a 0.5 to 1 million investment to enable the Euro market. Thank you.
It goes to you as well. Judges, I hope you have questions.
Yeah, hi, thank you for the pitch. Can you tell us a little bit more about the sales cycle? So since the first moment you're talking with the hospitals until the moment that it's being used.
Okay. Typically, we will do like 2 to 4 months to convince the hospital to enable our solutions. And we typically do like a free trial and like a research lead project to let them to use our product. But we do this with the partners. We rely on the partnership with such as Intel, Roche, so to make it much more easier.
What is your current valuation?
Huh? What?
What is your current valuation?
Current valuation.
Oh, valuation. Okay. We just finished 3 million fundraising in the beginning of this year, and our post evaluation is around 15 million.
Thank you.
Okay. Yeah.
We still have 1 minute.
Okay.
If you have questions.
Hi. So you mentioned that you have partnership with Intel and Roche. Can you simply explain what is that?
Okay. So we successfully done some stories in Taiwan that we integrate our products together to let the traditional pathology lab become a digital pathology lab with this kind of advanced intelligence functions, so that the efficiency and the budget will be much enhancement, yeah, like that.
So is the whole team consisting of students? I just remember you mentioning students a lot.
Mm-hmm. Okay. Oh, it's not. No. We are university spin-off startups. So our professor quit his job and to become the CEO of our company. And I'm a former PhD student. Now I'm a graduate. And so this is my PhD thesis. Yeah.
A big thank you goes to you. Thank you for the pitch. The next one is called 3 Cubes, so welcome.
Hi. So hi, my name is Darius. I am co-founder of 3 Cubes. And the problem is that children will better play video games when go to school. But you see, that's not even a problem. That's actually the solution. So to take this into action, we need to take the next step in sandbox creative games. And this is exactly what 3 Cubes is. We are building a next generation video game platform for creativity and curiosity. So basically, we're making 3 different elements inside of our game: sandbox, adventures, and spaces. Imagine in sandbox area, instead of sitting at boring physics classes, you would go to virtual world and build Mars base, and that's how you learn physics. Or in adventures, instead of doing boring homework, you could go with your friends on an adventure to Antarctica and learn why climate change is happening. Or in your free time, you could build your own room from furniture you got as a reward and invite your friends and play mini games. So all of those three parts are connected, and children are building their avatar as a portfolio. And we are also empowering parents and teachers through our website with powerful tools for custom learning goals and analytics. So this is early pre-production video of our first upcoming adventure map for cybersecurity with NordVPN together. We are building it on top of open source voxel engine. Yeah. So primary target customers are B2C parents and secondary schools. And our business model is very similar to Duolingo or Roblox. So all of the content is free to play. And we monetize self-expression, extra tools, and analytics. So very flexible. And from competition, we stand out because we focus on game simulations for creativity. And we are very easy to use, very fast distribution. That means that you don't even need teachers to scale this product. And for the past 6 years, we've been trying to build this product on top of Minecraft, and we learned a lot of things. We are right now generating revenue, and we got a lot of feedback from parents, children, and teachers, and we are building this new, better platform. So this is our team, pretty huge. This is our co-founding team. I'm personally a Lithuanian gaming YouTuber with 100,000 subscribers. So, and we are racing pre-seed round 500K. Why? Because we are launching this platform with first single-player adventures after 2 months. So yeah, and monetization kicks in after 3-4 months, so early next year. So basically that's us. So let's join revolution of education. Thank you.
Thank you for the pitch. To make the revolution of education, you probably need to sell to educational institutions, right?
Yes.
What's your target customer, and how do you plan to sell them to educational institutions?
Yeah, the problem is that for the past 6 years, we were trying to adapt to education standards. But we learned if we want to push forward education, we need to not align with them. And what we learned that actually the whole global world is talking about one thing: soft skills, personalization, creativity, collaboration, and we are targeting those. So basically we are targeting soft skills, and we are making this next generation tool which is actually can be still applied to traditional schools right now. So we're kind of helping schools to go to this new updated school version. Yeah, and we learned how to talk with government also. Thank you for your question.
Do we have more questions?
Yeah, can you share a bit maybe about the feedback from the parents that you receive about this game?
Yeah, basically parents are coming to us and saying, can we get this product at home? And we said, sorry, can't, because Minecraft doesn't allow us. Because of whole Minecraft education, weird licensing thing and weird distribution. So we got a lot of feedback. Basically for 2 years, we've been even running after school activities. So parents were our basically, we had 600 paying parents who actually trusted our product and looking for this new. Yeah. So they see great value because right now a lot of parents are buying subscriptions for Roblox and Fortnite, but they don't even know what they get from it. And we are kind of coming here and saying, for children, this is even more creative space, but for parents, here are tools for you to see what your child is doing and to even motivate them to set custom learning goals and to award children for cooperating with parents.
Thank you for the pitch. And number 9 is Glassity. You are welcome here on stage.
This is your cloud. It's a black box. What is inside it? Can you see it? How many cloud engineers are in the audience? Probably you know what I'm talking about, right? Probably you know what are the things that you have deployed there, but you don't have this visibility of all these services. And a lot of services are dropped down there. It's not only servers and databases, it's datasets, lambdas, values. It's a lot of that, and you cannot see it. It sounds like a problem, right? It happened to me. I was working at United Nations, and I get responsibility to manage a lot of that. Then it happened. One cloud engineer had a small mistake that cost us more than $20,000, and no one realized about it. Then is when I thought, must be a better way. Of course, this is good for Amazon Web Services. This is how they do a lot of money out of the enterprise, but doesn't need to be that way. Why, if you can see through the darkness and see all what is in there? This is exactly what we do at Glassity. Hi, I'm Ernesto. I work as a cloud architect and as a cloud engineer for more than 20 years. And during my career, I found that I'm not alone there. There is a lot of engineers there, and product owners, and decision makers, that they are querying clouds, looking into the darkness, and burning money. And we want to change that. Introducing Glassity. Glassity is an AI-powered system that increases visibility and increases massively the usability of the cloud, reducing cost and empowering decision makers. How does it work? It's easy. You just log into our platform, you connect your Amazon account, and toggle the autopilot. When you do that, automatically you get 50% reduction in your cloud costs without touching a single server. Our business model is easy. We have two revenue lines. One is for cost optimization, and we charge a success fee of only 10%. For the rest of our suite, we have a subscription base based on the size of the infrastructure. The prices will be unbilled soon. The market is big. Everybody knows. It's expected to grow more than 100 billion in the next 4 years, but the opportunity is in the cloud waste. 28% of this amount is going nowhere. We are talking 147 billion directly to the trust. We're a very young startup, but despite that, we start to acquire our first pilot customers, proving the efficacy of our solution and getting revenue out of it. Our team, we have a great team, and there is 8 people made successful this business with all the skills needed. We, for the investors, now we are raising $400K, and the round will be open until November. But I want to talk with these engineers in the audience. Let's talk and let's reduce your costs.
And now let's ask questions, so judges.
Hi, great pitch, and actually very clear value proposition also, even I understood what you do. And also very interesting pricing model where you charge 10% from the, as a success fee from the amount saved. Mm-hmm. So how you calculate this saved amount, in first month, the second, or after 12 months, is it like so straightforward, easy to calculate, the amount?
Every month will be different, obviously, because it's a success fee. We are actually saving 62% of the cost, but we pass 50% for the customer, and around 10% is what we get as a success fee. It's a very good deal.
True.
Okay, my question, how you reach client and how you sell, and what is the customer acquisition cost for each of the
Our
segment?
customer acquisition costs still are undiscovered. We are now going through founder network, because I have a strong network, working a lot of years in this business, and later we are going doing direct sales and doing digital marketing and well, one by one, acquiring these customers. We expect our customer acquisition cost will be around $400.
Okay, thank you.
The best customer profile, the lowest hanging fruit, and overall the customer profile.
Well, idea persona is like customers that spend at least 10,000 of recurrent cost in Amazon Web Service until 200. This is most the people that we want to target. Kind of companies, well, it's infrastructure, industry agnostic, but we are going to look more in people doing SaaS and doing digital business that have like heavy workloads in the cloud.
Thank you. This is it. Yes, the time have ended. So thank you for your pitch. And number 10 is Dropla Tech, so please welcome with a big round of applause. This is the last pitch.
Thank you. Greetings, everybody. Thank you for your undivided attention. Landmines. Such a distant concept for those who never faced the atrocities of war or its remnants. You cannot use your land. Your children run away laughing. You spend the next 2 hours in fear. Fear of lost limbs. And fear is the mind killer that impales the spirits of nearly 2 million people daily. This is an everyday reality for them, and even more around the world. And to give you a good perspective on why this area needs rapid modernization, only 1% of all potentially contaminated land has been cleared by united efforts in 2 years. This is not a competition. This is call to arms, and Dropla Tech accepts by creating a remote sensing complex for landmine detection and augmented mapping, a complex that's capable of scanning 50 hectares per day. And this is achievable by utilizing a swarm of UAVs equipped with various remote sensing technologies. Then, by applying advanced signal processing and artificial intelligence, we are able to construct highly geo-referenced digital surface map, where threats are not only localized, what's called an area reduction, but categorized as well. And if everything is done correctly, in the Middle West scenario, and when the substantial capital is deployed at the right stages in the right time, there is an opportunity for 100 million euros revenue stream within 5 years of operational time frame. Most of it comes from governmental contracts, landmine detection as a service, hardware sales, and cloud computing licenses. And we are the strong team that can carry it. We hold a strong motive inside our spirits. We have a provable record of government relation activities, with strong support from Denmark, and most importantly, I'm able to identify the most brilliant minds that are on the tip of the scientific spear in the relevant technologies, and I made them commit to Dropla. People from this slide carry vast experience in geophysics, UAV engineering, UAV mission planning, space engineering. We even have one gentleman who helped South Korean army to develop a complex like this based on ground-penetrating radar. So we are locked and loaded, and to move this thing, I stand here today before you asking for 3,025,000 euros at a 3 million valuation to perform the battle. To perform the demonstration at the end of March. The bottom line is, where is the bottom line?
There's no bottom line.
Okay. Yeah.
Yeah, the time has ended. So anyway, a round of applause for you.
So the bottom line is, Europe is militarizing up, and by investing into Dropla, you invest into dual-use company, which will be the carrier of the capital for the following decade. But when you invest in Dropla, you save lives instead of taking them. And that's important.
Thank you. Thank you, judges.
Thank
you. This is time for questions.
Sorry for taking 50 seconds of your time.
Okay, so thank you. Thank you. Very inspiring pitch. My question is, who owns technology?
Dropla Tech, a company incorporated in Denmark.
Okay, so you own?
Yes.
Okay, so where this technology could be used elsewhere?
There are a lot of applications, but the problem that we are solving is extremely specific. Because in order to give this complex a localization and categorization capabilities, we need to train it on vast amounts of labeled data sets. That means that our only focus should be getting those labeled data sets in the near future and training the system. In the future, of course, there is a substantial near geophysics applications that can be used in sustainability and energy. That's the first things that comes to mind.
Okay, thank you.
How is the process of the detection of the minds happening? So what do you use? It's computer vision, it's some sorts of like signals and so on. And can you detect which kind of landmine a bomb is there?
As I just said, to detect which kind of mine, you need to get this training data sets.
Yeah, that I understand, but what do you use to see the bombs?
Different sensing modalities. You can use optics, you can use hyperspectral imaging, you can use near-infrared thermal imaging.
And what do you use?
All six, and that's the only idea. It's sensor fusion. That is the innovation that I'm stand here for, because every type of technology has limitations in environmental conditions. So it's about fusing.
Thank you.
Thank you.
Thank you for your pitch.
Yeah, thank
All
you.
these applauses is for you. Thank you. So the time has ended, and judges, I will say good luck for you. You have to choose the winners. And while the judges will be choosing our winners, so I have to wrap it up. So today, Startup Fair brought us all together for the 11th time. All these years, it has been organized by the Startup Lithuania team of the innovation agency Lithuania. Roberta Rudokienė, the head of the team, will give us incredible facts about how Startup Fair has changed and grown over these 11 years. I will let you know on a little secret that Roberta has some hot news. So please welcome head of Startup Lithuania at Innovation Agency Lithuania, Roberta Rudokienė.
Hello again, and while the jury is counting the scores and we are waiting for the winners to be announced, I would like to make a short overview of the Startup Fair and how it grew along together with the ecosystem. Startup Fair started in 2013 as a part of Login. 20 startups pitched at Pitch Challenge, and 4 finalists, DragDis, TrackDuck, TransferGo, and DevMotion. And it was great to see this morning the founder of TransferGo here on stage and to hear what they achieved during the following years. And I found the numbers somewhere in the internet that at the end of 2020, there were counted 122 startups in Lithuania. And in 2013, they secured 19 investments amounting to 16 million euros. And then next 3 years, 2014 until 2016, Startup Fair was part of Login. As you can see, the news feed. In 2014, it was massive. 24 VC funds attended the event, 7 accelerators, 54 startups. And in 2017, new format was chosen. The Startup Fair was still a part of Login, but was organized in a separate venue at Vilnius Tech Park, while Login was taking place in the city. 55 startups, 70 investors and speakers, and the ecosystem already counted more than 300 startups. And the value of the ecosystem of that at that year is about 600 million euros. In 2018, we thought that, well, the ecosystem is pretty big and it needs like a normal big event separate from Login. And in 2018, it was separated and we hosted separate event dedicated only for the startup ecosystem, which was held at Vilnius Tech Park, but had 2 stages, a separate area for meetings, and you can see that almost 1,500 attendees attended the event during 2 days. And the ecosystem grew, and more than 520 startups were counted in that year, and we experienced really big investment jump in 2018 comparing with the previous years. So that really looked like the moment to have, the event dedicated for startups. In 2019, we moved to a new venue. We moved to Kablis indoor. And the ecosystem grew very, very big. From 500 startups in the database, we gathered and found 1,000 startups in Lithuania, and even the first unicorn was born. And the event was really great and successful, and then the COVID started. Oh, it's still the picture of 2019, and it was the year when we also started this panel or founders talks on stage, and which we repeated this morning, and Daumantas was also here. And in 2020, COVID started, and we had to move the event online, so it was fully online, and went throughout the whole year. We hosted 20 online seminars, discussions, and workshops, which had 115,000 views. And when the quarantine was a little bit released, it was possible to organize a live pitch battle. So we merged again together with Login for a live pitch battle, and we had the pitch battle during the Login. And we received around 70 applications. So this, quarantine time and going online gave us possibility to attract more foreign startups to our pitch battle. So we attracted applications from 17 countries, and 33 startups pitch either live or online. In 2021, COVID and quarantine again. Startup Fair was the first event in Lithuania, which happened after the quarantine regulations were a little bit, and restrictions a little bit relieved. We still had to wear masks. There were big restrictions and limitations for the number of people that could sit together in one place. That's why we moved again back to the tech park in order to have event safer in an open space. We separated the areas for possibility, to get bigger audience in like 2 separate events, for the pitch battle and for the startup fair. And it was really a record year for Lithuanian startup ecosystem. 66 deals were made at that time, and Lithuanian startups raised about 430 million euros in 2021. The next year, no restrictions, no limitations. We came fully back here to Kablis. We had more than 1,500 attendees, more than 200 startups, 60 investors, 44 pitch battle participants, and attendees from 25 different countries. And the ecosystem was still growing, it was the second record year when we talk about the investment. The second unicorn was born. And we come up to this year. As you may have seen, we don't know the number of attendees yet. We are still counting, and new people are coming throughout the whole day. But as I mentioned in the morning, about 4,000 tickets were taken online. About 400 investors registered for the event, and 300 investors participated yesterday at Investor Camp. We received more than 100 applications, 40 startups pitched. You've seen already 10 finalists. And if to talk about the ecosystem and how it grew throughout all those years, so we are really proud that right now, at this moment, Lithuania ranks number 2nd, or one of the best, fastest growing ecosystem in Central CEE, Central Eastern Europe. We count more than 1,000 startups in Lithuania. We have 3 unicorns, active local investors, more and more interest from international investors. Startups Association Unicorns Lithuania is very actively working with startups. So what's next? What we await for the next year? So for the 11 years, main startups event in Lithuania was organized by the governmental agency, financed by the from the budget of our country. And as we see that ecosystem grew a lot, we believe that it's time, to move on, and it's time maybe to give this event to the community, and we hope that it's time for you, for the ecosystem, to take over this event and grow it even more bigger. And that's why we are planning to announce a special tender for those who would like to take this event and grow it further. And we believe that probably, I really hope that next year this event will be much more bigger, more international, maybe even with a new name and new dates. And let's see, maybe we already have the winners. Thank you.
Thank you, Roberta. So this is the moment, but first of all, I would like to say a big thank you for main partners. So, Unicorns Lithuania, Vilnius Tech Fusion, and Karma Ventures. We have partners as well, Lithuanian Private Equity and Venture Capital Association, Litban, Catalysta Ventures, Invest Lithuania, Visori Information Technology Park, Baltic Sandbox, Cloudvisor, First Pick, Startup Terrace Taiwan, Aquile, Walk 15, Trinity Urex, Startup Wise Guys, and Solsay. So let's make a big round of applause for main partners and partners. This is a really, really important part. And now, let's talk about prizes and winners. So we have some special prizes for selected startups. So first one is 5,000 USD worth Amazon Web Services credits by Cloudvisor. So the prize will be given by Cloudvisor CEO Julius Gregorauskas. So Julius, we are waiting for you on stage. If Julius is not here now, yeah, you're here, yes. So, do you know the winner? You can say, okay.
Yeah, first of all, just let me use this chance to say thank you to Startup Lithuania for organizing this great event. I hope that everybody agrees that each year Startup Fair is getting better and better, bigger and bigger, and this is, I guess, compliments to the great job you're doing. And getting back to the prize, so as we're a cloud computing company, we were looking specifically for startup that would be tech intense and would benefit most from getting some free AWS cloud. And after long consideration, we've decided that startup is Axiology.
Yes, we're waiting for you on stage. Please come and enjoy the round of applauses. This is for you. A very important part. Let's make a picture. This is our event photographer, so some smiles for that. Congratulations. Thank you. So, special prize number 2, opportunity to receive, yes, thank you, 70,000 euro investment plus acceleration program by First Pick. So, the prize will be given by First Pick partner Dmitry Sosnov.
I will also make a small intrigue, so you will try to bet and also think who is the winner. So some deals are happening because you hear a good pitch, but some deals happening because you see the team behind that pitch, if not pitching, like they don't have traction or something, if there are even founders on the fringe, so some will still make some investment decisions. So this team is led by have 2 women co-founders in the team, super tech product people. This team operates in digital assets field and make the whole industry more compliant. And this is a niche, not so obvious, as some products, which we see every day. So this team is Mika Pass.
Mika Pass. You are the winner of this special prize.
Gintarė, so Justai, Tatiana, happy to work with you on Accelerator. So, good luck.
And now a moment, photographs, and a big cheer. Thank you and congratulations. Special prize number 3, up to 125,000 euro investment into selected team by Baltic Sandbox Ventures, and it will be given by Baltic Sandbox General Partner Sandra Goldbreich.
Hello again. So we already had like what 3 startups from our portfolio in the finals, sorry, and we decided that we need to have a 4th one from our portfolio in the finals. So our special prize goes to Axiology.
Yes, a moment, photographs and from memory. Congratulations! You know your way now. Enjoy it, yeah? You have won 2 prizes. Special prize number 4. 150,000 euro investment plus accelerator program by Startup Wise Guys. So the prize will be given by Startup Wise Guys partner and head of portfolio, Alexandra Balkova.
It's too high. It's very important. Thank you so much. I'm 164 centimeters. It's very important for a startup to choose the right investor, but it's also important for an investor to choose the right startup, vice versa. There were a lot of great teams in the finals, and I think one of the main things, one of the important things is to find the one that you feel that would be a good match and you feel you actually can help. So I think from our side, I'm sending the love and my heart to our existing portfolio company, which is not the winner of the prize, to Vocal Image, because that's a heart from me. But the prize goes to Glassify.
Where are the winners?
Glassity, sorry, not Glassy, Glassity, yay! Yay,
yes,
yay.
A big round of applause. This is it, you made it. And let's capture this very important moment. Congratulations. Thank you. So we reached the most important part, and I would like to invite back here on stage Roberta Rudokiana. We need you here. So you have a moment to say whatever you want, actually.
Well, it was really great day. I think I've been enough on this stage, so I'll be very short and quick. So the winner of the pitch battle 2023 is Vocal Image.
So the winner is Vocal Image. Can you believe it? So the winner gets 3 prizes. Flash program in Taiwan by Startup Terrace Taiwan. So the prize is given, and please welcome Startup Terrace Taiwan Chief of International Affairs, Miss Anita Chen. You're not going anywhere. No, you're enjoying the moment. Yes, please stand in the middle. So Anita, congratulations from you. The second prize is 1-year membership at the Association Unicorns Lithuania. Please, the prize is given by Unicorns Lithuania CEO Inga Langaitė. Last but not least, 7,000 euro check for workshop and playbook plus 1 month of weekly consultation by Salt Sales. So please welcome CEO of Salt Sales, Matas Pavlauskas. So once again, the winner is Vocal Image, and let's capture this moment, and we are making a big round of applause for him. Congratulations. Now you can say thank you if you want. Now you can say thank you if you want.
Thank you, everybody. 50% discount on Vocal Image until the end of the month.
Congratulations. So I'm saying congratulations to all the pitchers and for everyone who came today. It was a pleasure to be with you. Don't forget the after party. It's at 9 p.m. here. So please enjoy yourself, connect and communicate.